Hi, Chini. Hi. Hi, Sriharsha. Hello. Is everything fine, ma? My audio and video was clarity. Hi, Funny. Good evening. Good evening. Dhanush. No problem. Okay, guys. Thank you for your so much response. So we can wait for 5 minutes. Let them join because we have told the correct time is 6 o'clock. So we can wait for 5 minutes to start the session. So this section is very useful for your examination. Directly by listening this section, you can go to the examination. Only you have to refer the MCQs. So already, so okay. Thank you. Great fan of your work. Good evening. How did you write the previous examinations? So forget the previous examinations, what you have done, because still it is not in our hands. So focus on the financial accountings. So if you get the 80 plus in this examination, so easily you can overcome from your group also. So focus on this section. So out of these sections, guarantee you are going to get 60 plus marks. So trust me, till now you have trust on me. For all the revision series you have seen, and I have got the great response for your comment section also. Thank you so much. Thank you. Okay, don't scare, leave the fear before going to the examination. So without fear only we can write the examination carefully. Which MCQs, ma? I will share the, I have already shared the PDF in the Shikharatutorials main channel. You can get there the MCQs regarding to the financial accounting PDF, or you can go to the website www.shikharatutorials.in. You can get all the sources which are available related to the financial accounting. Go to the free resources, you can get there itself. Pending topics in an uploading of financial revision classes series. Okay, no need of those series right now. Participate, this class is sufficient. If you are belongs to the next attempt, I will upload the remaining classes also, no problem. Okay, I will cover the standards, I will cover the branch accounting, I will cover the insurance claims, single entry, NPO. So all the topics I will cover. So 100% English, yes. Sir, Shikra is meant for 100% English. Why are asking once again, ma? So 100% English or not, sir? 100% English. So if you observe the Shikra tutorials, all the faculty will teach in 100% English. No doubt about it. Okay guys, without any late, we can start the section. So I am having a great response. Nearly 50 members are watching this section. So whatever the watching things, I am not going to see no more. So we can focus on the tomorrow's exam. So if you watch how many marks I can get in tomorrow's exam, sir, definitely you are going to get 60 plus marks if you watch in this if you participate in this revision class. So tomorrow morning, if you cover the MCQs which we have released of 4 hours, so you can get a 30 out of 30 marks from there also. So nearly you will get a 70 plus marks. So is sufficient for the financial accounting perspective. So why the students are not getting 75 plus means, because there is only the simple reason in the financial accounting subject, more number of students are focusing on big questions. So and they are losing the time there itself. So we are going to target the small questions, and I'm not going to say to leave the partnership and to leave the single entry also. I will explain those what are the important topics directly. We can see the main points. Okay guys, as you all know already, we are having the analysis. Right now I am going to say the expected topic which will come tomorrow. So if you see the depreciation and the BRS, we are going to get in tomorrow exam definitely BRS. So right there itself, which is not getting means, okay, now you can ask me in tomorrow ma. Okay, na BRS is going to get in the tomorrow's paper, and rectification of errors or capital and revenue. I cannot say in these both topics. So you may get the rectification of errors or you may get the capital and revenue also, no problem. And next one, when coming to the bills of exchange or consignment, definitely the bills of exchange coming to the picture of tomorrow's morning. When come to the hire purchase or leasing, so up to now the leasing one time only they asked us. So for that reason, so mostly first preference they will give the bill of exchange. If not, sorry guys, first preference they will give the hire purchase. If not the leasing also, I will explain the leasing. What are the points you need to remember? You have to remember. And single entry definitely are going to the ask in tomorrow morning. So in tomorrow afternoon section, definitely the 14 marks. And partnership I will discuss the basics, and branch I will cover insurance claims and standards. So let us start. As you all know, my name is Bhanu. I am starting with the branch. B for Bhanu, B for branch. So most of the people are asking me to cover the branch accounting. For that reason I am starting with the branch accounts. So please give me a second. Okay sir, no problem. So this is a topic of accounting for branches, including of foreign branch. So till now they are not focusing on the foreign branch and all the things. So we are going to see the normal branches. So what is the meaning of branch? You all know. I am not going to discuss the meaning all the things. So when coming to the accounting point of view, we are having the two types of branches: domestic branch and the foreign branch. Okay, now guys. In the case of domestic branches, we are having the two types of branches: dependent branch and independent branch. So I think you all know about the dependent branch. What is the meaning of dependent branch ma? So dependent branch means books of accounts will be maintained by the head office, and independent branch means books of accounts will be maintained by the branch itself, but they are focusing on the dependent branch. So what is our main target in the accounts? In any business we have to calculate the profit or loss. For that reason, in order to calculate the profit or loss from the branch, we are having the 4 methods ma. First one is called as debtors method, stock and debtors method, final accounts method, and wholesale price method. I think you all know the examiner is most focusing on debtors method or stock and debtors method. In one attempt they are asking about the just a second boys. Okay naga? So in one of the attempt he is asking about stock and debtors method, and in another attempt he is going to ask the debtors method. Okay na guys, so in the previous examination he has asked about the stock and debtors method, and definitely in this examination, in this exam they will ask about which method ma? Debtors method, simple method. So just give me 5 minutes, you will get the more clarity in the form of debtors method. So in the debtors method, we have to prepare one account called as branch account. So the most important, branch account and goods sent to branch account. So in the branch account, so simply first we are going to start with the assets opening balance. I think you all know asset is having a debit balance. The opening balance will be on the debit side and the closing balance will be on the credit side. So first we will write the opening balance of assets and closing balance of the assets. So normally in our questions they are not asking about the liabilities. If they ask about the liabilities, the opening balance of liabilities will be on the credit side and the closing balance of liabilities will be on the debit side. And then after, two goods sent to branch. Why we have recorded means because the goods are going to received by the branch, so branch is the receiver, so branch account debited to goods into branch. So simply remember two goods into branch. In the case of returns if branch returned any goods in the case of defective items, so what we need to record by goods into branch, okay na, returns. So two goods into branch at the time of head office sending goods to the branch, and buy goods into branch at the time of branch returning goods to the head office. And if you see the scenario, sometimes the head office will send the cash to the branch for the purpose of expenses incurred by the branch. So rent, salary and sundry expenses. We should not write to salary to rent because it is a limited accounting. If you write the to rent to salaries means it is a normal accounting. For that reason, so instead of writing the expenses individually, we are writing combinedly, call it as to cash or bank. And then after, who will make the sales the branch will make the sale and will remit all the cash balance to the head office by the name called as what by cash or bank. Generally they will give money received from the debtors and the cash sales. Sometimes there may be a payment to the creditors. At that point of time we have to reduce the payment to the creditors. What we need to do we have to reduce the payment to the creditors. So please remember, amount received from debtors plus cash sales minus amount paid to the creditors. Okay na guys, but amount paid to the creditors is not there in the question, but if the examiner may ask means what you need to do, minus. So this is the overall scenario, and whatever the balance we will get, if it is a debit balance means it is called as a loss, and if it is a credit balance means it is called as a profit, will be transferred to general P&L account. So here instead of profit, what we need to write to general P&L account, in bracket you can write the profit, by general P&L account, in bracket you can write the loss. Only one will get into the picture, and this is the scenario So normally, okay na, the opening balance of assets on debit side and closing on the credit side, the opening balance of liabilities on the credit side and closing on the debit side. Goods sent to branch means two goods sent to branch, returns means by goods sent to branch. And then after what if branch, if head office transfer cash to the branch means to cash or bank. If branch transfer cash to the head office means by cash or bank, but only things we need to consider is what to money received from debtors and cash sales. In case they have given the creditors payment means we have to reduce the creditors payment. So next, the main important note point in the debtors method is called as, so whatever the transactions we are going to record in the branch account means the transaction happening between the branch and head office. If the transaction is happening within the branch and outside person, but which transactions we will consider sir means, but if any transaction happen between the branch and the third party, if it is related to the cash, then only we will consider, otherwise we will not consider. So cash paid to the head office to the branch, so I think you know, I am not going to explain this all things. So cash remitted by branch to the head office. What is the entry So we have only seen, so by cash or bank, so cash or bank account debited to branch. So here the collections and the cash sales only we should consider, but we should not consider what bad debts, discount allowed and goods returned by the debtor we should not consider. Why we should not consider because these are the transactions happen between whom? Happen between the branch and the debtor, but involvement of cash is there or not there There is no involvement of cash. For that reason we are not going to record in the branch account. But if you see the collection from debtors, yes, the collection from debtors is also happening between what branch and debtors only, but it is having involvement of cash. For that reason we are considering. So if there is no involvement of cash means we should not consider, will be recorded in the debtors account or creditors account, like that. So according to that, but if any transaction happen between the branch and the third party involving the cash means will be coming to the picture of the branch. So remember these points is sufficient for the examination. So I think you know the memorandum debtors account, nothing but debtors account only ma. So roughly we are going to prepare. For that reason they are going to call it as what ma? Memorandum debtors account. The opening balance will be on the debit side and the closing balance will be on the credit side. We all know because debtor is an asset. So what is the credit sales entry ma? Debtor account debited to credit sales. For that reason to credit sales, and remaining all the things will be recorded on which side ma? Will be recorded on the credit side. Buy bad debts, discount allowed, sales returns, collection from debtors by cash or bank. If in any case bills receivable is there na, if it is a dishonor means which side we need to get ma? We have to write on by bills receivable. If you bills receivable accepted by the debtor means what ma? So by bills receivable. Dishonor means to bills receivable ma. So these are the things you need to remember is sufficient. I am going to final conclusion. The transaction between the branch and head office only will be recorded in the branch. So the transaction between the branch and outsider will be recorded only there is involvement of cash. And cash sales, yes, we'll consider. Cash purchase ma, we have to reduce from the remittance, and cash expenses also we have to reduce from the remittance, and collection from debtors we have to add, and payment to creditors we have to minus. But most of the cases, what are the two things will come into the picture ma? Only cash sales and collection from debtors only will come into the picture, and remaining transactions they will not ask in the question ma. If they asked means please remember the cash expenses means outflow na inflow na ma? Outflow we have to reduce, and cash purchase is also outflow we have to reduce, and nothing but what ma? Payment made to the creditors is also outflow we have to reduce. So please remember. Next one, goods sent to branch account. It is a simple account ma. So at the time of goods sending to the head office to the branch, what we have recorded ma? Two goods sent to branch na. Here we will record on the credit side by branch account. In the case of returns what ma? To branch account. So remember the balancing figure will be transferred to what ma? Trading account or the purchases. So remember this trading account. So the balancing figure will not transfer to the P&L account ma, will be transferred to the trading account. So this is the overall concept about what ma? Debtors method. And there is another point is called as what ma? So in the case of invoice price. So if any goods sending on the invoice price, so goods sent to the branch will be on invoice price means automatically what ma? Returns will be also on invoice price. And if any purchase made on the invoice price means the closing stock also will be on which price ma? Invoice price. For that reason the following four activities will be available on which price ma? Invoice price. So invoice price means nothing but what ma? Cost plus profit. This profit we should not record because all the four things we have to show at which price ma? Cost price, but now they are showing at which price ma? Invoice price. That means the profit portion we have to eliminate. What is the meaning of eliminate ma? We have to reduce from concerned point of view. So for that reason, before only we have shown na. So in the branch account, which side we have recorded ma? Goods into branch, debit side. Two goods into branch. So will be at which price ma? Invoice price. We have to reduce the profit portion. Reduce the profit portion. Debit reduces means which side we need to record ma? Credit side. So what we need to know? So we need to write by goods into branch with respect to only the profit portion. Okay na guys? If the returns will be available on which price ma? Invoice price only. What we need to record ma? Buy goods into branch at which price ma? Invoice price. The invoice price portion we are having what ma? Profit portion will be eliminated and will be recorded on which side ma? Debit side. And also you all know the opening stock asset or not ma? Yes, opening balance of asset will be on the debit side and closing balance of asset will be on the credit side. Nothing but opening stock at which price ma? Invoice price. But normally we need to disclose the stock at which price ma? Cost price. For that reason whatever the profit portion available in the opening stock will be transferred to which side ma? Credit side. But we should not write by opening stock. We have to write the by stock reserve. But goods sent to the branch, buy goods sent to branch. Buy goods sent to branch, two goods sent to branch only. But when coming to the what ma? When coming to the opening stock, we have to write what ma? We have to write the stock reserve. And closing stock profit also what we need to write ma? To stock reserve. For the closing stock, to stock reserve. For the opening stock, by stock reserve. You will get more clarity while solving the question. So I am directly opening the question. Can you see the page number? Okay. The opening branch 249. Sorry guys, wait a second. Okay sir, I'm directly discussing the third question. So at invoice price question. So please follow me, you will get a more clarity ma. So prepare the branch account in the books of head office from the following particulars. So definitely they in the tomorrow's exam is they will going to ask this question itself ma. Okay na. So please be more focused. The branch account in the books of head office. So branch account in the books of head office means dependent branches or independent branches ma. Dependent branches from the following particulars for the year ended 31st March 2022, assuming that the head office is good, head office sold goods at a cost plus 25%. At goods at a cost plus 25% ma, there is a plus symbol is missing. So on cost 25 means nothing but, I think you know all know, 25% how we can write ma, 25 divided by 100, that is equal to 1 by 4 on cost means on selling price is how much ma, 1 by 5. So see ma, the stock on 1/4/2021 means that is called as what ma, opening stock, will be available at which price ma, is available at invoice price. So how much ma, what is the invoice price? 12,500. The stock is an asset, the opening balance will be recorded which side ma, debit side. So to balance brought down, nothing but for all the assets. So first stock how much we have recorded ma, 12,500. And see the another asset what we are having, debtors, and this is not a purchase, this is what ma, petty cash. So in the exam they will give the clarity, no problem. So all the three things are what ma, assets having which balance ma, opening balances. So opening balance will be at which side ma, debit side. So debtors I have recorded and petty cash. But now if you see the opening stock is available at which price ma, invoice price na. Normally at which price we have to write, on the price of cost, but it is now located at invoice price. We have to reduce what ma, profit portion. We know already previously only we have discussed. On cost how much ma, 1 by 4 means on selling price how much ma, 1 by 5. Can you find out the profit portion ma? So 12,500 into 1 by 5, that is equal to how much ma? That is equal to 2,500. So by stock reserve we should not write by opening stock. Okay na. So opening stock, in order to reduce the debit we are recording on the credit side. And next, what is the next point we have told you? Goods sent to branch. Yes ma, here also goods sent to branch is available of rupees how much ma, 40,000. At which price ma, invoice price. So invoice price, nothing but invoice price only we will record, no problem. So which side we need to record ma, debit side. Two goods sent to branch, how much ma, 40,000. Which price it is locating? Invoice price. Normally it should be located at which price ma, cost. That means what we need to reduce? We need to reduce the profit portion. So while reducing the profit portion, so we need to transfer the debit side amount to which side ma, credit side. What we need to write ma, by goods sent to branch, the loading portion. How to calculate ma, 40,000 into 1 by 5 or 1 by 4 1 by 5, that is equal to how much ma, 8,000 we are going to get. I think you understand the clear picture. And next one, cash sales ma. So cash sales will be considered at the time of remittance na, previously only I have told you. And next one, collection from debtors. So if you add the both the things, how much we are getting ma, 42,000. These points will be considered at the time of what ma, remittance. We should not consider the credit sales, we have to consider only the cash sales plus collection from debtors. So totally we have to record. Sales should be at which price? Invoice price only. You should not disclose at a cost ma, because sales means including profit. For that reason, by cash or bank, so we have to add both the things. So and we will get what ma, 42,000. So till now we have completed the this side. And next come to this side ma. Bad debts we should consider we should not consider ma. The bad debts is happening between the branch and debtors and no involvement of cash. For that reason we should not consider this one, will be recorded at debtors account. I think we have to find out the closing balance of debtors. They have given the closing balance of debtors, so no need to create the debtors account also. Okay na. If they have not given means we have to create what ma, debtors account, and we need to find out the closing closing balance of the debtor. And next, allowances to customers. So this is also forming part of what ma? Nothing but debtors only, because happening between the debtor and the branch, so there is no involvement of cash, we should not consider for the debtor branch account. And next one, return inward. What is the meaning of return inward ma? Sales returns. Once again we should not consider, no involvement of cash happening between the debtor and the branch. And next, charges sent to the bank. So nothing but we have sent amount to the branch. How much ma? In the form of what are the expenditure they are incurring? They are incurring the rates and taxes, salaries and expenses, miscellaneous expenses. What is the total expenses they are incurring ma? 12,000. So 12,000 expenditure we should not write na. What we need to write ma? If you write the expenditure name, again you have to open the expenditures account. For that reason normally we have to write to cash or bank. But here the bank they have mentioned na. For that reason what we need to write ma? To bank. So will be recorded debit side to bank, that is equal to how much ma? 12,000 rupees. Next one ma, stock is available at which price ma? Available at invoice price, but normally we should disclose at which price ma? Will be disclosed at the cost. So these three are what ma? Closing balance of assets na. So normally we have discussed the closing balance of assets will be recorded which side ma? Credit side. So we will discuss by balance carried on, stock, debtors and petty cash will be the downward ma. So we have recorded all the three values, but 15,000 is available at which value ma? Will be available at invoice value, but we should not disclose the invoice value, or we should disclose the cost ma. We should disclose the cost. So now whatever the profit portion available in the 15,000, how we can find out ma? 15,000 into 1 by 5, that is equal to how much ma? 3,000 rupees. What we need to write ma? Stock reserve. Nothing but 2 stock reserve or by stock reserve ma? 2 stock reserve. And there is a returns also. So returns they have given at which price ma? Cost price, but we have to convert into the invoice price, and we should record on buy goods sent to branch, and on that loading portion will be recorded what ma? 2 goods sent to branch. Okay na? Please remember, or if directly if you write the cost price on the credit side also, no problem. So the balance we have got what ma? 3,000 should be transferred to which account ma? Should be transferred to the general P&L account. If you create the goods sent to branch account, the balancing figure will be transferred to which account ma? Trading account. So remember these points is sufficient for tomorrow's exam. So this is called as which ma? Branch. Which method? Debtors method. Already in the previous exam they asked the stock and debtors method. For that reason they will not ask the stock and debtors method, they will ask only the debtors method. So some more points if you want we can see means sir. So simply if you are not understanding means revise once again, you will get, no problem. If they suppose if they are asking about the stock and debtors means we have to open these accounts ma. So they will ask you have to prepare the branch stock account, you have to prepare the branch adjustment account, branch debtor account, branch cash account, like that. So if you want to see my book, you can understand what are the accounts we need to prepare and what are the opening balance and all the things. So these are the familiar point. We will come into the which chapter ma? Branch chapter. If you refer, these points are sufficient for you. Okay na? For you, if you want, I will explain the branch stock account also, no problem. Please wait for 3 minutes, it will be completed ma. So in the branch stock account, it is like an asset ma. So asset means debit balance. If anything record on the debit side means it will be increases. What it will be ma? Increases. Credit side means it will be decreases. In what are the situation the stock value will be increases ma? If anything received by the branch, the stock value will be increases. If anything not sent out to the branch, the stock value will be decreases. The opening balance, nothing but opening stock will be on the debit side and closing stock will be on the credit side. Opening balance, opening stock and closing stock. And next one ma, goods sent to the branch na, received by the branch or not received by the branch ma? Received by the branch. For that reason the stock value will be increases. And whatever the stock available in our hands, we can sell. We can sell in the form of cash sales or we can sell in the form of credit sales. If we sell in the form of cash sales, what we need to record ma? So the stock value will be decreases because goods comes in or goes out ma. Goods goes out from the branch. For that reason what we need to write ma? Cash na by branch cash. Okay na? Credit sale means debtors we should not write, by branch debtors. Okay na? The returns means once again the stock is going out from the branch to the head office. For that reason we are recording these 3 items on which side ma? Credit side. Okay na? And again, whatever the debtors is there now, debtors may also return to the branch. At that point of time, the sales returns will be recorded on the debit side. The respective postings you have to do in the stock and in the branch stock account, we have to post. Debit means credit, credit means debit. So like that. So if you try to understand the branch stock account, remaining all the things will be easy. Whatever the balance available in the branch stock account will be transferred to which account ma? Branch adjustment. Here the branch stock account we always prepare at which price ma? Invoice price. So the opening stock on this, whatever the things except the sales, all the things should be at which price ma? Cost price, but they are available on which price ma? Invoice price. The loading we have to reduce now. In the previous method we have reduced the loading in the same account, but now we have to reduce in which account ma? We have to reduce and transfer to the which account ma? Branch adjustment account. So this is the basic knowledge, you can understand, no problem. So this is overall picture about the branch accounts. So I think if you understand means sufficient. Please try to learn only the branch debtors method before going to the examinations. Once see my handwritten will be available in the shikharatutorials website, and go and get there itself. Okay na guys. So next I am going to target the most important chapter. So in the branch, what is the combo ma? Insurance claims. So I am going to start with the insurance claims ma. So just a second, I will open. Now I am going to target the insurance claims. Till now we have discussed the branch, so only debtors method is sufficient for the examination point of view. So I have clearly discussed. Now come to the insurance claim. I think you all know we have to think from whose point of view ma? We have to think from the, not from the insurance company point of view. Our company means we have taken a insurance policy. Which insurance policy we will take ma? We will take the fire insurance policy. So if you see the so many insurance policies will be there, life insurance and general insurance. In the general insurance also we are having the fire insurance, marine insurance and other insurance. But here in this chapter they only covering what ma? Fire insurance. So what are the two aspects ma? Accounting for insurance and calculation. Just here the calculation they are asking. This accounting will be there in the paper number 10, you all know. And next one ma. So here we are, who is the person who is going to take the insurance is called as a insured. The person who is bearing the risk is called as what ma? Insurer. That means the company, insurance company is called as what ma? Insurer. Insurance company is called as a insurer, and the company who is going to take the policy is called as what ma? Insure. Remember these 2 points. So directly I am jumping to the loss of stock ma. So what we need to do ma? Loss of stock means we have to identify the closing stock as a missing figure. Current year closing stock we have to identify with the help of what ma? Previous year gross profit percentage. Okay na. In order to calculate the previous year gross profit percentage, what we need to do ma? We have to prepare what ma? Trading account. If directly they are giving the gross profit percentage of the previous year means we can take and we can apply on the current year sales, no problem. See this one. Step number 1. So just a second ma. So steps for computation of loss of stock. First one, calculation of gross profit ratio. How can we find out the gross profit percentage ma? By way of gross profit divided by sales into 100. So we will get this gross profit percentage by preparing the previous year trading account. So preparation of previous year trading account, or sometimes they will give 2 or more gross profit percentage. At that point of time we have to do the average. I think you know how to do the average ma. So sum of observations divided by number of observations. For example, 5% in the previous year, 5% in that previous year, and 5% in that previous year. If you do the average means what we will get ma? We will get what ma? 5 plus 5 plus 5, how much ma? 15 by 3, that is equal to again 5 only we are going to get. So this is called as average gross profit percentage. They will ask sometime also. So next, what we need to identify ma? We need to identify the closing stock as on the date of fire. For that reason, what we need to prepare ma? We need to prepare the memorandum trading account. So I think you all know all the things. So here the missing figure is called as what ma? Closing stock. So and then we have to calculate what ma? Loss of stock. What is the formula for the loss of stock ma? Closing stock as on the date of fire minus salvage value plus firefighting expenses. Salvage value is nothing but what ma? Whatever the stock we have left it off after the fire accident is called as what ma? Salvage value. That means nothing but closing stock after the fire accident. So for this they are not going to give the amount because this value we can realize by way of selling in the outside market. For that reason they are not going to bear firefighting expenses. Why they will give ma? Because if they are not giving the firefighting expenses means we will simply sit and we will watch the fire accident. The loss will be more or less ma? The loss will be more. For that reason they will compensate the firefighting expenses, they will not compensate the salvage value. So remember the formula: closing stock as on the date of fire minus salvage value plus firefighting expenses. What is the last step ma? We have to compare the policy amount with the closing stock. We should not compare with the loss of stock. If the policy amount is greater than or equal to the closing stock means whatever they will compensate ma, they will compensate the loss of stock. This is called as over insurance. Okay na? Next one, what is the meaning of under insurance ma? If the policy amount is less than closing stock, it is the situation, call it as what ma? Under insurance. At that point of time of under insurance, what we will get ma? Average class formula. What is the average class ma? Policy value into loss of stock divided by closing stock, because they will get the policy value is equal to the closing stock ma. Whatever the closing stock available in our hand, for that reason for the closing stock only we will get what ma? Policy value. But here they will compensate what ma? Loss of stock na. For loss of stock how much? Then that means what is the calculation ma we have to do? So policy value into loss of stock divided by closing stock. So like that also we can remember, or you can remember the formula. So policy value into loss of stock divided by closing stock. So these are the steps. But what is the step number 1 ma? Trading account of previous year in order to find out the closing stock. In order to find out the percentage of gross profit, because this percentage will be helpful to find out the closing stock. Okay na guys? Simple single entry adjustment only, this one. Okay na? So I am going to open the important questions to solve this one. Can you say the page number guy? Insurance claims 103. So don't tense ma. I will explain each and every concept, but somewhat fast will be there, because tomorrow only the exam. That's all. Nothing the reason. I'm going to explain directly the 5th question ma, because the 5th question is having the abnormal item. So how we can remove the abnormal item, I will explain through the 5th question and 6th question, the important model in the examination. So see this one ma. So on 1/4/2022, the godown of Y Limited was destroyed by the fire. The record of the company revealed the following ma. What they revealed? So stock on 1/1/2021. So what is our year ma? So in the year of fire accident they are occurred on 1/4/2022. That means nothing but our year is belongs to 2022. What is the previous year ma? 2021. So stock on 1/1/2021 means what ma? It is a previous year opening stock. Okay na? Next one. Stock on 31/12/2021 means what ma? Previous year closing stock and previous year opening stock. Purchase during the previous year and sales during the previous year. Purchase during the current year and sale during the current year. The simple point. But there is a special point ma. So please see this one carefully. In valuation of closing stock on 2021, 5,000 was written off, whose cost was how much ma? 4,500. Why they will written off sir? Because that one is abnormal item, for that reason only they are going to written off. Okay na? Yes. So what is the actual cost to need to be written off ma? 4,800. But they are written off how much ma? 5,000 rupees. Excess written off okay na? Lowest written off ma? Excess written off. For that reason we need to add back what ma? How much we need to add back? 5,000 minus 4,800, that is equal to plus 200. We have to add back to the closing stock, because we have to written off only 4,800, but they have written off how much ma? 5,000 rupees. So which year ma? 2021 means previous year closing stock. There is a mistake. Okay na guys? Next, sir, in the closing stock this was available means where it has come into the picture? Whatever the purchase is there na, from the purchase it is coming to the closing stock. Are you getting the point? For that reason in the purchase is also we are having the abnormal item, or we are not having the abnormal item ma? We are having the abnormal item. In the purchase also, in the purchase they have reduced or they have not reduced? They have not reduced. Nothing is mentioned means in the purchases they have not reduced. But now we have to reduce how much, ma? We have to reduce the 4,800 because actual cost of abnormal item is how much? 4,800. So what are the points you need to remember, sir? So please see this question number 5. Once again I will open, ma. So see the question number 5 point, ma. In the trading account, calculation of gross profit percentage, it is always a working note, ma. So first we will write the opening stock, and the next one what, ma? Sales of the during the previous year and purchases. While seeing the purchases, so we have to reduce how much, ma? 4,800, because whatever the purchase will be there will be only available in the closing stock. That is an assumption. Okay, na guys, whatever the purchase stock will be there will be available in the opening stock. For that reason, in the purchase also there is a abnormal item. Sir, no need to write open a 2 columns like normal item, abnormal item, like that. Open a single column. This is a simple method you can apply. Tomorrow examination they will ask, ma. So we have to reduce 4,800 here. Here how much we need to reduce, ma? We have to reduce only 4,800, but because he has already reduced how much? He has already reduced the 5,000. For that reason we have to add back 200 rupees. If they have reduced for example, if they are reduced only 4,500 means how much we need to reduce further? 300 rupees. Here they have reduced the more amount or less amount, ma? More amount. For that reason we have to add back how much, ma? 200 rupees, I think. So next, whatever the closing stock is there, this is a correct or wrong, ma? So this is a correct, and whatever the gross profit you are going to get, it is also correct. Okay, now what is the gross profit formula, ma? Gross profit divided by sales into 100. So we are going to get the percentage is equal to how much, ma? 25%. We have to multiply with the 100, don't forget. And this percentage we have to apply on which one, ma? We have to apply on the current year sales. So before going to calculate the current year sales, what is happening here, ma? The stock of this stock sold 2022. Sold means 2022 means which year, ma? Current year. Nothing but memorandum or normal trading account, ma? Memorandum. So why we are going to put the memorandum, sir? Because it is a rough work only for the calculation of closing stock as on the date of file we are preparing. For that reason we are putting the word called as memorandum trading account. So in the current year sales, okay, na, they have sold at what, ma? At a loss of 400 of rupees how much, ma? For 2,400. 2,400 value of abnormal item we have sold at a loss of 400 means what is the actual sale amount, ma? The actual sale amount is equal to 2,000. That is a normal sale or abnormal sale, ma? That is a abnormal sale. We have to reduce the abnormal item wherever it was actually presented. For that reason, in the current year sales, how much we need to reduce, ma? 2,000. On this 98,000 only we have to apply the percentage whatever we have got before, ma? 25%. So 25% we have to apply on 98,000. We will get the gross profit, and which is the missing figure, ma? Closing stock will come into the picture. I think you all know. After the closing stock, so we have to reduce the salvage value. We will get the loss of stock. We will compare with what, ma? We will compare with the closing stock on policy amount. So all the things are normal. So there is a scrap value of how much, ma? Salvage value 5,000. So what is the loss of stock value, ma? 76,500. So claim amount is equal to the loss of stock. Why I am saying means here they did not given the policy amount. For that reason directly the claim amount is equal to the loss of stock. I have got the conclusion. Sir, is there any doubt, ma? Wherever the abnormal item is presented, from there itself we have to reduce. And there is another question I am going to say you that one also. So question number 5 is completely completed. So wherever the abnormal item is presented, from there we have to reduce. And see the 6th question, we will get the more confident, ma. So on 30th/9/2022, the stock of Harshavardhan has lost in the fire accident from the available records of the following information. It was made available to you, unable to prepare what, ma? Statement for claiming the insurer. So insurer want to calculate what, ma? Claim amount which they have lost in the fire accident. So stock on 1/4/2021. Sir, here the fire accident is happening on which date, ma? The fire accident is happening on 30th/9/2022. That means our current year is nothing but 22-23. And what is the previous year, ma? 21-22. How you are saying, sir? Here they have given 1/4. 1/4 starting means it is a financial year. 1/1 starting they have given means it is a calendar year. Like that only I am saying. Okay na guys. So that means the 75,000 means what ma? Previous year opening stock. 31st March 2022 means what ma? Previous year closing stock. Are you getting the point ma? Sales less returns for the end of 31st March 2022 means what ma? Previous year purchases, and previous year sales is equal to 6,30,000. Current year purchases 2,90,000 and current year sales 3,68,100. And now there is a special point coming to the picture. Please careful. In valuation of stock on 31st/12/2022 due to the obsolescence. Obsolescence means what ma? It is an abnormal item, abnormal item. Obsolescence means outdated. In the technology point of view, we are going to use this terminology, obsolescence. So nowadays we are using 5G. For the 4G handsets, the value increases or decreases? Decreases. Now the 4G is called as abnormal item. So like that they are saying there is abnormal item. 50% of the value of stock which was originally costed how much ma? 12,000 had been written off. So the original cost is equal to how much ma? 12,000. On that 50% only written off. That means how much he has written off ma? 6,000 rupees they have written off. Okay na? From where ma? From which year ma? On 31st March 2022. That means in the previous year closing stock there is an abnormal item. That abnormal item total cost is equal to how much? The abnormal item total cost is equal to 12,000, but how much they have written off? 50% they have written off. That means till 50% they have not written off. We have to reduce now. In the before question what ma? The actual cost is 4,800. They have written off how much? 5,000. Because of that reason we have add back how much? 200 rupees. Now the original cost is 12,000. They have written off only the 50%. That means how much still we have to reduce ma? Still 6,000 rupees we have to reduce from the closing stock of previous year. Sir, in the closing stock abnormal item is presented means we have got from where ma? We have got from the purchases. For that reason from the purchases how much we have to reduce ma? The total cost. The total cost of obsolescence item, that is equal to how much ma? 12,000 we have to reduce from the previous year purchases, and the previous year closing stock how much we have to reduce ma? 6,000 only, because already we have reduced how much ma? 6,000. So these are the points you need to remember. So I will open the sixth question also ma, no problem. So I think there is no sixth question. Okay, please remember ma. I have given the sixth question is like a examination for our students, no problem. I think you also get this point. Okay na? So 12,000 from the purchases of the previous year and 6,000 from the closing stock of the previous year. So next one. Next one, see the important point. So continuing the section. In May 2022, nothing but what ma? May 2022 means current year. Are you getting the point? What is the previous year ma? 21-22. Already previous was completed on 31st March 2022. Now we are entering into the on May 2022 means what ma? Current year. 3/4 of the stock has been sold at a 90% of original cost, and it is now expected to that the balance of that obsolescence stock would also be realized. The balance we are going to leave it off ma. Whatever the total cost of the obsolescence item, the total cost of obsolescence is equal to how much ma? 12,000. On this 12,000, 3/4 they have sold. What is the value of sale ma? So 12,000 into 3/4, that is equal to how much ma? 9,000. So 9,000 they are going to sell at how much ma? 90% of original cost. So 9,000 is the total 100% cost, but they are selling at a 90%. That is means into 90%, that is equal to how much ma? 8,100. So this is the sale of abnormal item. We have to reduce from current year sales or previous year sales ma? We have to reduce from the current year sales. After reducing the current year sales only, we have to apply the gross profit percentage we have got from the trading account of the previous year. I think you all know about the obsolescence item, nothing but abnormal item. You have got the clarity. Okay na? Please do practice this question before going to the examination. There is no difficulty ma. Okay na guys? Okay ma. So these are the questions is sufficient from stock and debtors, from the loss of stock. And there is another question also. So this question you try before going to the examination, fourth question ma. So you will get to know, no problem. If you want I will explain. Okay, leave it off, I will explain. A fire occurred in 15 September 2021 in the premises of Sen & Co. Where the fire accident is actually happened ma? In the premises of Sen & Co. From the following, figures. Calculate the amount of claim to be lodged with the insurance company for a loss of stock. So loss of stock will easily identify, you will identify whether it is a loss of stock or loss of profit. So don't ask to me, sir, which method they are going to ask in the tomorrow's. I don't know, I cannot explain. So that you have to refer both the loss of stock and the loss of profit. So stock at cost of rupees how much ma on 1/1/2020. So 1/1 means we can say easily what is the previous year 2020, what is the current year ma 2021. So on stock of 1/1/2021 means previous year closing stock and current year opening stock. On purchase of 2020 how much ma 2020 80,000 previous year purchases and current year purchases 1,76,000. And next one what ma 2020 sales, previous year sales is equal to 1,20,000 and current year sales is equal to 2,10,000. This is normal point. But here now coming the dangerous point. During the current year the cost of purchase rises by how much ma 10%. In the current year there is a changes in the purchase price, and in the above last level when compared to the last year level they are saying, not complete last year ma. Last year level means during the corresponding period of current year. So what is our current year ma 1/1/2022 15/9/2021. What is the same previous year ma 1/1/2019 to 15/9/2020. For the corresponding previous year level, if you compare means our purchase price is increases and the selling price is also increased by how much ma 5%. I think you all know the PV ratio percentage formula. We can apply whether there is any changes in the fixed cost. We cannot apply. If there is any changes in the variable cost, we will apply the same percentage of PV ratio. We are not going to apply. In the same way, the gross profit percentage what we have got from the previous year, we cannot apply directly on the current year sales, because there is a increases in the selling price and there is a increases in the purchase price also. For that reason, the same gross profit we will apply, we are not going to apply. We are not going to apply. So based on the previous year scenario, we are going to find out the current year. So not the total previous year, we have to see the previous year level. I will explain, no problem. See carefully ma. So this is also important model. So this is only the last important model. I can wind up this chapter also, no problem. What is the question number 4? See this question ma. First, straight away write the opening stock ma. Opening stock, the previous year means not the previous year total ma, only level. You can put the previous year, current year and previous year, current year. First we have to write the opening stocks first, because there is no change in opening stocks. Because there is no change in opening stock. For that reason, whatever the current year opening stock belongs to the same of previous year also, like that I am assuming. And next, then after I am going to write what ma, I know the current year purchases and I know the current year sales, but I don't know what ma, I don't know the closing stock, I don't know the gross profit, because we should not apply directly on 2,10,000 the previous year gross profit percentage, we should not apply. So how much did you get the previous year gross profit percentage ma? 50%. This one easily you can solve, no problem. This 50% directly we can apply, we cannot apply ma, because there is a changes in purchase price and there is a changes in the value of sales also. So for that reason, how much is the purchase price is increasing ma? 10%. So yes or no ma? I will going to show 10% the purchase price is increasing and 5% the selling price is increasing. In this scenario, I am going to assume this as 110 rupees, because 100 plus 10% means how much we are going to get ma? 110. So if this is a 110 means what is the previous year ma? 100 only na? Because when compared to the previous year, current year purchases are increases by 10%. So 110 is equal to 1,76,000 means what is the amount for the 100? How can we can calculate ma? 1,76,000 into 100 divided by 110, that is equal to how much ma? 1,60,000. This one is, we have got the picture. In the same way, what is the selling prices increasing? 105. Okay now 5% na? 100 plus 5%, that is equal to how much ma? 105. Here this is a 105 means what is the previous year? 100 only na? Again the same calculation, how much you are going to get ma? 2 lakhs. So whatever the percentage we have got from previous year only na, the gross profit percentage, we can apply on 2 lakhs. Yes or no ma? Because why sir? Because this is a this sales having a change, there is no change, amma. There is no changes in this value. For that reason, I am going to apply 50% on the 2 lakhs. Whatever the amount we are going to get for the previous year, 1 lakh rupees. Okay, na guys. And what is the missing figure, here? We'll get the closing stock. That means we have got till now previous year opening stock, purchases, gross profit, sales, and the closing stock of previous year. We don't know the closing stock of current year, but we can identify. How we can identify, sir? So I have told you before only, whatever the closing stock will be there, will be come from where, will be come from purchase only, na? So purchase is changes by how much? 10%. For that reason, the previous year closing stock 100 I am assuming, and current year closing stock is equal to how much, 110. Now how we can identify, 1,20,000 into 110 divided by 100, that is equal to how much, 1,32,000. Easily will come into the picture. So whatever, once again I am going to explain, so open the previous year opening stock and current year opening stock are same because there is no change, but we know the 1,76,000, we know 2,10,000, we know. So but here we are assuming what, this is a 110 because purchase price increases by 10%. We are assuming this as what, 105 because selling price increases by how much, 105. So for what, how much we are going to get? For 100 how much? For 100 how much? We are applying the reverse scenario. So we will get the gross profit of previous year, how much? 2 lakhs into 50%, that is equal to how much, 1 lakh. And we have got what, closing stock of previous year. Closing stock of previous year is equal to 100 I am thinking, because we are getting from the purchase. So previous year purchase is equal to 100 and current year purchase is equal to how much, 110. For that reason, the current year purchase 110 how much? So what is the missing figure, 1,33,000 or 32? 1,32,000 is the answer. So this is the scenario you can understand. Okay, now I will explain, I will explain the single entry and overall. So I am not going to concentrate on your messages. I will explain each and every topic. Till now we have started 1 hour only, So for 1 hour we have completed the maximum 2 topics. So 2 topics, 14 marks we have completed. So please follow with me. I am targeting the small points. Okay, na? Just I am interacting with you means it is a time waste. Okay, na guys. For that reason, not interacting with you, please listen to me. You try to learn something, because directly visiting this class you can try to attempt in the tomorrow's examination. That is only my main objective. Don't practice now, it will take a long time. Okay, nama. Once again I am saying this section will be useful not only for the regular readers, for all complete picture about the loss of stock. And now I am going to discuss what, loss of profit. Simply I will explain the loss of profit steps, how to remember. So how to remember this one, I will explain you. So first step number 1 is called as what, indemnity period. So please try to, if I explain the concept, okay, I will try to explain, no problem. Where is this one? See this scenario, I think you all know. The trading account, see this one, trading and P&L account. I think you all know how to prepare the trading and P&L account. Opening stock, sales, purchase, gross profit and closing stock, you all know. But here normally we have to consider what, so loss of stock, loss of profit, loss of profit. Loss of profit means which profit we are going to lose? We are going to lose the gross profit. Here while calculating the gross profit percentage, what is the normal formula, gross profit divided by sales into 100. But here in this scenario, how they are saying means, so reverse, gross profit is equal to, how they are saying means, net profit plus standing charges, insured standing charges. So what is the meaning of standing charges, sir? Fixed charges, So we have to pay the salary, we have to pay the rent, and we have to pay the electricity. Even though you are not having, even though you are having the losses, even though you are having the profits also, these are the fixed expenses. Without paying these fixed expenses, we cannot run the business. For that reason, whatever the fixed expenses, in this insurance claims terminology, they are going to call it as what, standing charges. So in the standing charges, some of the expenses only they will give the insured. They will come into the insurance. It is called as what, some of the, for example, salary is going to accepted by the insurance company, I will provide that loss. So salary is called as what ma, insured standing charges, and remaining two things is called as what ma, uninsured standing charges. But now how they are going to get ma, they are going to classify the gross profit as open net profit plus salary. Nothing but salary means what ma, insured standing charges, divided by sales na. Sales is also called as what ma, turnover. Which turnover ma, previous year turnover, because the previous year gross profit we are going to calculate. Now say, what is the formula for the gross profit percentage ma? Simple, normally it is a gross profit divided by sales into 100, but now what is the formula ma? The formula is net profit plus insured standing charges divided by previous year turnover is the gross profit percentage. Why we need to calculate the gross profit? Because it is a loss of profit. Which profit they will compensate ma? Gross profit only they will compensate, they will not compensate the net profit. So can you repeat once again? Net profit plus insured standing charges divided by previous year turnover. And then nothing but next one ma, how many months they will compensate? They will compensate 1 year, 2 year, 3 years ma, they will compensate the indemnity period. What is the meaning of indemnity period ma? In the policy value they will say, for this many months only we are going to provide you the loss. So that loss, that period is called as what ma? Indemnity period. So indemnity period means nothing but period given in the policy agreement or period given in the question, whichever is lower. So all the cases of in loss of profit, we have to see the lower option, we have to see the higher option ma, we have to see the lower option. So step number 1 is period given in the agreement or period given in the question, whichever is lower, nothing but what ma? Indemnity period. So step number 2 we already known, what is the gross profit percentage ma? Net profit plus insured standing charges divided by previous year turnover. And next, short sales. Why we need to calculate the short sales? Or if you know the sales, then only if you apply on that sales, we'll get what ma? We'll get the gross profit. Okay, now short sales means what ma? Whatever the sales we have lost due to the fire accident. So we have to compare with the previous year only. Yes or no? How we have to compare ma? For example, if you take the seasonal businesses, summer season we have to compare with the summer season sales, winter season sales we have to compare with the winter season sales itself. For that reason we have to take what ma? Standard turnover. What is the meaning of standard turnover ma? The corresponding year turnover. Okay, now whatever the indemnity period is there na, that indemnity period sales we have to that indemnity period sales loss we have to compare, but we have to compare with which one ma? Standard. That indemnity period corresponding is called as what ma? Standard turnover. For the standard turnover we have to add back what ma? We have to add or less the trend one, and then we'll get what ma? So whatever the turnover we have got in the indemnity period we have to reduce. The turnover they will not compensate, whatever the sales lost only they will compensate. What is the formula ma? Standard turnover plus trend, and then we have to reduce the turnover of the indemnity period. So because that sales they are not going to compensate, this is called as what ma? Short sales. Sir, sale amount they are going to compensate a profit profit. For that reason, what is the step number 4 ma? Short sales into gross profit. So this is the overall scenario. So till now we have completed how many steps ma? 4. So wait a second, wait 5 minutes, the remaining 4 steps will also be completed ma. And next one, not only they are going to compensate the short sales profit, they are going to compensate what ma? Additional expenses also. So actual additional expenses are sales due to the additional expenses into the gross profit. So what is the meaning of this one, sir? So for example, you have incurred 10,000 rupees ma. For the 10,000 rupees incurring the additional expenses, you are going to sell 1 lakh extra ma. You are going to sell how much ma? 1 lakh extra sales on that the profit. On that the profit, whichever is lower, they will conclude. Okay na ma. So actual additional expenses are sales due to the additional expenses into the gross profit. Sometimes they will not give the point is called as what ma? Sales due to the additional expenses. At that point of time, whatever the sales in the indemnity period is there na, that will be treated as what ma? Sales due to the additional expenses we have to treat. Sir, if they given the specially sales due to the additional point, we can take this one. If they are not given specially the sales due to the additional expenses, which sales we have to consider ma? We have to consider the sales is called as indemnity period sales. This sales ma. So this sales we have to consider it as the additional sales we have incurred, we have got from the additional expenses. Specially given means special. Okay, now then after, and we have to apply the third point, actual additional expenses into what my net profit plus ensued standing charges divided by net profit plus ensued plus unensued standing charges. So why this one? So don't ask the logic, remember this point. So what are the 3 points ma? Actual additional expenses and sales due to additional expenses into the gross profit. And what is the third point ma? Actual additional expenses into net profit plus ensued standing charges divided by net profit plus ensued plus unensued. Whichever is lower or whichever is higher, whichever is lower only we have to consider. Okay na guys. And next one, calculate the gross claim. So how we will calculate the gross claims are? So gross profit on the short sales plus additional expenses we have got from here na, from this step, above step, and minus savings and ensued standing charges, we will get the gross claim. We'll get what ma? Gross claim. Nothing but we will compare this gross claim like a closing stock, like a loss of stock. Okay na? Gross claim is equal to the loss of stock also we can compare. And next one what ma? Calculation of gross profit on additional sales on gross profit on adjusted annual turnover. What is the meaning of annual turnover ma? Generally this type of loss of profit we will take on turnover basis. Which turnover we have to see? We have to see the adjusted annual turnover. Annual turnover means 12 months na, annual means 12 months. Which 12 months sales we have to see ma? Immediate 12 months. So last date, before the last date, immediate 12 months. So annual turnover plus or minus trend analysis will get what ma? Adjusted annual turnover. So adjusted annual turnover into gross profit. So this is you can think as loss of stock. Okay now, so closing stock as on date of fire. You can think this one as a closing stock as on date of fire. You can think this one as a loss of stock and compare both the items. So generally we will take for this amount the policy amount. So we'll compare the policy amount on GP on AAT. So this is called as over insurance, under insurance ma. This is called as over insurance. Whatever the gross claim we are get, we'll get those one. In the case of under insurance, what ma? Policy amount into gross claim divided by GP on AAT. Sir, we have to remember these steps, that's all. So I think most of the people they have remember. Once again, before going to the examination, please remember these steps. So is sufficient. Directly we can write in the examination. So till now we have completed the 2 topics. Branch accounts we have completed and the insurance claim we have completed. And next we are going to start the standards. So please give me 1 minute. I will take a sip of water. Come on boys. Not only the boys and girls. Come on, let us start the standards ma. The very important. I will straight away go and solve the questions. For that question, whatever the topic we have needed, I will going to explain. Please come and sit this side. Okay guys, let us start the standards. So which standard do you want? If you comment, then I will start ma. Guys, which standard do you want first? Guys, 16 okay, 16, 11. Oh, okay. I will start with the 11 because the 11 is a small. Okay, 22 PP. Okay, guys. Okay. That is my mistake in order to ask to you. Okay. Okay. Let us complete 22. It is a small standard. Okay. Okay guys, so let us start the AS22. So we are going to start the standards. So thank you so much for your cooperation ma. So nearly 50 students are nearly watching this live. Thank you for your love and support. So this standard is generally targeting what ma? Current tax and deferred tax. I will explain you in a clear way. Please give me 10 minutes time. That's all. Sir, if you see the previous year belongs to 24-25. So books of accounts means nothing but as per accounting, and tax books means nothing but as per the taxation. So as per the taxation, that is the tax is called as actual payment tax. As per the books of accounts, that tax is nothing but that tax we have to pay. So this is called as what ma? We have paid. We have to pay, and this one is called as what ma? Actually paid. Okay, you will get to know, no problem. So income or revenue is equal to how much ma? 1000 crores, and expenditure is equal to how much ma? 60 crores. So the 40 crores is the profit. Generally on the profit we are going to pay the taxes. On the income we are going to pay the taxes ma. On the profit only we are going to pay the taxes. So what is the profit ma? 40 crores, and the tax rate at the rate of 20%. So 40 CR into 20%, that is equal to how much ma? 8 CR. Okay, as per our accounting, this much expenditure we have to book. Okay, now as per our accounting, this 8 crores we have to book as an expenditure. If you see the tax books, so income is equal to same, there also 100 crores only, because of 10 crores outstanding. You know already in the taxes they will pay, they will give the deduction as a payment base. Okay na, but they will not consider, they in the tax books they will follow the which basis ma? Cash basis. But in the books of accounts we are going to follow which basis ma? Accrual. For that reason we are also considering what ma? Outstanding, but here they will not consider the outstanding ma. So whenever they have paid, then only they will give the expenditure. For that reason the expenditure will be low, more or less ma? Less. For that reason income will be more. So this on the profit we have to apply the rate of 20%. How much we are going to get ma? 10 crores. What is the meaning of this 10 crores ma? Paid, to be paid, paid. As per income tax, whatever the tax you have got is called as paid. As per accounting, whatever the tax you are getting, 8 crores is to be booked. Okay na, we have to book only 8 crores, but you have paid how much ma? 10 crores. That means prepaid or outstanding ma? Prepaid. Expenditure should be only 8 crores related to the current year, but how much you have paid ma? 10 crores. It is called as a prepaid. It is called as what ma? Prepaid. Prepaid means asset or liability ma? Liability. Asset, sorry. Prepaid means what ma? Asset. So the differences between these two items is called as what ma? Deferred tax. It is a deferred tax asset. It is a deferred tax. How much is the deferred tax asset ma? 2 crore rupees is a deferred tax asset. Are you getting the point or not? So whatever the tax as per accounting is called as what ma? Tax accrued. Whatever the tax as per income tax is called as what ma? Current tax. The differences between the tax accrued and current tax is called as what ma? Deferred tax. So how we can identify whether it is an asset or liability ma? So if it is a prepaid, it is called as an asset. It is an outstanding, it is called as a liability. How we can identify, how we can make the conclusion as it is a prepaid or outstanding ma? As per accounting, actually to be paid. As per income tax, we have paid. So deferred tax between the current tax and the tax accrued is called as a deferred tax. What is the entry ma? I think you all know. What is the prepaid entry? Prepaid expenses entry ma. So prepaid expenses account debited to cash or bank. Here also tax expense. Actually how much ma? 8 crores only, but you have paid 2 crores extra. It is called as what ma? Prepaid expenses. Is nothing but what ma? Deferred tax asset. Is nothing but what ma? Deferred tax asset to cash or bank. Okay na, this is coming to the conclusion. But how the examiner will test you on this standard means, so I think you know the deferred tax. What is the meaning of deferred tax ma? The differences between the tax accrued and current tax. What is the meaning of deferred tax asset means, if you are paying the, you have paid more tax now and you are going to pay less tax in the future, means it is called as what ma? Asset. You are going to, if you see the example ma, what we have done in the previous example, we have paid the more taxes or we have paid the less taxes. We have paid the more taxes. If you paying the more taxes now and you are going to pay the less taxes in the future, means it is called as deferred tax asset. What is the meaning of deferred tax liability? If you are paying the less tax now and you are going to pay the more taxes in the future, it is called as what ma? Deferred tax liability. Sir, can you give the more examples, sir? I will give, and you will try to I will come this concept next ma, time difference and permanent difference. Just a second. So these are the examples ma. If you understand this example, the total standard will be clear. So this one ma, depreciation. as per accounting, the depreciation is equal to how much ma? 2 lakhs. And as per tax record, the depreciation is equal to how much ma? 5 lakhs. So see the format, you have to think like that. What is the tax rate ma? 30%. Particulars, accounts, taxes, difference and deferred tax. Okay na? Depreciation, whatever the expenditure they have given, we are going to write here. Depreciation, as per accounting 2 lakhs, as per income tax 5 lakhs. And what is the difference ma? 2 lakhs minus 5 lakhs or 5 lakhs minus 2 lakhs. The negative sign or positive sign, neglect ma. Whatever the difference ma here, 3 lakhs. On this 3 lakhs, we have to apply the tax rate of how much ma? 30%. How much tax we are getting? 90,000. So here the 90,000 is called as deferred tax. Okay now, we have to decide whether it is a deferred tax asset or deferred tax liability, taking the base the tax. Taking the base what ma? Tax. Sir, as per, if you compare the accounts to the tax, here the expenditure is more or less ma? More. If the expenditure is more, profit will be what ma? Less. If the profit is less, taxes is less. That means now you are paying the tax less. Now you are paying the tax less means in the future you will pay the tax more. It is called as what ma? Now less and future more means it is a liability. For that reason, this is called as what ma? Deferred tax liability. How much is the deferred tax liability ma? 90,000 is the deferred tax liability. Nothing but outstanding or prepaid? Outstanding. What is the entry for the outstanding ma? The entry for the outstanding is expenses account debited to outstanding. So here generally they will not ask about the entry. So please remember this one. P&L account debited to what ma? Deferred tax. P&L account, why come into the picture means instead of expenses we will write the P&L account. Are you getting the point? So which thing we have to take the base ma? Tax thing we have to take the base. As per the tax, expenses more means profit is less. If the profit is less, taxes, now the taxes is less and future the taxes is more. So now you are paying less and future you are paying more means it is an outstanding, nothing but deferred tax liability. Okay na guys? And see the next one, we will get the more clarity ma. If you see the preliminary expenses, so preliminary expenses amounts to how much ma? 60,000. Tax rate is how much ma? 30%. Fully allowed in the accounts and unamortized in taxation. Try to understand this scenario ma. Unamortized means, meaning, what is the meaning sir? Means as per the taxation they are not going to allow in the current year. As per the taxation they are going to allow in the next year. They are going to allow in the next year. That means see the current scenario. As per accounts 60,000, as per taxation it is nil. Why sir? Amortized. Amortized means what ma? They are not going to allow in the current year, they are going to allow in the next year. So next month, what is the difference ma here? 60,000 and nil, the difference is equal to 60. 60,000 into 30%, that is equal to how much ma? 18,000. What is the meaning of 18,000 ma? Deferred tax. Okay na? We have to decide whether it is an asset or liability. How we can decide whether it is an asset or liability ma? We will take the base is called as tax. So here the expenses is less. Yes or no ma? When compared to the accounts, in the taxes the expenses is less. So if the expenditure is less, the profits will be more. If the profit is more, taxes is more. Now we are paying the high taxes and future we are paying the less taxes means it is called as what ma? Asset. So deferred tax asset. What is the entry for the deferred tax asset ma? So deferred tax asset account debited to P&L account. So it is having a reversal capacity. That means if they are not going to allow now means in the next year they are going to allow or they are not going to allow, they are going to allow. Yes or no ma? That means we can reverse this entry in the next year. Okay now, we should not call in the next year it is a deferred tax liability. In the first year only we can identify whether it is an asset or liability. For the next year onwards it is not treated as what ma? Asset or liability. It is called as what ma? Reversal of asset or reversal of liability. That means here in this scenario we can able to reversal this one na, we cannot able to reversal this one na ma? We can able to reversal. Why sir? Now it was not allowing, but in the future they are going to allow, no, they are not going to allow ma? They are going to allow. For that reason this difference is called as, this tax difference is called as temporary difference. This is called as what ma? Temporary difference. It is not a permanent difference. If it is a permanent difference means we cannot unable to reversal this entry. For that reason there is no deferred tax asset and there is no deferred tax liability. In the war situation it will be a permanent difference ma? If they given here, what is the given sentence here? Unamortized. If they given for suppose in the taxation we are not going to allow the preliminary, we are not going to allow means what ma? They will allow in the next year, they will not allow. If you create an asset, it is a dummy asset. It is a dummy asset or real asset ma? It is a dummy asset. For that reason For the permanent difference, there is no asset or there is no liability. So we are not going to call it as deferred tax asset or deferred tax liability when there is a permanent or what ma? When there is a permanent difference. What are the example for the permanent difference, sir? Now we'll get. I think see this one ma. Fines and penalty. You know, sir, fines and penalty in the taxation, it is a disallowed. It is a disallowed in the PGBP concept, or without PGBP also we can know. So in the taxation, the fines and expenses, they are not going to allow as a expenses. For that reason, always here the nil only ma. Always here nil. What is the difference ma here? 30,000. So here there is no deferred tax because it is a permanent difference. We cannot able to reversal. We cannot able to reversal in the future year because it is a. So now also we can say it is a what ma? Deferred tax asset or liability we can decide, but it is a dummy or what ma? Dummy. We can able to reversal or we cannot able to reversal. We cannot able to reversal ma. They are not going to allow now and they are not going to allow in the future also. For that reason it is called as what ma? Permanent difference. I think you have got the clear picture ma. So what is the permanent difference and what is a temporary difference? And see the question related to this one. So this is the most important question ma. They may ask in the examination. The following information available in the records of Vishnu Limited. So whatever the model I have discussed, the same model only you have to write ma. Depreciation charged in the income statement, how much ma? 8 lakhs. So income statement means nothing but accounts are taxation ma? Accounts. Depreciation under section 32. Under section 32 of income tax act, how much ma? 20 lakhs. As per accounting only 8 lakhs, and as per income tax how much ma? 20 lakhs. I think you know the format. What is the format ma here? Particulars, accounts, taxation, difference and deferred tax. Okay na. So here 8 lakhs and here 20 lakhs. But not only one expenditure they are giving. How many expenditure they are giving ma? 2 or more expenditures. Here in this situation how we can see ma? And there is another one, unamortized preliminary expenses as per the income tax, how much ma? 1,50,000. What is the meaning of unamortized ma? Unamortized means as per income tax they are not going to allow in the current year, they are going to allow in the next year. For that reason what ma? In the accounts they will allow, in the taxation they are not going to allow. And combinedly see this one ma. Combinedly how much ma? 9,50,000 and 2 lakhs. What is the difference ma? 10,50,000. The rate of taxation is equal to how much ma? 40%. So on the 10,50,000, 40% means how much ma? 4,20,000 is called as deferred tax. We have to identify whether it is the asset or liability. So we have to take the base taxation accounts ma? Taxation. As per comparing to the accounts, the taxation expenditure is more, profit is less, taxes is less. Now the taxes is less and future the taxes is more means it is called as what ma? Deferred tax liability. So for that reason what is the entry ma? P&L account debited to deferred tax liability account. We can able to reversal, we cannot able to reversal ma? We can able to reversal. For that reason only we are going to write this entry. We cannot able to reversal means it is called as what ma? It is called as not a deferred tax asset and not a deferred tax liability. Are you getting the point? How we can able to reversal ma? Now in this situation it is a reverse scenario. And when coming to the next year what ma? This may be more and this may be less. And when coming to the next year, preliminary expenses they will allow na? They will not going to allow ma? They will allow. If they mention the preliminary expenses is disallowed means it is not a deferred tax asset and it is not a deferred tax liability. I think you understand this one very clearly. And next one, we have to identify whether it is a permanent difference or temporary difference, and also we have to identify whether it is a deferred tax asset or deferred tax liability. Classify the following time difference and permanent difference. Time means what ma? Temporary. Permanent means what ma? It is a permanent difference. And also state whether the result would be a deferred tax asset or deferred tax liability. See the first one ma. Unabsorbed depreciation. What is the meaning of unabsorbed depreciation ma? As per income tax, our PGBP profit is not sufficient to set off the depreciation amount. That means sorry guys, that means the depreciation amount in the in the accounts will be more and the depreciation expenditure in the taxation will be less. So first of all, it is a time difference because of depend upon the situation, the depreciation will be less or more. Here the expenditure is more in the accounts and the expenditure is less in the what less in the less in the taxes. So in the taxes the expenditure is less means the profit will be more. If the profit will be more means taxes will be more. Now we are paying the taxes high and future you are paying the taxes low means it is called as what deferred tax asset. It is called as deferred tax asset. Are you getting the point? How I am analyzing means due to the unabsorbed depreciation in the accounts the depreciation will be more and in the taxes the depreciation will be less. Sir, the expenditure less in the taxation means what expenditure less means the profit will be more and the taxes will be more. Now we are paying the taxes more and future we are paying the taxes less means it is called as what deferred tax asset. And income tax penalty, previously only we have discussed income tax penalty is a permanent difference. So in the case of permanent difference, neither it is a deferred tax asset or nor it is a deferred tax liability. Why sir? Because it is unable to reversal, because it is not getting now means in the future also we are not going to get. If you create the asset, it is a dummy asset, we have to reverse compulsorily. For that reason we cannot unable to reverse. For that reason it is not a deferred tax asset and not a deferred tax liability. Interest on loan taken from the scheduled bank accounts in the books but not paid till the date of filing of returns. So normally the interest when come to the type payments, so interest will be allowed on the payment basis. We have paid or we have not paid we have not paid and before the due date of filing of return. For that reason it is called as disallowed. So disallowed expenses means it is a permanently disallowed. In the case of permanent disallowed, permanent difference, neither deferred tax asset or not deferred tax liability. So these two questions are most important for the tomorrow's examination. So I think you have got the clear picture. Have explained you. We are paying the high taxes now and we are paying the low taxes in the future means it is called as what deferred tax asset. You are paying the less taxes now and you are paying the future taxes in the next year means it is called as what deferred tax liability. Or either you can remember like this also, accounting profit more means it is a liability and taxable profit more means it is an asset. Okay now, as per taxes the profit is more, as per more means it is a asset. As per income tax the profit is more means it is a liability. So opposite also you can think. No. Okay enough. So simple and sweet this section. And next I am going to open the AS11 Okay, AS16 come into the picture. We can discuss the AS16, no problem. Afterwards, I will discuss the AS11. Okay, because for searching I am taking a late. So AS16 nothing but what borrowing cost. So borrowing means taking a loan, cost means interest on paid on loan. So in general, this will be transferred to the interest. Interest will be transferred to the P&L account. But as per this borrowing cost, in some of the situations we have to capitalize the borrowing cost. So what are the situations we are going to capitalize the borrowing cost? We are going to discuss. So what is the meaning of borrowing cost? After that I will give the break. No problem. Please participate. So here the meaning of borrowing cost means it is an interest and other cost. So what are the other costs we can discuss later point of time. What is the objective of this standard? Accounting treatment of the borrowing cost. So accounting treatment of the borrowing cost are two types, the recognition principle and measurement. What is the meaning of recognition means what when we need to transfer this interest to the P&L account and when we need to transfer this interest to the asset account. And next, measurement means how much we need to transfer to the P&L account and how much we need to add back to the respective asset. So here, whether the borrowing cost is a capital in nature or revenue in nature. So we have to decide. If it is a capital in nature means what we need to do, ma? We have to add back to the asset, and if it is a revenue in nature means we have to transfer to the P&L account. So based on that, how much we have to capitalize and how much we have to use the revenue. So the meaning of capitalized or revenue. If the borrowing cost incurred for the purpose of qualifying asset, if the borrowing cost incurred for the purpose of qualifying asset, it is called as what, ma? Capitalized in nature. It is not incurred for the purpose of qualifying asset, it is called as what, ma? Revenue in nature. So capital means add back to the asset and transfer to the P&L account debit side in the case of revenue in nature. The scope and all the things you can know. So meaning of qualifying asset we can discuss. If you know the qualifying asset, the total standard will be completed. Okay, na? I'm directly will discuss the questions only. So see this one, ma. The asset will take the substantial period of time to get ready for the intended to use or sale. Either we can use that one or either we can sell also. So this one is called as what, ma? How many months it will take? 12 months. So substantial period means generally 12 months. So less than 12 months also it is possible, sir. Less than 12 months also it is possible. Generally the qualifying asset means the ready-made shirt is called as a is not a qualifying asset. If you give the stitching shirt is called as what, ma? It will take what, ma? Substantial period of time to get ready to use. For that reason the stitched shirt is called as what, ma? It is called as a stitched shirt. We are given now itself. It will take some more period of time. It is called as what, ma? Qualifying asset. So see this example. Construction of building will take how many years, ma? 2 years. So it is called as a qualifying asset. For that construction you have taken a loan. On that loan you are paying the interest. So that interest is called as what, ma? Is called as capitalized interest, will be added back to the building up to the date of completion of the building. Nothing but that building you have purchased, ma. You are not constructing that building, you have purchased. You have purchased the building for the construction, and you have purchased the building for the construction of that building. It will take 4 years. So now the construction we should not see, ma. We already purchased what, ma? Constructed building only. For that purpose you are taking a loan. On that you are paying the interest. That interest will not be called it as capitalized interest, will be transferred to the P&L account. Okay, na? Note points, nothing but. So there are other costs also will be included, ma. Interest charged on the borrowing cost. Okay, na? It is a interest, nothing but we have discussed. Amortization of a premium and discount is also forming part of what, ma? Borrowing cost. So next one, ancillary services, the processing fee. So most of the people we are going to take what, ma? So loans in the Dhani pay, like that. So at that point of time they are going to collect the processing fees and loan rising fees. This is also forming part of what, ma? This is also forming part of borrowing cost. And that one, next one, commitment charges. What is the meaning of commitment charges, sir? So mostly we are going to start the construction after 2 months, ma, after 6 months, but now it is not easily to get the loan immediately. For that reason now only we are going to enter into the agreement for the loan. So the loan is already sanctioned, but we are not going to take the loan now, because if you take the loan now we have to pay the interest. For that reason what we are saying to the banker means we will take the loan after the 6 months, but he will ask us to pay the guarantee charges or commitment charges. That commitment charges also will forming part of what, ma? Borrowing cost. And finance cost as per what, ma? AS 19 we can discuss there, financial lease. And next one what, ma? Exchange loss of foreign loan. So the exchange loss of foreign loan, this point was nothing required, ma. So I'm skipping it off, no problem, because we are not having the problem. And next one, there is an important item is called as what, ma? Types of borrowing. Important, concentrate, ma. Specific borrowings will be there and general borrowings will be there. What is the meaning of specific borrowings, ma? We are going to take the loan for the construction of a building. We have to use for that building itself. What is the meaning of general borrowing? We have taken a general borrowing from the loan. From the general borrowings we are utilizing the sum of the loan amount to the specific qualifying asset. At that point of time, how we need to calculate and how much percentage we have to add back to the cost of the asset. Specific borrowing, see this example ma. These are the borrowing costs specifically taken for the qualifying asset, borrowing cost eligible for the capitalization. So specifically, so but here we have to reduce what ma, income on temporary investments of ideal funds for those borrowings. So nothing but we have taken a 10 crore rupees loan ma. We have deposited into the bank account because we are not going to use the 10 crores directly now itself. So installment we have to use. For that reason, the 10 crores we have put in the bank account, you have got what ma, interest on that. That interest is what ma, income na. It is not a cost. That income we have to reduce. That income we have to reduce. So that is called as income on temporary investment. What is the temporary investment ma? We are putting into a bank account. It is a temporary purpose. That interest we should not add back. We have to reduce, and the remaining amount of interest only what we need to do ma, we have to add back. So see this example, you will get to know clearly. Loan taken on a 1/4/2025 of rupees how much ma, 100 crores at the rate of 12% for 12 months for the construction of a building which was being completed on 31st March 2026. Sir, it is a what ma? It is a qualifying asset because it is saying a substantial period of time. So what is the loan we have taken ma, 100 crores for what is the percentage ma, 12%. So borrowing cost is equal to 100 crores into 12% into 12 by 12, because at the starting of the year we have taken so 12 crores. But not only they are saying this one, the company is invested the ideal funds in the bank and he is going to earn how much ma, 0.5 crores as an interest. This interest we have to reduce or we have to add back? We have to reduce because this interest is an income to us. It is not a cost to us. For that reason what we need to do ma, the specific cost of interest we have to, for this we have to reduce what ma, temporary investment income we have to reduce, and totally how much we have to add back to the qualifying asset ma, we have to add back 11.5 crore. So this is a easy calculation because specific borrowing and normal borrowing ma, this is a specific borrowing. Now come the general borrowing. In the case of what is the meaning of general borrowing? There is no specific in nature. General purpose we are borrowed the amount from the bank. Out of that general borrowings, we are using some of the amount to what ma, to a qualifying asset. At that point of time, how we can manage? The borrowing costs that are not specific are general. That means what ma, for general purpose we have taken. In this case, the qualifying asset is funded from the pool of general borrowing. For example, I have taken 10 lakh rupees as a loan. Okay na, but there is no purpose. A general borrowing I have taken. Out of this 10 lakhs, we are using how much ma? Only 2 lakhs amount for the purpose of what? For the purpose of qualifying asset. But here there is only one means okay sufficient. The general borrowing means so many general borrowings will be there, not only the one. So out of those pool we are going to get. Now first of all we have to calculate what ma? Capitalization rate. How we can calculate the capitalization rate, sir? We are having so many borrowings, only one borrowing. If we are having only one borrowing means it is a proportionate basis. We are having so many borrowings. So total interest divided by what ma? Total borrowings into 100. Then we will get the capitalization rate. So what is the formula ma? Total interest, because we are not going to have only one ma, we are going to have the more than one loans. So for that reason total interest into total borrowing. For example, I have two loans ma. 10 lakhs is one loan. For that, on that I am going to get what is the percentage ma? 10% is the interest, and there is a 12 lakhs another one. On that we are going to get 12% is the interest. Can you say the total interest ma? On the 10 lakhs the interest rate is equal to how much ma? 1 lakh rupees. On the 12 lakhs the interest rate is equal to how much ma? 1,44,000. So now we have to identify the weighted average percentage. How we can identify ma? Total interest divided by total borrowings into 100. So we will get the ultimate capitalization rate. Are you getting the point? Now calculate the borrowing cash to be capitalized. How we can calculate ma? Expenditure amount. The total amount we have to take ma, whatever the amount we have utilized for the qualifying asset we have to take into the capitalization rate. Already we have calculated on the above na, that capitalization rate into number of months. In that year, how many months? That means what ma? In some of the situations, we are not going to utilize from the beginning of the year itself. We are going to utilize that fund from the middle of the year. So what is the date also? Number of months also we have to consider ma. So if you see this example, you will get the more clarity. We are having two general type of loans. How many types of loans ma? 2. So on the 12 ICICI Bank we have taken 100 crores. On that, what is the rate of interest? 12%. On 75 crores, what is the rate of interest, ma? 14%. So first we have to calculate what, ma? We have to, on that 175, so 50 crores we have utilized in the year 2025, and 75 crores we have utilized in the 2025, and 25 crores also we have utilized in the 2025, but different dates. But what, ma? Different. So this, for this one, full year or half year, ma? Full year. For this one, what, ma? 7, 8, 9, 10, 11, 12. So for this one we are going to get the 9 months interest. For this one 3 months interest. For this one 12 months interest. First of all we have to calculate what, ma? Capitalization rate. So because we are having how many rates here? 12% is there, 14%. So they are not going to say, so this much amount we have taken from the first one, this much amount we are going from the second one. They are going to say like that. They are not going to say like that. This total 175 crores they have utilized. From the, what is the total fund value, ma? 50, 75 and 25. How much, ma? 150 crores. Either we can take in from this one or either we can take in from this one, we don't know. For that reason, what we need to calculate, ma? We need to calculate the capitalization rate. How we can get the capitalization rate, ma? Simple. Total interest divided by total loan amount. What is the total interest we can calculate? Easy, na? Yes or no, ma? 100 crores into 12%, that is equal to how much, ma? 12 crores. And 75 crores into 14%, that is equal to how much, ma? 10.5 crores. So total interest divided by total loan amount into 100. So that is equal to how much, ma? 12.866 is the approx. Now this 12.866 we have to apply on 50 crores, 75 crores and 25 crores. But we have to see the time also. We have to see what, ma? Time. So easily we can solve, na? So 50 crores into 12.86. So 12 by 12, because at the beginning of the year itself we have taken. And 75 crores into 12.86 into 9 months, because we have taken on which date, ma? On 1/7/2025. And 25 crores into 12.86 on 3 months only we have to take, because we have taken on 1/1/2026. So this is how we have to calculate the general borrowing. This borrowing is called as what, ma? Capitalization nature. We have to add back to the qualifying asset. I think you understand the clear picture. There is a 2 types, ma. Even though some of the people not understanding, means they are not revised before. Okay, na? Water bottle bound intra babu. Sorry guys. And next, when to start, when to suspend and when to cessation. When to start means, so I can teach you with some of the questions directly. Okay, na? So suspension will be there, ma. What is the meaning of suspension? Means already you will do. Most of the people, they will do the silly mistakes in the mistakes in the classes, and they will be suspended for 1 week like that. So when to do the suspend means, sir, if you see the Raghuvaram BTech, ma. So if you see the Raghuvaram BTech, there will be a labor strike. Sir, labor strike is a fault of whom, ma? It is a fault of management. If the management is correct, the labor strike will be there or will not be there? Will not be there. So for that reason, it is a normal activity, abnormal activity, abnormal. If any abnormal activity come into the picture, means we have to suspend. What is the meaning of suspend, ma? In that period, we should not do the capitalization. In the remaining period only, we have to do the capitalization. From where to where we have to do the capitalization? From starting of the work. If you take the construction, so if you see these 3 dates, ma, so these 3 things should be done. Okay, na? Borrowing cost must be incurred, amount used for the qualifying asset, and necessary activities to be started. The 3 things we have to done, na? Only one, na, ma. 3 things. So take the latest date, ma, is sufficient. So 10th we have borrowing cost, we have incurred, ma. 10th we have incurred the borrowing cost, and amount used for which one, ma? Qualifying asset, and necessary activity we have taken on which date, ma? 15th, which is the earliest date. 3 things should be happen, only one thing, 3 things. So the 3 things is happened on which date, ma? 15th one. So we have to start at 15th January 2025 only. We have to start the add back to the qualifying asset. In the abnormal situations, we should not capitalize. In the normal situations only we have to capitalize. What is the normal situation means? See this example too, ma. For construction of a bridge started on which date, ma? 1st January 2025. From 1st April 2025 to 31st May 2025, there is a high tide, a part of the process. High tide means in some of the situations, the tides will be more. the tides will be raises in a high. This is a normal activity, ma. This is a normal sea flow. We cannot estimate. Okay, na? It is not in our control. It is called as what, ma? Normal loss. In this period, we should not do the suspension. In the case of labor strike only, we have to do the suspension. When to cessation, sir? When we need to stop. Cessation means what, ma? At which situation we have to stop means, sir, all the construction activities completed. The only pending is called as interior designer. So this interior designer will not going to consider. Okay, na? On what date the actual construction was completed, that date only we have to take the point. Okay, na? So what is the starting point, ma? We have to complete the three things. What are the three things we have to complete for the starting, ma? So must be incurred, should be utilized for the qualifying asset, and necessary activities must be taken. This is the starting point. When we need to suspend, ma? In the case of abnormal things, we have to suspend. In the case of normal thing, we should not suspend. What is the normal thing example, ma? High tide. What is the abnormal thing example, ma? Labor strike. When we need to stop, we need to stop after the construction. So okay, na? The remaining activities, the small activities like current supply, like interior design, we should not consider when the construction was actually completed. What is the meaning of construction means? The slab completed means it is a construction completed, ma. Okay, na? See this one, we will get a more clarity which we have discussed till now. Sir, the two major important points of these standards are, what are the two major important points? First one is called as what, ma? First one is called as general borrowing and specific borrowing. Second one is called as what, ma? When we need to start, when we need to stop, and when we need to suspend. These 2 points are important. See this one. So fastly I am read. T&L Limited, a large construction company which is presently involved in construction of a railway bridges over the Ganga River of Patna. The project cost is how much, ma? 1.5 crores. 40% of which was financed by the borrowing of Asian Development Bank. So out of 125, what is the 40%, ma? Can you say? So 50 crores only the loan amount, ma. So most of the people, they will take 1.5. Okay, no problem. Interest rate is how much, ma? T crores. There has been a delay in completion of the project. The project manager of the railway bridge construction site has identified the delay construction of the railway bridges has been happened due to the high water level. I have told you, high water level or high tide is a part of the process or a normal item, abnormal item. It is a normal. During that period, we should do the suspension. We should not do the suspension. We should not do the suspension. In this case, the work is suspended due to the temporary delay because necessary the part of the construction process. The capitalization of borrowing cost would be continue or should not be continue, should be continue. The most important question, this type of question they will answer, they will get in the examination. And next one is called as what, ma? Next one is called as specific borrowing and normal borrowing. See this one, ma. Purchase of equipment. Sir, purchase of equipment means ready-made or taking substantial period of time, ma. Purchase means it is ready-made, it is not a qualifying asset. So not a qualifying asset, yes or no, ma? So not a qualifying asset means we should transfer that interest to what, ma? That interest we need to transfer to the P&L account. Okay, now how much interest I will say you, no problem. Okay, now how much cost we have incurred, ma? We incurred the 19,50,000. And construction of a factory shed. Sir, construction of a factory shed means it is having a substantial period of time. It is called as what, ma? Qualifying asset. First try to identify whether it is a qualifying or whether it is not a qualifying. If it is a qualifying, we will transfer to the asset. We will add back to the asset. If it is not a qualifying, we will transfer to the P&L account. And next one what, ma? Advance for the purchase of delivery one. Sir, advance for the purchase. So purchase coming to the picture means it is not a qualifying asset. And working capital of rupees how much, ma? 13 lakhs. So working capital means normal operating. It is not an asset. For that reason, only the construction of a factory site is a qualifying asset. Remaining 3 things are what, ma? Not a qualifying asset. Now we have to identify the interest portion. What is your total interest, ma? The total interest they are saying is 11.7. So 11.7 lakhs, nothing but 11,70,000. The total 11,70,000 we have to divide into the 4 parts. How we can divide, ma? Based on the investments. What is the total investment? Can you say? 19,50,000 plus 26 lakhs plus 6,50,000 plus 13 lakhs. What is the total investment, ma? 65 lakhs. What is your total investment? 65 lakhs. So the 7 lakhs 11,70,000 interest belongs to how much investment ma? 65 lakhs. How much you have incurred for the purchase of equipment ma? 19,50,000. How much? So that means we can apply like this ma. The total interest is equal to how much ma? 65 lakhs. The 75 lakh we have to divided into the, we have to distribute to all the things like a weighted average. So 19,50,000 into 65 divided by 11 point into 11 in, 19,50,000 divided by 65 lakhs into 11,70,000 and 26 lakhs divided by 65 lakhs into 11.7 lakhs. So like that we have to divide. For this one, how much we'll get ma? 6,50,000 divided by how much ma? 65 lakhs, nothing but 10% into 11.7 lakhs, that is equal to how much ma? 1,17,000. So like that we are going to get this one. I think you have got the clear picture. We have to decide whether it is a qualifying asset or not a qualifying asset. Simple ma. This is a total interest, and if you add all the things, we will get the total investment. So we can easily divide the on a weight basis. On which basis ma? Weighted a proportionate basis we can divide. Okay na guys. So this is the total clear picture about what ma? AS 16. Okay na? We have completed AS 22, AS 16, and we have completed the insurance claims, and we have completed what ma? Branch. So okay na? So let me take a 10 minutes break ma. So after that we can continue, no problem, because you guys also will be tired. We can come back earlier. Okay, thank you for your participation ma. So break for 10 minutes, and again the class will be started, I will say. So how many minutes we can take ma? 10 minutes huh? ఏమంటారా? So guys, sir, I will discuss all the things sir. ఒరే ఆడ దొరికేవరా నువ్వు? Break for 15 minutes. So we'll come back at 8 ma. Okay guys, afterwards we can continue the discussion of standards. It will take 1.5 hours, that's all. Then after I will discuss partnership. Okay na? So please take for 15 minutes. I will come back at 8 o'clock. Thank you ma. Thank you. You also revise these topics. Okay, thank you. Okay guys, thank you for your waiting. So let us start. Okay, somebody is asking a hire purchase. Okay, we can see the hire purchase, no problem. First I will say the AS11 ma. So till now we have completed the two important standards. First one is called as AS22 and we have completed the another standard is called as, what is the another standard ma? AS16. So AS16, what are the two important areas? The two important areas about the general borrowing and specific borrowing, and second one is called as we have to identify whether it is a qualifying asset or not a qualifying asset. So thank you for waiting. If you come back, welcome back amma. So if you come back, we can discuss the AS11. Okay guys, AS11 we can discuss. Okay, I'm not going to use this one. Let us give me 1 minute. Okay, we can discuss AS1 also. AS11 ma, easiest standard, easily we can discuss, don't worry. Okay, so AS11, first of all we can get to know the meanings of this respective meanings. So first one, what is the reporting currency? The reporting currency is nothing but just a second. Reporting currency is nothing but in the financial statements which currency we have used, that is called as a reporting currency ma. So the currency which is used for preparation presentation of financial statements is called as a reporting currency. What is the foreign currency? The currency which is other than reporting currency is called as what ma? Foreign currency. And next one, foreign currency transaction. What is the meaning of foreign currency transaction? Means the transactions we are entering into the foreign currency is called as a foreign currency transaction. For example, I am located in India ma. I am going to enter a contract with Australian person. So from the Australia I have purchased what ma? I have purchased the computer. So now I need to pay in terms of dollars. So the transaction we have entered in terms of dollar is called as, dollar is not a reporting currency for us. For me the reporting currency is called as what ma? Rupee. So because even though my reporting currency is rupee, I have entered in what ma? I have entered in the foreign currency. So that is called as what ma? Foreign currency transaction. Oh, now these transactions we have to recognize at which price. Okay, now there are two types of recognitions, initial recognition and subsequent recognition. I will explain you, no problem. Then after there is a foreign operation. This foreign operation is related to the foreign branch. Any operation, any transaction entered by the subsidiary, associate or joint venture or branch of reporting entity is called as what ma? That is called as a foreign operation, because they are located in outside India, outside the boundary of the reporting currency, and they are doing the transaction with the outside persons. Those are called as operations, nothing but foreign operation. But in this standard, what is the important one ma? Foreign currency transaction is the important one. Next one, monetary items and non-monetary items. The items which are having the fixed value is called as monetary items ma. The items is not having the fixed value, it is called as what ma? Non-monetary items. What is the meaning of fixed value, sir? The value should not be changed. For which items the value will not be changed ma? So monetary means whether it is an asset or liability, we should not see. Okay na ma? So even though it is an asset or liability whose value is not changing is called as a monetary item. For example, debtor value is not changing, creditor value is not changing, and next one what ma? Bills receivable, bills payable, and next one cash balance, bank balance, the value is not changes. If you see the asset value will be changes because of depreciation come into the picture. For that reason, the things which are value is not changed is called as a monetary items. The things which are change in value is called as non-monetary items. Okay na? Please remember, this monetary and non-monetary will come into the picture only in the case of balance sheet items, will not come into the picture in the case of P&L accounts. I think you have got clear picture about the reporting currency, foreign currency transaction. These three are important, and next one monetary items and non-monetary items. So next comes the AS standard. So these three transactions basically will be discussed in the AS 11, but only focus on which one ma? We are going to focus only on foreign currency transaction. See this one ma. So how many types of recognitions will be there? Initial recognition and subsequent recognition. Sir, what is the meaning of recognition? Recognition is nothing but, so the transaction we are recording in the books of accounts, which value we have to record is the main point. What is the value we have to record is called as a recognition in the books of accounts. So initial recognition means always we will consider it as spot rate. So what is the meaning of spot rate, sir? So we are having the exchanges, foreign exchange departments. In the foreign exchange, $1 is specifying $1 is equal to 98 rupees. So it is called as foreign exchange rate. The transaction is happened on, for suppose 1/1/2026. So on this date, the transaction is actually happened. On this date, what is the exchange rate prevailing ma? The exchange rate is prevailing is equal to $1 is equal to 98 rupees. So this is called as spot rate. Nothing but the transaction happened date is called as what ma? Spot rate. If the spot rate is not there, they will give the opening rate and closing rate. So opening plus closing divided by 2, what we will get ma? Average rate. So spot rate or average rate, as a case may be. So both are there means which rate you will take ma? Spot rate. Okay, now if there is no spot rate, which rate you will take ma? Average rate. So initial recognition means, so the spot rate on the date of transaction entered is called as, that rate only we have to use for recording in the books of accounts. So what is the transaction entered? Till now, before example, I have taken what ma? Credit purchase. Yes or no ma? So credit purchase from the particular US person. So the purchase of rupees, they are saying $1 lakh. How much dollars? 1 lakh. What is the rate is prevailing ma? $1 is equal to 98 rupees. In my books, I have to record at which value? 98 lakh rupees only, because in my book, what is the reporting currency ma? Rupees. We have to convert the dollars to the rupees, and then I have to record how much amount ma? So 1 lakh into 98, that is equal to 98 lakhs I have to record. Sir, they are not going to ask you the entries. They are going to ask you how much amount we have to record in the books of accounts. That is only the main point. And next one, when coming to the subsequent, what is the meaning of subsequent, sir? On the balance sheet date, on the date of preparation of financial statements, at which value you have to record, because you know the exchange rate will be fluctuated. On the date of actual transaction, the rate, and the date of financial preparation of financial statement, the same rate will be there, different rate will be there ma? Different exchange rates will be there. For that reason, which rate we have to consider? Whether we have to consider the spot rate as on the date of transaction or spot rate as on the date of preparation of financial statement, which one we have to consider, we have to discuss. Okay nama? So subsequent, profit and loss items. What is the meaning of profit and loss items? The profit and loss item means nothing but incomes and expenses. The incomes and expenses, we have to use the rate which have taken at the time of initial recognition. So we should not change the rate at the time of initial recognition, that one we should not change. When coming to the balance sheet, I have told you now what are the two things from the balance sheet, monetary items and non-monetary items. For the monetary items, what are the monetary items? So debtors, creditors, bills receivable, bills payable, trade receivables, trade payables, cash balance, bank balance. So for these monetary items, we have to use the closing rate. What is the meaning of closing rate, sir? Closing rate means the rate which is prevailing at the date of preparation of financial statements is called as closing rate. So remember, for the monetary items, at the time of actual transaction, actual spot rate only, but at the time of preparation of financial statement, which rate we have to use, we have to use the closing rate. For example, our date of preparation is on 31st March 2026. Okay, na? So on this date, our rate is equal to $1 is equal to ₹100 $1 is equal to how much? 100 rupees. Now, he is a debtor or creditor, he will be a creditor. Our creditor opening balance, we have actually recorded how much, 98 lakh rupees in the books. How we have recorded 1 lakh into 98 rupees, that is equal to 98 lakhs. Now, as on the date of preparation of financial statements, our rate is equal to how much, 100 rupees. We have to take the closing rate because that is a monetary or non-monetary, that is a monetary item. So now, 1 lakh into 100 rupees, that is equal to how much, 100 lakh rupees we have to recognize. Okay, now actually how much amount you need to pay at the time of entering into that contract, at the time of entering into the contract, I need to pay only 98 lakhs. Now, as per the accounting concept of, as per accounting standard AS11, how much you need to pay, 100 lakhs. That means you are suffering a loss or you are suffering a gain, you are suffering a loss, because in the case of creditor point of view, if the exchange rate increases, you will get a loss. In the case of debtor point of view, if the exchange rate increases, we will get a gain. Are you getting the point? Because we need to pay the more amount. How much extra amount you need to pay, 2 lakhs? The 2 lakh will be treated as loss and should be transferred to which account, and should be transferred to the P&L account. So this is the most important. Okay, guys, simple. Next, non-monetary. What is the meaning of non-monetary, other than monetary is called as a non-monetary, because the value will be changes, value will not be changes, value will be changes. Simply imagine the fixed assets like AC, fan, like etc. Okay, carrying at a historical cost. What is the meaning of historical cost? They are carrying means there is no revaluation happen. If there is no revaluation, okay, actual take as on the date of transaction will be considered it as here also the same, nothing but spot rate or average rate, nothing but spot rate will come into the picture here also. Okay, guys. And next one, if your asset is revalued means updated value, for that reason updated foreign exchange value we have to take. That means what, closing rate. Are you getting the point, So we are having in the subsequent recognition 2, What are the 2 points, So monetary items, non-monetary items. So in the case of monetary items, we have to take the closing rate. In the case of non-monetary item, whether the revaluation done or not, we have to see. If the revaluation is not done, is called as hold rate. If the revaluation is done, we have to take what, closing rate. So this is only the important concept when coming to the which one, AS11. Now we are going to solve directly what, questions. We will get a more clarity. Okay, guys. Okay, I am opening. See this question, we'll get a more clarity. During the financial year 22-23, Z Limited of e-commerce firm enter into a foreign currency transaction relating to the fee for technical service. Sir, here the Z Limited, an e-commerce firm, sir, Z Limited means VMA. We are the Z Limited, we enter into the e-commerce firm of what, fee for technical service. That means we have taken a technical service, we have to pay to our creditor. So paid to the Lewis L Limited of Atlanta is based in organization of USA. So that company is located in the USA. That means we have to pay in terms of dollars. Now the L Limited is our creditor, L limited is our creditor. So now he will be a creditor. The creditor is nothing but what ma, whether it is a monetary, non-monetary, P&L item, balance sheet item, we should not consider ma. What we need to consider ma, we have to consider the initial recognition rate only. Okay, now the transaction for rupees how much ma, $24,000, which was entered into on 7/12/2022. What is the date of entering into the contract ma? 7/12/2022. The payment for the same was made on 25/2023. So the payment they are going to actually paying on 25/2023. So give the exchange rate on 7/12. Sorry, given that exchange rates on 7/12/2022 is how much ma? 73.80. What is the date of actual entry? This one only na. So on this date, what is the initial recognition rate ma? So easily we can say ma, 24,000 into that is equal to how much ma? 73.8. So how much we are going to get ma? 24,000 into 73.8. So that is equal to 71,200 ma. So this one is called as 17,71,000 is the initial recognition. Initially this much amount we have to pay to the creditor. We need to pay to the creditor ma. Okay. As on 1/1/2023, what is the exchange rate they are given ma? 73.95. On 31st March 2023, what is the exchange rate they are giving ma? 75.45. On 25/2023, what is the exchange rate they are giving ma? 76.5. What is the date of settlement ma? 25/2025 is the date of settlement. So this rate it will be useful at the date of settlement. But in between there is a year ending. What is our year ending ma? 1/1/2023 we cannot take it. So we have to take it as 1/1/23 or 31st March 2023, whether we can decide. Here they will say ma. So what is the financial statements year ending ma? 22/23 and 23/24. That means they are following financial year, calendar year ma. They are following the financial year. So we have to consider this rate. We have to consider this rate ma. Yes, we have to consider the 31st March 2023 rate. What is on the as on the rate 75.45, because the creditor is a closing monetary item or not a monetary item. The creditor is a monetary item. We have to consider the closing rate. What is the meaning of closing rate ma? As on the date of preparation of balance sheet, that rate only we have to consider. What is that rate ma? 75.45. So how many dollars we actual transaction ma? 24,000 into 75.45, that is equal to how much ma? 18,10,800. So initially 17,71,200. Then after how much it is happened ma? That one belongs to, that one transferred to the, so as on the balance sheet date 18,10,800. So this much amount only we need to pay normally, 17,71,200. But at the end of the section, how much I am going to pay ma? 18,10,800. So this is called as what ma? Loss or gain. So this is a loss because we are end up paying the more amount or less amount ma? We end up paying the more amount. So this loss will be recognized in which year ma? Will be recognized in the year of what ma? In the year of 22/23. What is the date of settlement ma? The date of settlement on 20th/5/2023. As on that date, what is the rate ma? Again 76.45. So again we have to see the exchange difference there. So 76.45. One second guys. So 76.45, where it is. So 76.45 we have to pay. What is the balance sheet amount we have declared ma? 75.45. The difference amount into 24,000, that is equal to how much ma? 25,200. The rate here increasing or decreasing ma? The rate here increases. For that reason we will get the loss or gain ma? We will get a loss. So in the case of creditor, the rate increases means loss. In the case of debtor, the rate increases means what ma? Gain. Okay na? Please remember, we need to transfer to the exchange difference to the P&L account. Which year ma? 23/24. The previous loss will be transferred to which year ma? In the case of 22/23. Difference between these two loss will be transferred to 22/23. The difference between these two loss will be transferred to 23/24. Separately we have to disclose. Okay na? From the date of purchase to the balance sheet date and the balance sheet date to the settlement date. So we have to consider what ma? Closing rate only, because why ma? It is a monetary or non-monetary. Sorry guys, it is a monetary item. We have to consider the closing. So this is only the logic in relation to the AS11. So there is nothing difficult ma. they may change this one as what ma debtor. In the case of debtor point of view, if you think that is also called as what ma monetary item only, but in the debtor point of view, we'll get a loss or we'll get a gain, we'll get a gain. So please try to understand this one. So this is only the main logic I am going to discuss now. Have discussion now. Next. So there is another example. Try to see this one. Exchange rate of goods purchased on 24/2/2022. $1 is equal to how much ma? 76.6. So as on the date of initial recognition, what is the rate we are going to consider? 76.6. So exchange rate on 31st March 2022, and the date of settlement is on which date ma? 56/2022. So the differences between these two items is will be considered in the year of 21/22, and the differences between these two items will be considered in the year of 22/23. So now exchange rate of goods purchased, they are saying goods purchased means what ma? Debtor or creditor? Here is the creditor, and again the value increases from here to here. So this is called as, again we are getting what ma? Loss. So the loss should be transferred to P&L account debit side. So we have to identify. So in the year of up to here, what is the loss we are going to get ma? Simple. 77 minus 76.6, that is equal to how much ma? 77 minus 76.6, that is equal to 0.4. So 0.4 into $10,000, that is equal to 4,000 loss we are getting. Yes or no ma? 4,000 loss we are getting in the 21/22. From here to here difference we have to transfer in which year ma? In the year of 22/23. What is the difference between these two ma? 77 and 77.5. 0.5 into 10,000, that is equal to how much ma? 5,000 rupees is the loss. Sir, here we have to must and should we have to mention what ma? Rupees or dollar in this standard. So please don't forget to mention rupees or dollars in this standard, because here they play the key role. If you write just the 4 lakhs and loss means they are not going to allow you the mark. You have to mention whether it is a rupee or a dollar. So these are the points. I think you clearly understand about the AS11. It is a difficult or it is a easy ma? It is a easy. Try to see which date rate we have to consider. It is a simple, whether they will give the debtor or creditor. In the case of debtor, exchange rate increases means gain. In the case of creditor, exchange rate decreases means loss. This is only the overall discussion about the AS11. And next I am going to explain the AS1. So it will take only 15 minutes. That's all. Sir, I will come to the AS10 also. No problem. Please be very patient. That's all. Sir, AS11, AS1. What is the full differences you have to study? So don't leave the differences before going to the exam. Sir, how to present the answer? The presentation of answer is very simple ma. So you have to write the provision. So you have to put the headings. First write the provision, analysis and conclusion. In the provision, what you are going to write, for suppose AS11 means as per AS11 it is a monetary item. Okay na? In the case of initial recognition, we have to use what ma? Spot rate. In the case of subsequent recognition, because it is a monetary item, we have to use the closing rate. Because of that, we are getting an exchange difference. That exchange difference will be transferred to P&L account. If it is a profit, will be transferred to credit side of P&L account. If it is a loss, will be transferred to the debit side of P&L account. Like that only you have to write the provision. And analysis. So as per the given scenario, here is the creditor, he is a monetary item. The conclusion, loss or profit. So please try to maintain three side headings in order to presentation of answer. Will get a more marks. Okay na? So once again, provision, analysis and conclusion. Or try to maintain the provision and conclusion also if it is sufficient. Okay na guys? So don't forget to maintain the side headings. Okay na? I think, did you get the answer? Robin. Okay, next the simple one, accounting standard number 1, disclosure of accounting policies. Sir, disclosure of which one ma? We have to disclose the accounting policy. What is the meaning of policy, sir? The principles and methods which are used for presentation of financial statements is called as accounting policy. First of all, if any point they are asking about the AS1 means, first of all you have to disclose that one. Sir, what is the meaning of accounting policy is nothing but the principles and methods which are used for presentation of financial statements. What is the principle, sir, and what is the method? There is slight difference between the principle and method. I think you all know closing stock will be valued at cost or what ma? Market value, whichever is lower. So this is a principle. This is called as what ma? Principle, not our college principle or school principle like that. This is like a principle. So here For calculation of stock, we are having the so many methods. So closing stock is nothing but we are going to call it as inventory also. In the costing, for calculation of inventory, we are having the different methods: FIFO, LIFO, weighted average, simple average, like that. So this cost calculation, we are having the methods. So we have to show at cost or market value. This is a principle. So like this you have to go on. Okay na? So I will discuss in a slower manner only. Whatever the discussion completed, we will get the knowledge. So trust me, I will discuss the partnership also. So let us try. So sometimes they will ask the question, what are the areas you are going to apply the accounting policies? So tell me what is the meaning of accounting policy, and give the examples of areas which you are going to use the accounting policies. So which areas we will use ma? Just now I have discussed the valuation of inventories, and there is a methods for depreciation also. So what is the method of depreciation ma? SLM WDV. What is the principle, sir? Sir, closing asset will be valued at what ma? Original cost minus depreciation. That is a principle. What is the method for depreciation? SLM, WDV. That's all the methods. And next, treatment of goodwill. So treatment of goodwill also we are having the so many methods: super average method, super profits method, average profit method, and we are having a capitalization method. So like that. So they are. Remember these 3 points and try to write these points is sufficient, because the 4 marks will come into the picture, because 1 mark is for full meaning, and 3 marks for 3 things. So methods for depreciation, valuation of inventory, and disclose treatment of goodwill. You can remember the valuation of investments also. It is a great thing. Okay na? So this is the overall discussion about the accounting policy meaning. And next one, objective. Sir, why all the standard objectives are same? For the better presentation of financial statements and for the comparison of the financial statements of one company with another company. See this one ma. The purpose of this standard to promote the better understanding of financial statements by the end users, and comparison between of one company financial statements with the another company. Why, sir? If we are following the same method of presentation, means it is easy to compare one company with another company. If each company is following the different way of disclosure, means it is difficult to compare. For that reason only accounting standards come into the picture. Okay na? I will show you the what is the differences between AS and Ind AS also. Please wait a second. And next one, there are 3 fundamental accounting assumptions. What is the meaning of fundamental accounting assumptions, sir? These are the assumptions which are going to follow by each and every entity. Okay na? Without these fundamental accounting assumptions, we cannot do the accounting also. What are the fundamental accounting assumptions, sir? Going concern, consistency, and accrual. If these fundamental accounting assumptions you are not following, means then only you have to disclose. Otherwise, no need to disclose. If you are following, no need to disclose. You are not following, means you have to disclose. What is the meaning of going concern, sir? Business will go forever in the foreseeable future. Please remember what is the sentence ma? Business will go forever in the foreseeable future without any barriers. So what is the meaning of foreseeable future? Means nothing but 1 year from the date of preparation of financial statements. So from the date of preparation of financial statements, the business will be in the next year also. For that reason, for the purpose of going concern only, we are having the 2 types of transactions. What are the 2 types of transactions? Capital transaction and revenue transaction. If the business is running only 1 year, means there will be only the revenue transactions. Yes or no ma? Benefit more than 1 year means it is called as what ma? Capital transaction. Benefit less than 1 year means it is called as what ma? Revenue transactions. Are you getting the point or not? So next one, consistency. What is the meaning of consistency ma? If you take the example of the Virat Kohli in the previous series of South Africa, what he has done ma? First match 100, 154. I am not clearly about the score ma. 134, 100, and again half century. He has done the winning to the Indian. So he is consistently performing. He is not consistent here. That means based on comparing to the previous match. So now we are going to compare the another score. So okay na, what done the century, here also done in the century. It is he is showing what ma? Consistency. In the same way, what is the meaning of consistency? Means the principles and methods which are used in the previous year, we have to use the same. Okay na, that thing only all the companies will do. If they are violating the changes in the conditions, changes in the principles and methods, then you have to disclose. Sir, here there are 3 permutations where we can change the methods and principles. So we can change when there is a statutory requirement. So what is the meaning of statutory requirement, sir? Generally, in the depreciation, we are using SLM method. Okay na? But as per the taxation, which method we have to use ma? We have to use the WDV method. So based on the statutory requirement, we are changing the SLM method to WDV method. It is possible, it is not possible. Yes, it is possible as per the requirement of statutory requirement. And next one, for the compliance of accounting standard. In the inventory valuation, generally LIFO we are following, okay na? But as per accounting standard, LIFO is not accepted. Now what you need to do, you have to change LIFO to FIFO, weighted average, like that. So for that reason, so we can change or we cannot change. Yes, you can change, but you have to disclose, you should not disclose, you have to disclose. And next one, for better and appropriate presentation of financial statements. For the better presentation of financial statements when comparing to the two different companies, so another person is doing WDV, I am doing the SLM. So for the comparison purpose, so other companies doing WDV, I also change it to WDV, sir, because for the better presentation financial statements and better understanding to the financial users. So because of these three reasons, we can change the accounting policy. So thank you. Are you getting the point, ma? I think you have got the clear picture about the going concern consistency. What is the accrual? You all know what is the meaning of accrual, ma? So income earned and expenditure incurred we have to see. So for that reason only outstanding and income receivable will be considered. So all the things you know. And next one, consideration for selection of accounting policy. So here I am not going to skipping this concept, ma, because whatever the points I have discussed, if these fundamental accounting assumptions you are following means, okay na, you need to disclose. You are not following means you have to disclose. Those things only will be there here also. And next one, okay sir, you are saying the principles and methods we have used. Which principle and method we have to select, sir? So primary consideration and secondary consideration will be there. What is the primary consideration, sir? We have to use the principle and method which are true and fair view to the financial statements. What is the meaning of true and fair view, sir? So true and fair view is nothing but as per the accounting standards. If you are following as per accounting standards means your financial statement is showing true and fair view. You are not following the accounting standards means your financial statement is not showing the true and fair view. That means as per the accounting standards you have to select either policy or method. Okay, next one, secondary consideration. You have to see these three consideration: prudence, substance over figure form, and materiality. What is the meaning of prudence, sir? Sir, prudence is saying the two activities. Please remember. So normally the provisions we have to create for the known liabilities and known expenses, but not the known assets or incomes. Okay na? Not only this provisions creation they are saying by the prudence. Prudence is also showing inventory must be valued at cost or market value, whichever is lower. Who said this principle, ma? Prudence only. Okay na? Remember this point. Most of the time they are asking as an MCQ in the examination. Okay na guys? So prudence is saying not only the prudence saying about the creation of provisions, prudence also saying what, ma? So inventory must be valued at cost or market value, whichever is lower. The 2 points are discussed by the prudence. And next we are going to see what, ma? Substance over legal form. What is the meaning of substance over legal form, sir? In the hire purchase, as you all know, so we are having the hire vendor and hire purchaser. So who is the real owner of the hire purchase, ma? Hire vendor only. So up to on the last date only the ownership will be transferred to hire purchaser. Even though as per the legal terms the real owner is hire vendor, we are going to treat the asset in the hands of what, ma? The asset in the hands of hire purchaser. For that reason only we are going to record what, ma? Asset in the hire purchaser books. So here legality is not important, substance is important. So prudence and substance over form completed. Next one, materiality. What is the meaning of materiality, sir? The important items we have to disclose separately. If you see the balance sheet or P&L account, any item, sometimes we are going to see the miscellaneous expenses and miscellaneous incomes. So why they are going to categorize it as a miscellaneous, sir? Because that is immaterial for that people. How we can identify whether it is a material or immaterial, sir? There is a criteria, 1% of the turnover or 1 lakh, whichever is higher. Whichever is what, ma? Higher. For example, my turnover is equal to 10 crores, ma. 1% means how much, ma? So 1% means nothing but 1 lakh. 1 lakh or 1 lakh, whichever is higher means 1 lakh. So 1 lakh above expenditure or 1 lakh above income, we have to show separately. Separately means what, ma? So to car expenses, to petty expenses. So petty expenses is also more than 1 crore means we have to show what ma separately. If any expenditure is less than 1 lakh, what we need to do ma, we need to transfer that amount to the miscellaneous. If it is in expenses means we have to transfer to the miscellaneous expenses. If it is income means we have to transfer to the miscellaneous income. So this is the overall picture about the selection of accounting policy. How many categories are there ma? 2 considerations. Primary consideration, we have to see the true and fair view of financial statements, and secondary consideration, we have to see the prudence concepts, substance over legal form, and materiality. They will ask the theoretical question, easily you can overcome. Okay na guys? So please remember this limit, 1% of the turnover or 1 lakh, whichever is higher, whichever is what ma higher. In the insurance, all the limits are what ma lower. Here all the limits are higher. And next one, disclosure. What you need to disclose, sir? Okay, sir, you are doing a wrong thing and you are disclosing, then it will be correct. No, you are doing a wrong and disclosing, it is not a correct ma, it is a wrong only. Okay na? So it is like in a code they are saying we are doing a wrong thing and we are saying I don't know sir, so please excuse me, I don't know law. The law will excuse in the same way here also. If you are doing the wrong thing and disclosing means it is not a correct. So what you need to disclose, sir, means you have to disclose material effect on the changes, not only the current year, in the previous year. And where you need to disclose, sir? You need to disclose in the notes to accounts. So please remember this point when coming to the disclosure point of view. So which one we have completed ma? AS1 summary, accounting principles we have discussed, primary consideration, secondary consideration, and next one what ma? Fundamental assumptions, going concern, consistency, and accrual are the fundamental accounting assumptions. So remember, so until now we have completed the which are the standards ma? Small standards we have completed. So AS1 we have completed. Just a second, my pencil is not working. So we have completed the AS1, AS11, AS16 borrowing cost, and then we have completed which one ma? AS22 also we have completed. Now what are the standards we have pending means 10, 11, 10, okay, 10 we have left it off. We are going to discuss the standard number 10, and then I will discuss the important standard is called as leasing ma. Sorry, 10 hire purchase leasing. Okay, now like that we can discuss. If you know the hire purchase, easily we can identify the leasing also. Okay, sir, what is the AS10 is saying about? Property, plant, and equipment. Sir, normally in the previously there is a 2 standards will be a separately. Okay na? So there is a depreciation standard, there is a separate standard. So they are merged this depreciation into the PPE also. So we are going to discuss the 2 topics here itself. Okay na? What are the 2 topics are? Property, plant, and equipment standard, what we need to recognize, what value we need to recognize, and all the things, and then what we need to right ma, we need to discuss about the depreciation, what are the types, and all the things we can discuss here itself. So please be very patient, it will take nearly half an hour, so I will complete it, no problem. If you understand this one, easily we can understand the government grant AS11 also. So straight away after completion of this one we can go to the AS12. Okay na? AS10, AS12 hire purchase and leasing. So if you complete whatever the time, we will take the break. Afterwards I will come and I will start the partnership. Okay na guys? So let us take ma. AS12. Okay, now if you understand AS10, then only you will understand the AS12 ma. For that reason, I am not going directly climbing to the AS12. Okay, now that is the reason. Okay, now so please be very patient. Sir, here PPE means which are the points we are going to consider it as PPE is the main point ma, first of all. So PPE is an asset, sir. Here when coming to the scope. Okay, first meaning of meaning of property, plant, and equipment we can discuss. Nothing but fixed asset ma. Nothing but is called as what ma? Fixed asset. Sir, any tangible property held for an organization is called as a property, plant, and equipment. Okay na guys? So in the assets we are having the so many types. What are the so many types? Current assets, non-current assets. Okay na? In the non-current asset also again we are having the 2 categories mainly: tangible assets, intangible assets, and we are having the we are having some more types also we can discuss now. So tangible property they are saying intangible ama. tangible. Tangible means only tangible property will come into the picture. Intangible, there is a separate standard. Okay na? So tangible, held for the use in the production process, supply of goods and services, or rental. So we can use that for particular fixed asset, we can use for production, we can use for supply of goods, or we can use for rental purpose or administration purpose. Okay na? We can use for any for the purposes. And estimated, expected to be used during the period of more than 1 year. We have to use for a period of how many months? More than, not held for sale normally in the course of not for the held for the sale, we have to use for normal course of business. So if these conditions are satisfied, then only we are going to call it as what ma? Property, plant and equipment. Once again, the property, plant and equipment means tangible one only, and next one we have to use for production, administration, rental purpose or administration purpose, use for more than a period of 1 year, and then we have to use as a used for the purpose of business, not for the sale. If you are using for the purpose of sale means it is called as what ma? Good. It is not a property, plant and equipment. Which asset ma? Tangible or intangible? Or tangible. And now, and again there is a scope. They are saying all the tangible assets, all the tangible fixed assets are not a property, plant and equipment as per the property, plant and equipment. There are some include items is there, there are some exclude items also there. So the standard is applied on accounting for property, plant and equipment, but not applicable. Scope means not applicable ma. It is not applicable on biological assets related to the agriculture. Sir, biological assets means nothing but we can take the buffaloes, we can take the plants, okay na, small plants, giving a life of less than 1 year, giving a life of more than 1 year. All the assets, those are all called as what ma? Assets. Without using those one, we cannot produce the food grains like that. Yes or no? So here also there are tangible. For that reason, the tangible one, there is an exclude. What are the exclude ma? Biological assets related to agriculture activities other than bearer plant. Bearer means nothing but the bearer plant life will be is more than 1 year ma. For that reason only they are excluding from the exclude. That means what ma? The bearer plant is called as including. Bearer plant is called as what ma? Including. And next one, vesting assets. So what is the meaning of vesting asset? Anything related to the natural resources. Natural resources means gold, mineral oil, expenditure for exploration and extraction of a mineral oils, natural gas. So these items are also called as tangible only, but it is not covered under the property, plant and equipment, because so which are not covered having a different standards, standards. Once again, what is the property, plant and equipment? You know, tangible one, but there is an exception. Biological assets not covered except what ma? Bearer plant, and there is what ma? Vesting assets also not covered, because what ma? These two items are also tangible only, but they are not covered because having a different accounting standards. That's all. Okay na? But which one is including ma? Bearer plant. Now we are going to see what is the meaning of bearer plant. Sir, bearer plant is nothing but from the bearer plant our benefit is more than 1 year ma. If you take an example of coconut tree, the coconut tree will provide the coconuts more than a period of 1 year. So if I take in my childhood example, from the childhood onwards the coconut tree is available ma in our home. Okay, now also it is there. So nearly 20 to 24, 25 years the coconut tree is available. That means usage is more than 1 year, less than 1 year, more than 1 year. Because of using the tree only we are getting what ma? Agriculture produce like coconuts. Here the standard is applicable on the coconut tree, the standard is not applicable on the coconuts. In the same way mango tree, in the same. But if you take the crop of wheat, it is not possible. So without plucking the wheat crop, we are not going to get the wheat. For that reason, wheat is not a bearer plant. Okay na? The plants which are having the more than period of 1 year and they are going to give the agriculture produce, it is called as a bearer plant. Okay, but you have to write in the sentences in the examination. So sometimes they will give the bearer plant for 4 marks. How will write, sir? So use it in the production and supply of agriculture produce. It is a first one you have to write the sentence is called, it is a biological asset, it is used in the agriculture produce, okay na, and used in the supply and agriculture produce, used in the supply and agriculture produce. Next one, how many months ma? For a period of more than 12 months. In a remote likely, it can be said like a agriculture produce except like a incidental scrap. You have to remember this, only this point is sufficient. First one, it is a biological asset, it can use it for supply of agriculture produce. And next one, we are going to get the what ma? We are going to get the produce for a period of more than 12 months. And next one, in the remote means nothing but the life, after completion of life also, we have to sell like a agriculture produce. That one we should not sell like a scrap. That means if you're cutting off the coconut tree, we can sell the wood as an agriculture produce only. Yes or no? For that reason, however, the standard does not apply on the produce of the bearer plant. What is the meaning of produce of the bearer plant? Coconut tree, coconuts, mango, mangoes. Okay, because the mangoes and the coconuts will be forming part of goods, because we are going to sell in the market, we are going to get the revenue from the market. So now you got the clear idea about the what is the meaning of property, plant and equipment. And next one, okay, now scope and what is the meaning of bearer plant. If you understand this one, then only we can go to the accounting treatment. Now recognition criteria, this is the most important. Recognize means what, at what amount we have to recognize in the books of accounts. So it is possible in the future economic influence related to such asset, the cost of the asset. Okay na? Here we may acquire that particular tangible asset in different forms, sir. What are the different forms, sir? We can acquire by way of giving what, by way of giving the cash. Okay na, by giving the cash in the return. Okay na, we can acquire, or we can acquire by way of what, exchange of another asset, or we can acquire what, we can acquire the asset by way of giving the shares. There are three possibilities how we can acquire. The first one is we can acquire by way of cash, giving the asset back. It is a common, giving the asset back is common. We can acquire by way of cash, or we can acquire by exchange of asset. And next one, we can acquire by way of giving the shares. These are the three situations we have to recognize. At which value we have to recognize? Sir, the asset means all the expenses which we have incurred for the purpose of asset, we have to add back. It is called as capital expenses, all you know. As a no, for example, at the time of purchase of asset, we have incurred the transit expenses, we have to add back. Okay na? At the time of acquiring the asset, for installation we have incurred a certain expenses. What we need to do, we have to add back to the asset. That only the one addable items will be there. See this one, see this one. So consideration in the form of what, consideration in the form of cash. So what are the items will be there, for initial purchase price we have to less the trade discount. The trade discount will not be recorded in the books of accounts, I think you all know. Okay na? And next one, we will get the actual purchase price. So government grant we have to reduce, sir. Because why, sir? So you will get the more clarity of this account. Sorry guys, government grant in AS12. So as of now, remember, government grant we have to reduce. And next one, freight we have to add back. Non-refundable taxes we have to add. Refundable taxes we have to less. Okay na guys, remember, non-refundable taxes we have to add and refundable taxes we have to reduce. And next, all the direct expenses. What is the meaning of direct expenses, The expenses incurred for bringing the asset into the current location or condition, means get ready to use. Whatever the cost we have incurred for get ready to use, we have to add back. And next one, present value of demolition charges. In the case of what is the meaning of demolition charges, So in the future, if you want to construct the one more asset on there, what we need to do, we have to demolish the particular asset. That future expenses belongs to this one only. For that reason, the present value of demolition cost of future we have to add. So generally this point will not come into the picture. Okay na guys? So if they given means we are going to add. Next one, borrowing cost. Borrowing cost AS16. Till now we have discussed the borrowing cost. Any interest is considered on what, qualifying asset. What we need to do, add back na. That is only the point. Simple ma. Trade discount we have to reduce, grant we have to reduce, refundable taxes we have to reduce, and non-refundable taxes we have to add, direct expenses we have to add. And next one, what, freight is nothing but the transit expenses which are used for bringing the asset into the present location or condition. And next one, present value of demolition charges and borrowing cost. This is the calculation we have to do. So this is the most important calculation. On this they are going to ask the questions, okay, in the examination. Okay na? Please remember, this is a exchange in the form of what, cash. We are giving the asset, we are bringing what, cash. We have to remember these points. Okay na guys, simple we are going to complete. Conditions for the other than cash. Consideration in the form of other than cash. We can exchange in the form of other asset, or we can exchange in the form of issue of shares. Simple okay na? Okay. Generally the cash what we have paid we will consider, yes or no? In the same way, while exchanging the another asset, what is the asset you have given now, that value only we have to consider. For example, I am taking back what, AC, air conditioner, and I am purchasing the air conditioner and I am giving a benches as a, the benches value is equal to 1 lakh. So which value will consider? Whatever the asset you have given, that value only will consider. The asset given we will consider. In the case of shares also same. Whatever the share value we are giving, that value only we consider. But which value we have to consider? We should not consider the book value. We have to consider what fair market value. We have to consider what fair market value. So remember, there is a having a commercial substance, there is not having. So remove all the things. Just simple trick. Whatever the cash we are going to pay in the future, that cash paid value only we are going to record in the books of accounts. Here also, which asset you have given, that value you have to get. If that value is not available now, I think you know the asset taken value means you will consider both also. In the both the values you are having means asset given you have to take. In the both the values you are having in shares given you have to take. Which value fair market value or cost fair market value we have to see. Okay na? Fair market value, fair value of asset acquired or fair market value asset issued, whichever is clearly evident. In the case of both, the having a fair value of shares issued. Okay na? This is called as recognition, initial recognition. This is called as with recognition initial. When coming to the subsequent, okay na, cost model means what we need to reduce. There is a principle, you know, cost of the asset minus depreciation. So cost of the asset minus accumulated depreciation and minus impairment loss. Sir, what is the meaning of impairment loss, sir? Impairment loss is nothing but as per our fair market value, our asset value is equal to 50 crores but as per our books of accounts, book value we can say our book value is equal to 100 crores. So in the fair market, we can take the reverse, sorry guys, is only having 25 crores. Here how much loss you are going to get? So if you recognize at a fair market value, you will get a 50 crores, but you are getting only, end up of showing only how much 25 crores. The differences between these two is equal to how much now? 25 crores is a positive one. So here the difference is more when coming to the fair market. It is a loss. It is a loss. That loss also we have to less. So this is called a subsequent easy Initial means at the time of purchase. If you purchase it for cash means you have to see all the points. If you purchase for shares means what is the share value you have issued, the fair market value. If you purchase for other asset means what is the asset you have given, that value you have to consider. Simple points. Okay na guys, I think you have clearly gone to see. Revaluation means after the revaluation, if there is any depreciation means we will consider, and after the revaluation if there is any impairment loss we will consider. And next one, depreciation methods. And what are the depreciation we have to see? So we have to see now. I think there is any, is there any clarity Sir, I will discuss, sir. Don't ask like that single entry. I will discuss how many times you have done the single entry. So accounting standard is very important Please focus on the things which we have discussing. I am discussing like a regular class. I think you know means it is sufficient. Now we are going to see the depreciation models So I will complete it off in a easier manner, because depreciation may ask for how many marks 7 marks. This time they will ask or they will not ask means I don't know, but this my badhyata, I think so. I will complete no problem. So we are having a different methods for depreciation. First one SLM, I am not going to discuss anything because all you know, and WDV is also know. And next one what sum of year digits method, mission hour methods, production units method, and depletion method. I will discuss these 4 methods because sometimes they will ask for how many marks straight away 7 marks. Okay na? So straight line method, if the rate was not given, what is the formula original value of asset minus scrap value divided by estimated life of the asset. Sir, rate is not given, then only you have to calculate this one. If the rate is given, straight away on the original value of asset we have to calculate plus. But remember for the initial stage means what at the stage of purchasing the initial year, purchased year, we have to see the purchase date. We have to see what purchase date. Sometimes we may purchase at beginning of year, at the end of the year. So like that we have to consider, and proportionate months only we have to calculate depreciation. So remember that point, that's all. I think you all know this is wasting of time. I am discussing the SLM and WDV. Next, mission hour rate So remember this formula in the mission hour rate, original value of asset minus scrap value divided by life of asset. Life of asset in hours, not the life of asset in years. If the life of asset in years means that is called as what ma? SLM method. Life of asset in hours means that is called as what ma? Mission hour rate. See this one, a mission which was purchased on purchased for how much ma? 30 lakhs, which estimated total working hours is equal to how many hours ma? 24. The scrap value is equal to 2 lakhs. Now how we can identify ma? 30 lakhs minus 24, sorry, 30 lakhs minus 2 lakhs divided by 24,000 hours, that is equal to how much ma? So we are going to get per hour ma. So we are going to get the per hour. So we are going to multiply with the 300 hours. We are going to multiply with the 2600 hours. We are going to multiply with the 1800 hours. Can you say the value of 30 lakhs minus 2 lakhs divided by 24,000? 30 lakhs minus 2 lakhs divided by 24,000 hours. That is equal to how much ma? Can you say the value ma? Okay, I have got it. 116.67. This is the depreciation rate per hour. So in the first 3 years, how many hours I am using ma? 3000 hours. So 116.67 into 3000, that is equal to how much ma? 35,000. If you round it off, how much we are getting ma? 35,000. So 35,000 in the year 1, 35,000 in the year 2, 35,000 in the year 3. There is depreciation. From the second 4, 5, 6, what we need to multiply ma? So 116.67 into 2600. For 7, 8, 9, 10, 116.67 into 1800. So that is only different point. So remember what is the formula ma? Original cost of asset minus scrap value divided by life of asset in hours. Next one, production units means, so same ma. Original value of asset minus scrap value divided by estimated number of units in production. Production units we have to see. So here they will give the production units, there they will give the hours. That's all. Okay na, production units method. And thank you Robin. Next one, depletion method. So depletion method means depreciation is equal to units of output into depreciation per ton. How will you get the depreciation per ton ma? Total cost of asset divided by total estimated total output in terms of tons. Okay na? So if you do this one, what we will get ma? We will get the depreciation per ton multiply with the number of outputs. So if you see this one, you will get the more clarity. So lease in the quarry, how much ma? Total 1 crore. So 1 crore rupees is the total cost of the asset. As per the technical, there is a total quantity of minerals, how much ma? 2 lakhs. So 1 crore divided by 2 lakhs, that is equal to how much ma? 50 rupees per ton is the depletion. 50 rupees into how many tons in the 2019 ma? 2000. So 2000 into 50, that is equal to how much ma? So 2000 into 50 for the first year, 10,000 into 50. So 2000 into 50, that is equal to 1 lakh. So 1 lakh in this year, and 10,000 means 2000. 50 into 10,000, that is equal to how much ma? 5 lakhs. 15 lakhs into 15,000 into 50, that is equal to how much ma? That is equal to 7,50,000. So like that we have to calculate the depreciation. So depreciation is not much more important for tomorrow's exam. If they have, sometimes they will give the component method of depreciation. What is the meaning of component method, sir? For each and every component they will say the cost. For each and every component they will say the life. So separate we have to do a, combinedly we have to do a, separate only we have to do. See this one, ABC Limited purchased a motor vehicle. What is the total cost ma? 70 lakhs on 1st April 2024. Full year, half year ma? Full year, because at the initial stage only they have purchased. The major component of the components of the motor part containing what ma? Main body costing how much ma? 20 lakhs. Seating arrangement and finishing costing how much ma? 30 lakhs. And engine costing how much ma? 20 lakhs. Here we are having the 3 main parts, and the 3 main parts cost also separately they have given, and combinedly how much ma? 70 crores, 70 lakhs. The expected useful life of these components of the main body is equal to how much ma? 5, 6 and 7. Separate they have given ma? Separate only we have to do. So 20 lakhs divided by 5 years, and next one 30 lakhs divided by 6 years, and 20 lakhs divided by 10 years. So separate only we have to do, and combinedly we will get what ma? Depreciation. Separate component wise they have given means we have to do the component wise only. Okay na guys? If they given the total means we have to do the total. So this is also separate method of depreciation. So please check when going to the examination. And next one, revaluation, you know. So here please be very careful. The revaluation will be useful for the partnership also. Okay na? The revaluation, upward revaluation and downward revaluation. What is the meaning of upward revaluation, sir? Our book value is equal to 1 lakh ma. We are going to revalue to the market value. Our market value is equal to 1,50,000. Now we are doing upward revaluation or downward revaluation ma? Upward revaluation, because 50,000 increasing. So increasing the asset means asset having which balance ma? PPE we can call it as here. So PPE having which balance ma? Debit balance. If the debit balance increases, what we need to do? Debit. And this is a profit or loss ma? This is a gain, should be transferred to the revaluation reserve. So if the upward revaluation means the entry we are going to get what ma? PPE account debited to revaluation reserve. The market value is more than the book value. If the market value is less than the book value means it is called as what ma? Downward revaluation. In the case of downward revaluation, the loss should be transferred to where ma? The loss should be transferred to the P&L account. What is the entry ma? P&L account debited to PPE account. Okay na guys? So trust me, I will be up to the 12 o'clock. So please be focused up to the 12 means 12 sufficient. If you sleep and early morning, you can revise what ma? You can revise the MCQs and you can go for the examination. Trust me, whatever the questions I am discussing, those questions only will come into the examination. I am discussing with the concept. For that reason, it is a taking time. That's all. So, but there is a concept like first time it is upward and second time it is downward. Okay now, first at the time of doing the revaluation, first time revaluation it is upward ma, and second time revaluation it is a downward. Okay na? So the cost of the mission is equal to how much ma? 10 lakhs, and life is equal to how many years? 5 years. So here depreciation under which method they are following ma? SLM method. So this type of calculation, remember, it is very useful at the time of AS12 ma. Okay na? So after 3 years, the machinery revalued at how much ma? 5 lakhs. What is our book value after the 3 years? Can you find out easily, sir? So 10 lakhs. There is no scrap value, minus 0 divided by 5, that is equal to every year how much ma? 2 lakhs. So 3 years we have completed. So 3 into 2 lakhs, that is equal to how much ma? 6 lakhs is depreciation. What is our book value? Our book value is equal to 4 lakhs. Yes or no ma? Because book value. Now the book value is 4 lakhs and the market value is equal to how much ma? 5 lakhs. It is called as downward revaluation, upward revaluation. It is called as upward revaluation. So what is the entry we need to pass ma? PPE account debited to revaluation reserve account. Subsequently it will be downward. So we can see. And see this one. Again the machinery revalued at the end of 4th year. So this is the scenario about the end of 5th year. About the end of 3rd year. This is about the end of 4th year. Sir, here now the value of asset is changes na, and again we have to calculate the depreciation. 2 lakh rupees only will be continue. We have to calculate the depreciation, sir, because when there is any changes in the value of the asset, any changes in the life of the asset, and again we have to calculate the depreciation. It is a there are two methods ma. What are the two methods means in the previously there is another accounting standards AS6, there retrospective effect will be there. Now we have to see the prospective effect. What is the meaning of prospective? Means from the date of change. So here if you see the value is again changes to how much ma? 5 lakhs. There is no scrap value. And what is the remaining life we have to see? What is the remaining life ma? Total years is 5 years. The remaining is only 2. So divided by 2, that is equal to how much ma? 2,50,000. Previously what is the depreciation per annum? 2 lakhs. Now what is the depreciation per annum ma? 2,50,000. When there is a change in the value, we have to calculate again. Okay na? Changed value minus scrap value divided by remaining life. Remember this point is very much useful for the AS12. Now the book value of the 4th year is equal to how much ma? 5 lakh minus 2,50,000. That is equal to how much ma? 2,50,000. But they are going to reevaluate three cases. In the first case, what is the market value? 2 lakhs. In the second case, what is the market value? 1,50,000. In the third case, what is the market value ma? 1,25,000. So please remember, first time upward and second time downward ma. So in the case 1, what is the market value ma? 2 lakhs. So what is the loss we are getting? 50,000. Our book value is how much ma? Our book value is 2,50,000. Now 2,50,000 to we are bringing to 2 lakhs. That means we are getting a loss of rupees how much ma? 50. Normally downward means which entry we need to pass ma? P&L account debited to PP account. But now we have to reduce, we have to set off this loss with the revaluation ma? Revaluation reserve. At the time of first time, what is the entry we have passed ma? Revaluation reserve. How much amount is there? 1 lakh. Up to 1 lakh we can set off with the revaluation reserve, and remaining amount we have to transfer to the P&L account. Now if the revaluation reserve decreases means what we need to do, ma? We need to record on the debit side, and the asset decreases means what we need to do, ma? We need to record on the credit side. Which entry we are going to come into the picture, ma? Revaluation reserve account debited to PP account. This is a case 1. Case 1 is not depend upon case 2, ma. Case 1 is a different one and case 2 is a different one. And what is the case 2 they are saying, ma? Case 2 is equal to how much? 1,50,000, ma. Case 2 is equal to 1,50,000. What is our book value at the end of the third year? Our book value at the end of the fourth year, we have to say. Sorry guys. At the end of the fourth year is equal to how much, ma? 2,50,000. But they are going to revalue to how much, ma? 1,50,000. We are getting a loss of 1 lakh. Up to 1 lakh we can set off with the revaluation reserve, na? Then what is the entry we are going to get, ma? Revaluation reserve account debited to PP account. Okay na guys? I think you have got the clear picture. So 1 lakh. If you see the third case, what is the revaluation amount, ma? They are going to revalue at 1,25,000. What is our book value? 2,50,000. 2,50,000 to 1,25,000 means what is the loss we are getting, ma? 1,25,000. Up to the 1 lakh we can set off with the revaluation reserve. What is the entry, ma? Revaluation reserve account debited to PP account for 1 lakh. The remaining 20,000 we have to transfer to the P&L account. So P&L account debited to PP account. To set off what is the entry we are going to get? Revaluation reserve account debit 1 lakh, P&L account debit 25,000 to PP account 1,25,000. I think you got the clear picture about this one. Up to the 1 lakh only we can utilize what, ma? Revaluation reserve. Above the 1 lakh we have to transfer to the P&L account. Are you getting the point or not? So this is how. This is a situation where upward and downward. So first time downward and second time upward means up to the whatever the transfer amount to the P&L account we can set off with the P&L account, and remaining amount we have to transfer to the revaluation. So vice versa. Are you getting the clear picture about this revaluation, ma? So this is also important point. So okay, try to refer this second example. Yeah, I will share this all the notes in the Telegram group. And next one, changing the method of depreciation. Previously we have seen what, ma? Changing the value of depreciation. In the case of changing the value, prospective effect or retrospective effect, ma? So prospective effect only, retrospective means from the beginning. So we should not do the now from the beginning, ma, because all the concept was changed after coming to the AS10 into the picture. Now what we need to do, sir? If there is any change in the method, from the date of change only we have to consider. That's all, ma. So you know this one also, no problem. Or I will discuss. RAM Limited, which they depreciate the mission at the rate of 10% per annum, diminishing balance method, ma. Okay na? Firstly they have started with the diminishing balance method. Had on 1st January 2022, what is the value, ma? 9,72,000 on the debit side of the missionary account. So on the debit side of missionary account, the opening balance is equal to how much, ma? 9,72,000. During the year 2023, the missionary purchased from 1st January 2020. The missionary purchased from 1st January 2020 for 80,000 was sold, ma. How much we have sold at 80,000? For rupees how much, ma? 45,000 on 1st January 2022. Okay. During the year 2023, the missionary purchased on 1st January 2020. Sir, here what is happening means, here the book value of 9,72,000, we are having a more than 1 PPE. So it is not a 1 PPE cost, it is having more than 1 PPE. So from this, first we have to find out the book value for the 2023. Now we are providing on which date, ma? We are available on date of 1st January 2022, but this is happening during the year what, ma? During the year 2023. So that means 1 year depreciation we have to do. What is our book value as on the date, ma? 8,74,800. But in this book value we have not sold all the assets, we have sold only one asset. So we have to find out the book value which was sold, the book value on 31st/12/2022 which was sold. What is the cost value, ma? They are saying that 80,000 the costing. So how many years we have to do the depreciation? 2020, 2021, 2022, 2023. Okay na? 2023 full year we should not do, half year only we have to do. So see this one, 2020, 2021, 2022 and 2023 half year, so 6 months. So what is our cost value, ma? 54,404. But they are going to sell at what, ma? 45,000 rupees. So what is our loss they are going to get? So remaining asset value is equal to how much, ma? Simple, ma. So what is the asset value as on this date we have to see, because we have in the on which date we are having 31st/12/2022. As on this date, what is the assets value ma? 58,320 we have to reduce because it was sold. So on this amount, so and again what they are saying ma, they are saying that and a new mission which was costing 1,50,000 was purchased and installed on the same date. On the same date means which date ma? On 1st July. And again we have to go to the book value there itself. So again how many months depreciation we have to do ma? Again 6 months depreciation we have to do. So on this amount full year we have to do, on the machinery purchased, so 6 months only we have to do. We'll get the depreciation. So like that, if you do means, if you changing means from here onwards, from the date of change, nothing but from the year of 2023 ending, from the year of 2024 we have to change the method. But be careful what is the sale date and what is the exit date. I think you got the clear picture. I'm not going to continue this one. Next one, provision for depreciation, very important. Okay na, but I am not focusing on this one because the depreciation we may not get in this attempt. Okay na, so until now is sufficient. Don't refer the remaining points and we will get the time waste also. Okay na, okay, this is the overall picture about what ma AS 10, and now I am going to discuss slightly what ma AS 12. Okay na, 1 minute ma, I will start the AS 10, AS 12. Is there any doubts regarding to the AS 12, AS 10? If you ask, I will answer ma. For you guys. The depreciation portion, if you want, we can see AS 10 portion is sufficient for the examination. So consideration in the form of cash, consideration from exchange of asset, we have to see the asset given value, and then next one what ma, consideration in the form of shares means we have to see the shares given value, fair market value or something. Okay na guys? Okay. Next AS 12. So AS 12 government grant is very important, and will be easy also to understand the AS 12 after discussing of AS 10. Okay na? Okay, no problem ma. AS 12 is a government grant. The objective of this stand is accounting treatment of government grant in the books of accounts. So how we can do sir here? First of all, we try to understand what is the meaning of government grant. An assistance in the form of either cash or kind for compliance of conditions either in the past and future. So based on conditions complied on future or past, we are going to receive certain assistance, nothing but an promise. Assistance should be in the form of paper representation, should be stamped. So thus conditions, if the conditions are satisfied, then only we can recognize it as what ma government grant. It is an assistance provided by provided by the government in the form of cash or kind for compliance of conditions for future or past. Okay na, this is the definition you have to write if they given the government grant. Once again repeat ma, an assistance in the form of either in the form of cash or kind for a conditions specified for the conditions fulfilled either in the past or the future. That grant can be recognized only when two conditions are satisfied. What are the two conditions we have to satisfy ma? Reasonable assurance existence that condition will be complied. What is the meaning of reasonable assurance sir? Reasonable assurance means you have to give that promise in a written format, and no uncertainty will be there. Uncertainty will be there or will not be there ma? Uncertainty will not be there. If these two conditions are satisfied, then only what we can do ma? Then only we can recognize, then only we can record the government grant in the books of accounts. So now only we have discussed either in the form of cash or kind. First I will discuss if the grant received in the form of kind, and then I will discuss if the grant received in the form of cash, what is the accounting treatment. Okay guys? So if the grant received in the free of cost, it is also called as non-monetary grant or monetary grant. Monetary grant means we have received the grant by way of giving the cash, in the form of cash we have received. Non-monetary grant means what ma? In the form of kind. Sir, Kind means how we can identify, sir, whether it is a kind or whether it is a cash. Very simple, ma. Actually, I'm going to purchase one plant and machinery for 10 lakhs. What the actual value of the plant and machinery is equal to 10 lakhs, ma. That one I am going to get only 5 lakh rupees from the government. So straight away I'm paying 5 lakhs. I'm not going to pay 10 lakhs now. I'm not going to receive 5 lakhs in future. Directly at the time of purchase itself, what is our actual price of the asset, ma? 5 lakhs only. Actual price 10 lakhs, but how much we have paid? Only 5 lakhs, the subsidy. The grant given by whom? Government. It is called as grant in the form of kind. Okay, na? So which value we have to recognize means concessional price. If you are receiving at a concessional price at acquisition date, we only at the acquisition, not the date, ma. So please correct it. At acquisition rate, we have to write. What is the acquisition rate, ma? Actual value is equal to 10 lakhs, but we have acquired only for the 5 lakhs. That 5 lakhs only we have to require. In some of the situation, that actual value is equal to 10 lakhs, sir, but straight away at a free of cost I am acquiring. In the case of free of cost, if you acquired also, you have to record at which value, ma? Nominal value, like 110 rupees or 100 rupees, like that if you want. But you should mention that you have to show in the books of accounts there is an asset. For that reason, if you get the asset at a free of cost, at the free of cost means nominal value. If you get the asset at a concessional price means you have to show what, ma? Concessional price in the books of accounts. Okay, na guys? So no problem, ma. And then this is the grant in the form of what, ma? Cash or kind, ma? It is a kind. How we can identify? At a concessional price or free of cost, we are going to acquire the asset in the market. Next one, ma. If you see the grant received in the form of cash, either we can receive the grant for a specific asset. That means what, ma? If you purchase one asset, for the purchase of that asset they are giving the grant, or for revenue expenses they are giving the grant, or for promoters contribution they are giving the grant. Sir, here there is one simple trick. Promoters grant means in the hint point they will give backward areas, backward area development, like that means they are going to provide you the grant in the form of promoters contribution. Okay, now sir, here grant received, sir. Grant received means cash or bank, yes or no? So cash or bank come into the picture. Sorry guys, cash or bank account debit. 2, for the promoters contribution means you have to transfer to the capital reserve. You have to transfer to the which account, ma? Capital. Simple, ma. Promoters contribution, how we can identify in the examination? We can identify with a simple trick called as backward areas. I will show the question, we will get a more understanding. See this one, ma. 14th question. Explain the treatment of the following. If a firm acquired the fixed asset for rupees how much, ma? 550 lakhs, on which the government grant was received 40%. This is called as what, ma? Grant only. Monetary grant or non-monetary grant, ma? This is called as non-monetary grant because they are going to purchase at a 40% concession. So what is the amount we need to recognize here, ma? The amount we need to recognize 550. Government grant received was 40%. Oh, so this is not a point, ma. So see this one. Capital subsidy received from the central government for setting of a plant in notified backward. Sir, backward area means nothing but simply remember it is a capital contribution. What is the entry you need to record means simple, ma. The entry we are going to record is called as cash or a bank account debited to capital reserve. The plant actual value will be 600 lakhs. So we should not reduce from the plant. We should not reduce from the plant because it is a promoter's contribution. So how we can see this one means, so treated as what, ma? Deferred income. So because so the entry is at the time of purchase of asset, what is the entry, ma? Fixed asset account debited to cash or bank. The depreciation we have to calculate on this amount only because it is a capital. Which entry we need to pass means where is that one, ma? This one option 2. So this is not, ma. So directly we can charge the depreciation on 600, ma. No problem. Okay, na? Please remember what is the entry you need to write, ma? Cash or bank account debited to capital reserve. That's all. We will get the more clarity. Please give me 1 second. So promoter's contribution means what is the hint point, ma? The hint point is nothing but backward area. Now I am entering into this one, ma. Specific asset. We are going to receive the consideration for a specific asset. Either for depreciable asset we can receive, either for non-depreciable asset also we can receive. Okay, na? So the accounting treatment we have to see. We will understand by way of seeing this example. The purpose, try to understand, ma. If the understand the purpose, then only we can easily crack it. So grant received for the purpose of depreciable asset, and in the case of we are having the two accounting treatments, ma. So method 1 and method 2. What is the method 1 is saying, sir? Reducing the government grant from the respective PPE. So the grant which was received, that grant we are going to reduce from the particular PPE. So at the time of, for example, building purchased for how much, ma? 60 lakhs, and then after we have received a grant of rupees how much, ma? 20 lakh rupees. Of what is the life of the asset, ma? 10 years. So here at the time of purchase of building, which entry we are going to recognize, ma? Building account debited to cash or bank account. It is the entry we are going to recognize. After that we are receiving the grant, yes or no? What is the grant amount we are going to receive, ma? 20 lakhs. This 20 lakhs we are going to reduce from the particular PPA. At that point of time, what is the entry we need to record? Cash account debited to building account, because the building value is reducing, na? So like this you have to pass the entry. So building account debited to cash account, or cash account debited to building account. Now what is the building value will be there? First is the 60 lakhs, and then we are reducing what, ma? We are reducing the grant amount of 20 lakhs, na? Our book value of the building is equal to how much, ma? 40 lakhs. On the 40 lakhs only you have to charge the depreciation. Are you getting the point? So this is the one way of accounting treatment. If you want, we can reduce the grant amount. We can reduce the grant amount from the particular asset. And next one is called as what, ma? So next one is treated as what, ma? The grant amount as a deferred income. What is the meaning of deferred income, sir? Deferred income is nothing but received in advance. We can treat it as deferred income is nothing but what, ma? Received in advance. So we are not going to reduce from the particular asset. We are going to treat it as deferred income. Now what is the entry, ma? The same example, the 20 lakhs we have received, but it is a deferred income. Now building account debited to cash account 60 lakhs, but remaining 20 lakhs we are going to treat it as deferred. So we are getting a benefit of how many years, ma? 10 years, na? What is the life of the asset? 10 years. So normally, so how much we are going to get, ma? 2 lakhs. Sir, here first year 2 lakhs will be transferred to the income, na? Will be transferred to the P&L account credit side, and remaining 18 lakhs will be transferred to the balance sheet liability side. Okay, na? The P&L account how much, ma? The credit side 2 lakhs, and depreciation 6 lakhs we are going to calculate on the 6 lakhs only, because we are not going to reduce the amount from the government grant from where we are not going to reduce, ma? We are not going to reduce that amount, that grant from the particular asset. For that reason, our here the depreciation is equal to how much, ma? 6 lakhs. The depreciation is equal to how much, ma? 4 lakh rupees. Here how we have got the 36 lakhs, ma? For 60 lakhs minus 20 lakhs minus 4 lakhs, nothing but 40 lakhs minus 4 lakhs, that is equal to how much, ma? 36 lakhs. Here also the same picture will come into the picture. See, ma? 6 lakhs is depreciation, and 2 lakhs amortization means nothing but, I think you all know, deferred income means based on the benefit we are going to transfer that one to the P&L account credit side. Now the net effect is what, ma? 4 lakhs. The debit side is more, the credit side is more. Debit side is more, the 4 lakhs. So here also debit side is more. Net effect is same or different, ma? Net effect is same. And then the remaining 18 lakhs will be transferred to the balance sheet liability side. Now what is the value of asset, ma? Our value of asset is 60 lakh minus 6 lakh, that is equal to how much, ma? 54 lakhs. So what is the net effect, ma? 36 lakh. Asset is highest. So here also net effect is same. So here how many accounting treatments are there, sir? 2 accounting treatments are there. What is the first one, ma? First one is called as either for depreciable asset or non-depreciable asset. For a depreciable asset, either if you receive the grant as a what, ma? Monetary item, at that point of time, if you want, you can reduce from the particular asset. If you reduce from the particular asset, at the time of depreciation, which value we have to consider, ma? After reducing the grant value, already So 60 lakhs we should not consider now. Now because how much amount we have to reduce 20 lakhs, because we are treating the grant as a reduction in value of asset. So for that reason, how much value you have to consider as a original cost of asset? 40 lakhs. Here we are treating as what deferred income. For that reason, how much amount we are going to treat it as original value of asset 60 lakhs. So difference is there. Okay now. Now how they will ask in the examination means, so they will combine the AS 12 and they will combine the AS 10, because there is a change in value here, there is no change in value here. If there is any change in value, we have to consider what that change in value divided by remaining life. Are you getting the point? This is at the time of what getting the grant. So in the sum of the, if the conditions are not satisfied, what we need to do? We have to written off the grant now. We have to written off the grant. That is a difficult point. That is the difficult point. Easily you can understand. Sir, till now what we have understand, sir, we have seen the promoter's contribution means what is the one entry we have to write we have to write the entry is called as bank account debited to capital reserve account. That entry is enough for the answer. What is the hint point backward areas? If anything in the backward area you have stipulated, you have for that reason you are getting a grant means what is the entry you have to write bank account debited to capital reserve. There the plant value will not be changes. On the plant value, on the actual plant value only we have to calculate the depreciation. Here for the specific asset purpose you are getting the grant. Depreciable asset or non-depreciable asset? Depreciable asset means how many options we are having? We are having the two options. Either we can reduce from the particular value of asset, or either we can treat it as deferred income. Reducing the particular value of asset means our original cash to value will be changes. So original cost of asset minus what grant, on that amount only what we need to calculate depreciation. In the case of deferred income means what we can do? In the case of deferred income means on the original cost of asset only we can calculate the depreciation. We can calculate what depreciation. In the case of non-depreciable asset, treat it as deferred income and recognize the income in the proportionate basis. So depreciation is to be calculated normally. Sir, non-depreciable means the depreciation will not be there, so will be treated as only one accounting treatment is there for the non-depreciable asset. So either we can we have to treat it as what deferred income. Are you getting the point So this is the main point. And then revenues. In the case of we are receiving the grant for the purpose of revenue expenses, so the revenue expenditure is there revenue expenditure is there. The expenditure we have booked in the P&L account, which side we are going to write debit side. But now you are getting the grant, you are getting a grant for these expenses. Either if you want you can reduce this particular expenses, or either if you want you can record as an income, because the grant is an income only So either you for what purpose you are getting grant? For revenue expenditure purpose. Either if you want you can reduce the expenses, so deducted from the related expenses are created to the P&L account. Why we are creating because it is income created to the P&L account as an income in the specific basis, in the statistic basis. So here the deferred income will not be there. Here the deferred income will not be there, sir. Either reduce the expenses or either transfer to the P&L account credit side. I think you will get a more clarity. I will show you. Sir, this is at the time of getting a grant. At the time of getting the grant, promoter's contribution means what is the point backward areas, which entry you need to pass bank account debited to capital reserve. If for the purpose of revenue expenses, for the purpose of salary you have incurred, you are getting a grant means either you can reduce from salary or either you can transfer to the P&L account credit side. P&L account credit side. If any purpose, if for the acquisition of asset, if it is a depreciable asset means what we need to do depreciable asset means we are having the two options. Either if you want you can reduce from the cost of asset, or either if you want you can treat it as deferred income. In the case of reduction in cost of asset, we have to charge the depreciation on the grant reduction amount. In the case of deferred income, on the original cost of asset only we can charge the depreciation. So this is the main reason, sir. I think you have got the picture. See this question more carefully, you will get a clarity. Just a second This question is very important. If you understand this question, I think directly this question they will ask in the tomorrow exam also, because this question is related to the if the conditions are not satisfied, we have to return off what ma grant amount. Okay na. The Big Box Limited, a startup, purchased on April 1, 2020, emission worth rupees how much ma 44,85,000, in relation to which they have received 7,35,000 as a grant from the government. Sir, what is the actual value of asset? Sir, you will get more clarity here. The actual value of asset is equal to 44,85,000 ma. From here, in relation to which they have received how much grant ma 7,35,000 is the grant. So we are having how many options ma? Two options. If it is a depreciable asset, either we can reduce this 7,35,000 from 44,85,000. On the remaining value only we can charge the depreciation. Either if you want, what we can do ma, this 7,35,000 we can treat it as deferred income. But the company deducted to treat the grant as a capital receipt. So as a capital receipt they are treating it, means that is called they are going to reduce that grant from the amount of asset. So capital receipt means, please remember ma, capital receipt means they are going to follow the first method. What is the first method ma? They are going to reducing the 7,35,000 from 44,85,000. Okay na. Then it is estimated that the realizable value of mission at the end of its useful life is of 4 years is equal to how much ma 15,36,000. The realizable value of asset is equal to how much ma 15,36,000. It is a market value. Okay na. During the year financial year 22-23, the grant become refundable. So in which year they are going to refundable ma 22-23. In which year they have received ma 2020. So first, how many years after they are going to refund ma? So 2021, and then after 21-22, and then after 22-23. So 3 years after they are going to refund the grant. For setting up a company file to be comply the necessary terms and conditions. So you are required to calculate the amount of depreciation to be charged in the statement of P&L account for the year 22-23 and 23-24. So in the year of grant received 22-23, refund, after the refund how much amount of depreciation we have to see. So simple sir. At the time of acquiring, what is the entry we have to write ma? What is the actual value of asset ma? 44,85,000. So what is the entry? Mission account debited to cash or bank 44,85,000 and 44,85,000. Now then after we have received the grant na. So they are going to treat it as what ma? Capital receipt now. What is the entry ma? So we are reducing the mission value. So cash or bank account debited to mission value, that is equal to how much ma? 7,35,000, 7,35,000. Now what is the actual value of asset? 44,85,000 minus 7,35,000. The actual value of asset is equal to how much ma? I will say you, no problem. 44,85,000 minus 7,35,000, that is equal to 37,50,000 is the actual value of asset ma. On this amount only we have to calculate the depreciation. So what is the estimated life of the asset ma? So now we are going to get the total value is equal to 37,50,000. So the remaining life, useful life of the asset, they are saying the realizable value of machine at the end of the useful life of 4 years is equal to how much ma? 15,30,000. So they have not given this one na. Okay, 4 years is the useful life. This 15,36,000 is the scrap value ma. Now we have to reduce the scrap value. So 85,000 is the original value and 7,35,000 is the grant amount we have to reduce. And what is the scrap value ma? 15,36,000 is the scrap value. If you reduce divided by 4, that is equal to how much ma? 5,53,500. Every year depreciation we have to charge this one only, because whatever the grant amount they are going to receive, they are reducing from the particular asset. So 2021 the same one, and next one 21 22 also same logic, different logic, same logic. And when coming to the 22-23, whatever the amount of refund ma, so and again they are going to refund the amount. In the case of refunding the amount, this entry will be reversed. What is the entry they have booked ma? So cash or bank account debited to mission at the time of getting the grant, this entry they need to refund. They need to refund this entry means, so reverse the entry. So mission account debited to cash or bank, that is equal to how much ma? 7,35,000. 7,35,000. That means in this year, and again we have to add back again we have to add back what ma 7,35,000 into remaining life. How many years we have completed till now? 2 years we have completed. At the end of the third year, the grant is able to refund back. That means we have to add back. Again, our value will be increases or decreases, sama? Our value will be increases. So the cost of the asset 44,85,000, and then what is the amount of depreciation? What is the amount of grant we have received, ma? 7,35,000, and 2 years depreciation of 5,53,500. That is equal to how much, ma? 11,07,000. What is the book value we are going to get? 26,43,000. It is the book value available on the 2 years after. Okay, na? And then we have to add back what, ma? The grant we are going to refund, na? So now again the book value will be changes. So 33,78,000 divided by remaining life of 2 years. Divided by remaining life of 2 years. What are the amount we are going to get, ma? 9,21,000 is the amount of depreciation for 22-23 and 23-24. I think I will explain once again, ma. This is the most important. Sir, at the time of taking the grant, what they are doing, ma? They are doing the capitalize. Capitalize, it means they are reducing the value of asset. So reducing the value of asset means whatever the book value they are going to get, ma, now 44,85,000 we should not charge the entry, ma. It is not a original cost of asset. They have reduced the value how much, ma? 7,35,000. After reducing that grant, and there is a scrap value divided by how many years, ma? 4 years. This is the amount of depreciation for the first 2 years. First 2 years means 2021 and 21-22. But when coming to the 22-23, our grant must be refunded. So refunded means what, ma? And again our mission value will be increases. Refund means same or opposite, ma? Opposite. So at the time of taking the grant, we are reducing the grant. We are reducing the book value of the asset. Now at the time of refunding back, we have to increase the book value of asset and we have to add back. Now what is the updated value will be there? So this one minus grant minus depreciation for the 2 years. This is the book value. For this book value, we have to add back what, ma? Once again the grant. Now what is the updated book value we will get by divided by remaining life of the asset. Okay, na? So 33,78,000 minus scrap value divided by 2 years, because already 2 years was completed. So this is the amount of depreciation. So if you see once again, we'll get a more clarity. Okay, na, guys? So this is the most important question. The grant issued for the compensation of expenses, what we need to do, ma? So here normally we can treat it as what, ma? We can reduce the from the expenses, or we can transfer to the P&L account credit side. So this is the overall clear picture about the government grant. Sir, you will get a more clarity once if you listen the regular class. Now it is a somewhat fast, I have told you, because what, ma? Those students who have seen the class, then only they will understand. Simple, ma. The grant is nothing but we are having the two types of grant: monetary grant and non-monetary grant. If it is a non-monetary grant, means what we can do? We can receive at a concessional price, we can receive at a free of cost. Even though if you receive at a free of cost also, you can display at what, ma? You can you have to show the nominal value. If you are getting at a concessional price, means you have to show the concessional price. After that, we are having the methods. When coming to the monetary grant, how many purposes there, ma? 3 purposes. For specific asset purpose, if it is for specific asset it is receiving, means what they can do, ma? They can reduce from the value of asset, or they can treat it as deferred income. If they are reducing from the value of asset, is a difficult task, ma? If they are reducing from the value of asset, means our book value will be changes. The updated book value only we have to consider. What is the meaning of updated book value? Means original purchase value minus grant. So this is called the original cost of asset. On this only we have to calculate. Okay, na? If you are refunding, means what, ma? At the time of taking the grant, you are reducing, na? At the time of refunding, what we need to do? You need to add back. Again the change value will be changes, na? If the value changes, means what we need to do, ma? If the value changes, means again the depreciation will be changes. So change in value divided by remaining life of the asset we have to do. Sir, you will understand this concept. If you revise once again, you will understand. Okay, na, sir? I am going to leave it off this one. So I am directly entering into the hire purchase. So give me 2 minutes, I will start the hire purchase. After hire purchase, I will discuss AS19. So AS19, the important leasing. So we are going to target. So we have completed the accounting standards fully, and we have completed the insurance claims, and we have completed the branch. And now we are going to target what, ma? We are going to target the this one, ma? Hire purchase case and bills of exchange case. Hire purchase and AS19 after bills of exchange. Okay, na, guys? Okay. And at last I will discuss the partnership also. The hire purchase are very important concept. And in mutual accommodation bills, some appearing. I'm not getting more. So we'll get a clarity in the bill of exchange. Okay. Hire purchase and leasing, from this both the concepts, one they will get in the examination. In the hire purchase, no need to worry about the hire purchase. They will ask about the interest calculations, that's all. So we are having the totally 5 types of interest calculations. So I will discuss one by one. Please be very careful. So here you all know the person who is going to purchase is called as hire purchaser. The person who is going to sell is called as hire vendor. So I am not going to discuss that one. So next one, you need to remember this formula. Hire purchase price is equal to what, cash price plus interest, and there is another formula is called as what, installments plus down payment. Okay. So what is the most important point in the hire purchase, calculation of interest and principal in each installment, and accounting for the accounting in the books of hire purchaser and hire vendor. These are the 2 most important points. And reposition of asset, I will discuss about the complete reposition and partial reposition. It will have not having the time. So I am going to open a workbook. Please give me a second, guys. Hire purchaser 119. This is a model number 1, sir. So what is the meaning of model number 1? Means nothing but so we are having the 4 points here. Installments, rate of interest, cash price and down payment. If all the 4 points was given, it is called as model number 1. So model number 1 means there is a method for calculation. So we can open these columns. What are the columns we need to open? Means year, opening balance, installment, principal and interest. So no need to open the closing balance. No need to open the closing balance. If some of the people they want the closing balance, means they will open. See the question and try to understand what are the 4 points we need to get. Bill of exchange lo mutual accommodation questions రేపు exam lo expect cheyacha. Sir, in the bill of exchange you will get only the mutual accommodation, the remaining question they are not going to ask. Okay na? I will explain, sir. Don't worry, sir. Literally we are having the so much time, sir. Less than time you have completed the accounting standards. So X purchased a car and hire purchase system on 1/1/2018. So remember the date on 1/1/2018. The total cash price of a car is equal to how much, 4,50,000. I think you know what is the meaning of cash price, total principal. Okay na? And next, payable 90,000 down and 3 installments of 1,70,000, 1,50,000, 1,08,460 at the end of first, second and the third. What is the interest rate, 10%. If you observe the scenario here, they have given all the things. What are all the things they have given, they have given the cash price, rate of interest, installments and down payment. If all the things they have given, means you have to follow this method. So how this follows, sir? Year, in the year column we are going to write the year. So if you want, you can write the first installment, second installment also, no problem. So opening balance means we have to start with the cash price. We have to start with the total cash price. So what is the amount available of the total cash price? Total cash price is equal to the 4,60,000. So we have to start with the 4,50,000. Easily we have to start with the 4,50,000. and first installment is nothing but first we have to reduce the down payment ma. So down payment we have made how much ma? 90,000. Sir, down payment means only principal portion will be there. In the installment only the principal plus interest will be there. Okay na guys? So down payment 90,000, we have to reduce what ma? Principal. The 90,000 totally belongs to the principal and there is no interest here. There is no interest here. So normally how much principal we have to pay at the beginning ma? 4,50,000. Out of this 4,50,000, how much principal already we have paid ma? 90,000. So 4,50,000 minus 90,000. What is the balance amount of principal I need to pay? 3,60,000. What is the balance amount of principal I need to pay ma? 3,60,000. Are you getting the point or not? So now normally we are going to charge the interest on outstanding balance amount. What is your outstanding balance amount ma? 3,60,000. What is your rate of interest? The rate of interest is equal to 10%. So 3,60,000 into 10%, that is equal to how much ma? Into 36,000 will be available on the interest column. Okay now you know the installment value. What is our total installment value ma? 1,70,000. Out of this 1,70,000 already you have treated as 36,000 in interest. What is the principal ma? 1,35,000. Before payment of first installment, what is your first installment outstanding ma? 3,60,000. Out of this how much you have paid ma? You have paid 1,34,000 as a interest. You have paid 1,34,000 as a interest. And what is your balance amount? 2,26,000 is the balance amount of a principal. I think you have got the picture. This 2,26,000, on this 2,26,000 we have to charge the interest or 3,60,000 we have to charge the interest ma? On the 2,26,000 only we have to charge the interest. On 2,26,000 into 10%, that is equal to how much ma? 22,600. Guys, please understand the concept. We will get the easy only. And you have paid how much ma? 1,50,000 as an installment. Out of this already you have paid the interest how much? 22,600. The remaining will be the principal. And already you have paid this principal. So at the beginning of the second installment you need to pay how much ma? 2,26,000. So you have to reduce how much ma? 1,76,000 because we have already paid. Okay now if you want you can change the columns from left to side whatever it is. So first write the opening balance, installment. If you want you can write the interest here and principal there. Okay now like that also if you want you can write. So we have to reduce how much? 2,26,000 minus 1,27,400, that is equal to how much ma? 98,600. So on this 98,600 how much we need to pay ma? 10% means 9,860 the interest. So we have to so what is the installment value ma? 1,08,460. If you reduce 9,860, 98,600. So like this you have to answer. If you maintain the closing balance means one checkpoint will be there. What is the checkpoint? In the closing balance you will get a nil amount. You are going to get the nil amount, then only the answer will be right. Or otherwise you can check like this also. The opening balance of the last installment and the principal amount of the last installment is equal means then only you are done the correct thing. Otherwise you are not done the correct thing. Simple ma, simple. Sir, here the total cash price means principal. So down payment means only principal. The principal portion only will be reduces. Okay na. For that reason here the interest will be there or will not be there? Will not be there. When coming to the payment of first time installment, so the total principal minus this 90,000, what is the balancing figure? 3,60,000. On this amount only you have to charge the interest, yes or no? Like that we have to reduce ma. If I think you all know these methods, so you are well and good in these methods. So for that reason I am saying. So this is a method we are going to use on which at the point of time which time they have given all the points. If they given the installments, rate of interest, cash price and down payment. For suppose there is a second question ma. In the second question they are not going to give the cash price. Sir, here the starting point is the cash price only na. What is the starting point ma? Here cash price. But without the cash price how we can do ma? We can do the backward approach also. So after reading the question I will come to here, no problem. I think first question you have understand very well. So I think you also know, no problem. X purchase a TV on hire purchase system. As per the terms, he is required to pay how much ma? 3,000 as a down. Sir, Down payment means only principal or interest, only principal. 4,000 at the end of the first year, and 3,000 at the end of the second year, and 5,000 at the end of the third year. Interest should be charged at how much, 12%. Sir, here they did not given the cash price, they have given the installments, down payments, and the rate of interest. So how we can do, sir, now? Simple, first I am going to write the installments, all the things. So how much? 3,000, 4,000, 3,000, 5,000. 3,000 is a down payment. For that reason I am writing the year 0, and then after what, 4,000 is the first year installment, second year installment, third year installments. Sir, what is the checkpoint I have told you before? Whatever the cash price, whatever the opening balance will be there here, the same balance will be there for the principal also. The same balance will be there for the principal also. What are the known points you are having now? I know this one. I know this 3,000, and then after what, I know this installments. Okay, na? Okay. I need to charge here. So what is the starting point? If you follow this one, means simple, whatever the amount of this 5,000 is there, na, here in this 5,000 you are having the principal. You are having the principal and you are having the installment also. What is the rate of interest they have given, The rate of interest they have given in the question is equal to 12%. Okay, size. So I am going to assume as principal is equal to 100. I am going to assume as principal is equal to how much, 100. So on that only we are going to charge the 12%, na. So 100 into 12%, that is equal to how much, 12. So what is the total amount? So this 5,000 I am equaling to the 112. This 5,000 I am going to equaling to what, 112. So 5,000 is equal to 112 means, 5,000 is equal to 112 means, can I get the amount for the 12? Can I get the amount for the 12? How much? How we can use, 5,000 into 12 divided by 112. That is equal to 536 interest you are going to get. That is equal to what, 536 the interest we are going to get. If you reduce this 5,000 minus 536, what we are going to get, cash price. This is only the principal available in the last installment. Is only the principal available in the last installment. I think I have already told you the principal is equal to what, the opening balance of the last installment. The principal is equal to the opening balance of the last installment. This is the approach called as backward or front, backward. And again coming to here, sir, here the 3,000 is equal to how much, 112. But we should consider not only this one. So before payment of second installment, so this is coming to the second installment, I need to pay the second installment amount and I need to pay the third installment principal. Yes or no, before payment of second installment, I need to pay the second installment amount and I need to pay the principal amount also belongs to the third installment. But here how you are not taking this one, sir? Here there is no principal, For that reason I am considering the 5,000 is equal to 112. But now we should consider what, sir? 4,464 into 3,000. Sorry, 4,464 plus 3,000 is equal to 112. Is equal to 112 because my outstanding, what is my total outstanding, My total outstanding before payment of second installment, I need to pay the second installment amount and I need to pay what, I need to pay the third installment cash price also. So my total outstanding is equal to this much. That is equal to 112, and again we have to start the doing like that. And again when coming to the first installment, what is my total outstanding, My total outstanding, not only the first installment amount, I need to pay the second installment cash price also. This is the balance will be available. So like that, so we have to add these both things and equal to 112. For 12 how much? Like that if you do, the students will get the confusion if they are following this one. For that reason there is a concept they have introduced, so we can follow like this also. Sir, whatever we have done till now, here also they are going to do here also the same thing. The third installment is equal to how much, backward process we have to come because there is no cash price. If you know the cash price, whatever the previous method we have done, we are going to use the same method. But without knowing the cash price, how we can do my starting? For that reason, the backward. The last installments I am going to get, that is equal to how much ma? 5,000. So interest is I need to get the interest. This 5,000 is equal to 112. If the your interest rate is equal to 10%, means how much here we need to equate ma? 110. Okay na? Your interest rate is equal to 9 rupees, 9% means here equal to how much ma? 109. Like that we have to equate. Are you getting the point or not ma? Now this 5,000 is equal to 112. What is the amount for 12? Like that means, so 5,000 into 12 divided by 112, that is equal to how much ma? 536. If you reduce whatever the point, we are going to get what ma? 4,464. This is the amount outstanding after the payment of a second installment. But when coming to the second installment, I need to pay the second installment also. For that reason, I am adding the second installment. So what is your amount you are going to get ma? 7,464 is the total outstanding before before payment of second installment. Now I need to equate like that. So if you go on doing, and next after reducing this, this 800 is called as what ma? Second installment interest. After reducing, what we will get ma? 6,664. This is the amount outstanding before payment of first installment. Not only this amount, this is the principal available after the payment of first installment. Not only this amount, I need to pay the first installment amount also. So for this, and again the 10,664 equal to 12 divided by 112. If you repeat this step, what we will get ma? This is the total amount of principal before payment of first installment. For this we have to add what ma? Down payment. The students will forget to add the down payment here. So this is the most important model. Okay na? See, these are the normal models. If you see the missing figure of cash price is normal model ma. When coming to the third question, is one of the important point, and fourth model is also another important model. So please be more focused on this ma. So question number 3 and question number 4. Sir, here first two models are regular models. Okay na? I think you also know, repeatedly you have done. Okay na? Just for explaining, I have explained you in a faster manner. That's all. Now how we can do, sir, means, please wait a second ma. I will show you the third question. X & Co purchased a motor car on April 1, 2019. Hire purchase paying how much ma? 60,000 as a cash down, and a balance in 4 annual installments of 55,000, 50,000 and 45,000, and 40,000 for each installment comprising the equal amount of cash price. Sir, here the sentence they have given a familiar sentence. What is the sentence they are given ma? Each installment comprises of equal amount of cash price. Here also the cash price is missing. Before also the cash price is missing. Here not only the cash price is missing ma, but also what, sir? But also interest rate is missing. But also interest rate is missing. The two missing figures are there. Now how we will do, sir? Sir, because even though there is a two missing figures, there is one hint point. What is the hint point available here ma? The hint point is that equated amount of principal in each installment. Equated amount of principal in each installment. How we can do, sir? I will let you know. See the before question ma. What is the third installment interest ma? 536. What is the second installment interest? 800. And what is the first installment interest? 1,142. Sir, first installment 1,142, second installment 800, and third installment 536. That means what, sir? Here when the installments go on increasing, the interest amounts are decreasing. The interest amount is decreasing. What is the point they have mentioned, sir? Here they have not given the rate of interest and they have not given the cash price. Remember the point, when the installment decreases, the interest rate also decreases. So equated amount of cash price means I am going to identify. Here I am assuming the P is a principal available in each installment, I is a interest available in each installment. I am going to assume first installment as a P plus 4i. Why, sir? Because principal is same. Because principal is same. When the installment is going on, our interest will be decreases. For that reason, here we are having how many installments, are 4 installments now. For that reason, I am assuming the 4i. If you are having the 5 installments, means how we can assume 5i. Okay, now like that 4i, 3i, 2i and I. Why? How I have taken a 4i ma? Because having the 4 installments, so like that the weighted percentage we are decreasing. So you know the equation process, we can do the equation process. P plus 4i is equal to 5000, P plus 3i is equal to 50,000. Substituting the equation 1 and 2, we'll get what ma, I value is equal to 1000, 5000. This I value we are going to subtract in any equation. So subtract in equation number 4, easily we will get what ma, P is equal to 35,000. In the first installment, what is the interest ma, 4i the 4 into 5000, 3 into 5000, 2 into 5000, 1 into 5000. What is the total amount of interest we are going to get? 50,000. Are you getting the point or not ma? So the framing of equations is so much important. So P is equal amount of having the cash price. For that reason, I am not taking the 4i, 4p, 4p, 3p like that. Here the interest is decreasing. For that reason, I am taking the 4i, 3i, 2i and I. If there is any 5 installments means what we need to take ma, 5i, 4i, 3i, 2i and I. So please try to remember this one. So framing of equations is so much important. And next, after this one, there is an important model. So special model, they are going to ask nowadays this model in the examination. Okay na guys? So here in this model, they are not going to give the rate of interest, but they are giving what ma, cash price. In this situation, we have to follow the following steps. Very important ma, see this one. Cash price is equal to 8,64,000 ma. Cash price is equal to how much? 8,64,000. Down payment is equal to 2,16,000. Cash price 8,64,000, down payment is equal to 2,16,000 and 3 installments of 2,88,000 each. In the first step number 1, you have to calculate the hire purchase price. So what is the formula for the hire purchase price? We are having the two formulas. Down payment plus installments is one of the option. Second one is called as cash price plus interest. Here there is no option of cash price. For that reason, we are using the first one. So down payment plus installment. What are the installment ma? 3 installment, each installment having 2,88,000. So 2,88,000 into 3 plus down payment of 2,16,000, that is equal to how much ma? 10,80,000. That is equal to how much ma? 10,80,000. Higher purchase price you have got. Okay na? If the higher purchase price we have got means, we can find out the what we can find out ma? Interest we can find out easily. How we can find out the interest ma? So higher purchase price is equal to cash price plus interest na. So this interest will be on the same side. So cash price gone to that side means what ma? Minus. So interest is equal to higher purchase price minus cash price, that is equal to how much ma? 2,16,000. So this is the total interest. So the total interest we have to divisible in how many installments ma? 3 installments. We cannot simply divide 1:2 divided by 3. We cannot simply divide it by 3. We cannot use simply divided by 3. What we can use, sir? Means simple ma. This is the total interest. This is the total interest. And we have to distribute the total interest on outstanding amount before payment of installment. We have to use like this one. So outstanding amount before payment of this proportion we have to use. I will explain the reposition also ma. Wait a second. Okay na? So on which basis of proportion we have to distribute ma? On outstanding amount of basis. So what is the total amount of outstanding before payment of first installment ma? 2,88,000 into 3. What is the total amount of outstanding before payment of second installment ma? 2,88,000 into 2. Why I am doing the 2 ma? Because every installment value is same. Okay na? Here 3 means 3 installments is the outstanding. 2 means 2 installment is outstanding. 1 means only 1 installment. In this proportion, we have to distribute. Or straight away 3:2:1 also possible. So when it is possible, 3:1, 3:2:1. When the installment amount is same, 3:2:1. If the installment amount is not same, if the installment amount is not same means how we can do ma? We have to distribute the proportionate outstanding basis. Whatever the total amount of outstanding at the end of the first and before payment of first installment, what is the total amount of outstanding before payment of second installment, what is the total amount of outstanding before payment of third installment. On the proportionate of outstanding basis we can divide. Okay na? So easily, what is the total amount we are going to get ma? 7,28,000. What is the total interest? 2,16,000. So 2,16,000 divided by 7,28,000 into how much ma? 8,64,000. How did we get the 7,28? We have to add all of this now. So weighted average basis. So this one divided by total into 8,64,000 into 5,76,000 into 2,88,000. In this proportion we have to distribute. This is the important model. Please don't forget. So you can try, if you want, you can try this one after seeing. Okay, accounting for hire purchase, we can know. I am not going to discuss. Next, reposition of goods. Sir, most of the times the reposition of goods is a last preference. Okay, we should not neglect na, because they may ask for how many marks? 7 marks. I will discuss the full reposition and the partial reposition. I will leave it off. So in the case of full reposition, what you need to do, what you need to follow the steps. Account in the books of hire purchaser. In the case of full reposition, up to the date of reposition, we have to calculate what? Interest and depreciation. Up to the date of reposition, we have to calculate the interest and depreciation. And next one, whatever the balance available in the hire vendor account, hire purchaser will open 2 accounts. Which are the 2 accounts? Hire vendor account and asset account. Whatever the balance available in the hire vendor account will be transferred to asset account. Will be transferred to what? Asset account. The balance available in the asset account will be transferred to the P&L account. Simple. What you need to do, whatever the balance available in the hire vendor account after the calculation of interest will be transferred to which account? Asset account. Whatever the balance available in the asset account will be transferred to which account? Will be transferred to the P&L account. This is the most classification. Here we have to close both the hire vendor account and the asset account. What is the entry? Hire vendor balance will be decreases. Hire vendor is generally a creditor. If the balance decreases, what we need to do? Debit. So, and asset comes in, goes out. Asset is going out. For that reason, asset balance will be decreases. So hire vendor account debited to asset account. The balance in the hire vendor account should be for this entry. So next, in the case of hire vendor, in the case of complete reposition, in the case of complete reposition, what we can do? Calculate the interest up to the date of reposition and calculate the agreed value according to this question. So here agreed value will come into the picture. What is the meaning of agreed value? Means nothing but the agreed value is nothing but they will, here the hire vendor will take away with a different value. Hire vendor will take away to which value? Different. Generally they will give the WDV at the rate of 20% as depreciation, but hire vendor will take away at a different rate, like WDV at the rate of 40%. So for that, the separate calculation we have made, so that is called as agreed value. Okay na? So the balance in the hire purchaser account will be transferred to which account? P&L account. This is called as complete reposition. Is a concept called as what? Complete reposition. So what we need to think, calculate the interest up to the date of reposition in which books? Hire vendor books, and agreed value according to the question. So whatever the balance available here. So here what is the entries we need to pass? Simple. Goods reposition account debited to hire purchaser account, because we are receiving the goods. We should not write an asset. Okay now, because it is a sale for hire vendor point of view. For instead of writing the goods received, what we need to write? Goods repositioned. So goods repositioned account debited to hire purchaser account. So on that goods repositioned, if you incur any expenses, what we need to write the entry? Goods repositioned account debited to cash or bank account. Okay na guys, because the asset value will be increases. So after that you are selling the asset, means what you need to write? Cash or bank account debited to goods repositioned account. The balance available in the goods reposition account will be transferred to where? P&L account. So if you see this account, you can get to know goods reposition account debited to hire purchaser. So it is nothing but an asset. If you increase, will be recorded on the debit side. If you decrease, will be recorded on the credit side. So cash and banks for the expenses, for the sale by cash and bank, the balance will be transferred to the P&L account. So once again, hire purchaser books, we are having the 2 accounts. The balance, first we have to charge what? Depreciation, and the next one what? Interest up to the date of reposition. The balance available in the, after charging the hire vendor account, will be transferred to which account? Asset account. The balance available will be transferred to the P&L account. Just remember these points, so it will be strike it off in the examination and you can try. So here we have to consider the agreed value. Whatever the balance available in the hire purchase, in the hire vendor account, will be transferred to what? Hire purchase account will be transferred to the P&L account. So goods reposition account, remember, it is sufficient for the partial reposition, full reposition. In the partial reposition, based on the point of calculation will come into the picture. So most probably reposition will not come in the examination. What are the points we have to come? instead of reposition, the points they will come in the examination is called as calculation of interest in each installment, and the next one, accounting treatment of the hire purchaser and hire vendor. You will know easily. And now we are going to start the important point is called as what ma? Leasing. Leasing standard. What is the leasing standard ma? 19. So come on guys, leases. If you know the hire vendor, hire purchase, the leasing is easy. Sir, AS19, the leasing, a very important concept, because we don't know, we cannot predict the exact question which was coming. So most of the people, they are targeting the hire purchase. If suddenly leasing come into the picture means, so you may lose the marks. It is a simple and same as a hire purchase. It is a simple and same as what ma? Hire purchase. So straight away, so definition and scope, okay na, we can discuss here. So definition of the lease means nothing but there are two parties, lessor and the lessee. The person, the owner is called as a lessor, the person to whom the rent given is called as what ma? Lessee. So here 5 years is called as a lease term, and 1 lakh is called as a lease rental, lease payment or minimum lease rentals. Try to accumulate this terminology. What is the meaning of lease term ma? Lease term means for how many years we have given the lease. What is the meaning of 1 lakh ma? Lease rentals, lease payments and minimum lease rentals. Okay na, nothing but lease rental ma. We are going to pay whatever the amount we are receiving or paying is called as what ma? Rent, lease rental. Here they are going to call it as lease payments, or they will call it as minimum lease rental. That's all. Okay na. So here this standard is not applicable. Important. This standard is not applicable for leasing the vesting assets like natural resources, oil, gas, etc. So leasing of film, motion picture of films, video recording, patents, copyrights, this is also not possible here. And next one, leasing agreement to the use of land, this is also not possible. So leasing given for the land, agriculture land, it is not covered here in this standard. Okay, special terms, sir. So this is the most important special terms. What are the special terms in this standard means? Lease term and minimum lease payments. What are the special points ma? Lease term and minimum lease payments. Sir, what is the meaning of lease term? In the previous example, we have seen what is the meaning of lease term ma? 5 years we have given, the 5 years is called as lease term. So here, not only the 5 years is called as lease term, the 5 years they are going to call it as non-cancelable period. The 5 years we are going to call it as what ma? Non-cancelable period, because whatever the lessor and lessee they have entered into the contract agreement, it is called as what ma? Non-cancelable lease. So renewal period means what ma? In that agreement only they have specified one of the point is that if you want we can renewal if both the parties have satisfied. If both the parties have satisfied, we can renewal. So that renewal period also we can add back. So this is a period agreed by the lessor and lessee at the time of inception of the lease. The extension of a lease term is also if both the parties have expected, that condition must be specified in the agreement. See this example, you get the more clarity. So here initially how many years ma? 5 years, and here the DJTLU have given a option to Radhika that what ma? So given option to renew for how many years ma? 3 years. So here the total lease term is nothing but what ma? 5 plus 3, that is equal to how much? 8 years. So here the 5 years is called as non-cancelable lease term, 3 years is called as what ma? Renewal period. So this is nothing but for a knowledge, or if you there may be. So this is the important ma. Lease payments, lease rentals or minimum lease rentals. In the hands of lessor, what are the points we need to consider? In the hands of lessee, what are the points we need to consider? So fixed lease rentals, try to understand example number 1. So what is the fixed lease rentals are? Per annum 1 lakh. So 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. What is the total fixed lease rentals ma? 1 lakh. So in the hands of lessor or lessee also we will consider this fixed lease rental as a minimum lease rentals. So imagine ma, this lease rentals only we are going to call it as cash price here. We are going to call it as what ma? Cash price here, the minimum lease rentals. And next one is called as what ma? Guarantee residual value. What is the meaning of guarantee residual value? I think you know the residual value. Residual value means after the lease term, if you sell the asset immediately in the market, whatever the amount we are expected to be realized, that is called as realized value. That realized value will be guaranteed, some of the value will be guaranteed by the lessee, that is called as a guaranteed residual value. So the guaranteed residual value given by the lessee will be considered in the hands of lessor and will be also considered in the hands of lessee. So this is the point they will ask in the examination, please remember this one. And next one, renewal option and purchase option. So in the case of renewal option, the extended time period rent also will be forming part of minimum lease rental, and unguaranteed residual value will be only forming part of what ma? The total residual value is equal to 50,000 ma. They are expected by the whom ma? Lessor. But in this, the guarantee given only how much ma? 30,000, and 20,000 guarantee given or not given ma? Not given. This 30,000 is called as what ma? Guaranteed value. The guaranteed value will be a minimum lease rental in the hands of lessor and in the hands of lessee. But when coming to the unguaranteed residual value, will be only the minimum lease rental only in the hands of what ma? Only in the hands of lessor. Only in the hands of what ma? Lessor. So this is the most important. If you understand this meanings, so this is called as normal cash price. We can conclude here. Okay na? So once again, fixed lease rentals, guarantee given by the lessee. So here also the same thing. Renewal option also will be considered here, but here unguaranteed residual value will be considered or will not be considered ma? Unguaranteed residual value will not be considered. Okay na guys? So the time is going on. Okay, no problem. This is the last concept. I will close. Now, how many types of leases are there ma? We are having the two types of leases, operating lease and financial lease. When coming to the operating lease, what is the meaning of operating lease ma? When the risk and rewards is transferred, is not transferring means it is operating lease, is transferring means what ma? It is a financial lease. So it is like a normal renter agreement, it is like a loan agreement. So here the loan, nothing but interest will be there, and all the things, interest will be there, and is going to call it as what ma? Operating rent. Conditions for the financial lease. So it is the most important. Here we are having the 5 conditions. Out of these 5 conditions, if any condition is satisfied, we are going to call it as financial lease. First one is called as ownership. If the ownership is transferring to the lessee at the end of after completion of lease term, it is called as a financial lease. The next one is called as purchase option. If the lessor given a option to purchase to the lessee, is called as what ma? It is also called as operating. It is also called as financial lease. Lease term. If the lease term is forming part of major, if the lease term is for a major part of economic life of the asset, it is also called as what ma? Financial lease. But how we can say, sir? So here totally we are having the 5 years is the lease term. Our life of the asset is equal to 8 years. So for that reason, 5 divided by 8, that is equal to how much ma? 62.5. So here we are going to, how much percentage we are getting ma? 62.5. So here this 62.5 is less than the 75 percentage. For that reason, major economic life is there or not there ma? Major economic life is not there. For that reason, it is which type of lease ma? It is an operating lease. If this condition satisfied, it is also called, it is called as what ma? Financial lease. The present value of minimum lease rental must be substantially equal to the fair market value of asset. Now in order to understand this one, you have to see this one ma. So this calculation is very much important in this financial lease. Okay na? If you not going to get this calculation, so it will be, you are going to lose the marks in this standard. Sir, at the inception of the lease, if the present value of minimum lease payments is substantially cover the fair market value of asset, then it is called as a financial lease ma. So what are the steps, sir? Here the Tillu have given a rent to the Radhika, how much ma? 5 years at the rate of 1 lakh each. 1 lakh is called as what ma? Minimum lease payments at the end of every year. What is the fair market value of ma? 4 lakhs. I think you all know how to calculate the present value of minimum lease payments. So first we will take the year, and then lease rent, and then the discounting factor at the rate of 10%, and next what ma? Present value. Okay na guys? So the next topic I am going to discuss ma? Partnership. Please stay tuned. I will say the important topics, and I will say which concept will come into the tomorrow exam also, and I am having the analysis of coming the tomorrow's concept. So in the year, how many years are there, ma? 5 years. So 1, 2, 3, 4, 5. What is the lease rental, ma? 1 lakh. So 1 lakh, 1 lakh, 1 lakh, 1 lakh, and 1 lakh. What is the present value factor, ma? 10%. I think you all know how to calculate the present value factor. 10% means 1 divided by 1. 12% means 1 divided by 1.12. 15% means 1 divided by 1.15, like that. So you know. So the rent into present value, you'll get the so rent into discounting factor, you'll get what, ma? Present value. If you total all this one, how much we are going to get, ma? 3,79,000. Here 3,75,000, 79,000 is nothing but what, ma? Present value of minimum lease rental. Our fair market value is equal to how much, ma? 4 lakhs. Substantially equal or not, we have to check, ma. Substantially equal means how much percentage should be there? 75%. Can you say this 3,79,000 on the 4 lakhs, how much percentage? How to calculate the percentage, ma? 3,79,000 divided by how much, ma? 4 lakhs into 100, that is equal to how much, ma? So we are going to get the percentage. Can you say, ma, what is the percentage we are going to get? 94.75. So this is a financial lease. Why I am calling this is financial lease, ma? Because it is more than 75%. So and last condition is called as what, ma? Specialized in nature. What is the meaning of specialized in nature? Lesser only doing the changes. Lesser only doing the changes, whatever the requirements wanted by the lessee. So now the lessor is behavior on behalf of the lessee. Na. So this is called as specialized in nature. Normally they will give the house as a rent. We have to change accordingly. Yes or no? Lessee will change. But here in this situation, who is changing who is following the conditions given by whom, ma? Lessor is following the conditions given by the lessee. So this is also called as what, ma? Financial lease. If in these 5 conditions, if any one condition is satisfied, we are going to call it as what, ma? Financial lease. Otherwise it is a operating lease. So once again, what are the 5 conditions, ma? What is the first condition? Can you repeat once again? Ownership. The ownership is transferring after the completion of the lease term. It is called as what, ma? It is also called as financial lease. If there is no certain condition, it is an operating lease. Next one, what, ma? Purchase option. If the purchase option given by lessor to the lessee at a lower than fair market value after the lease term, it is if that condition is satisfied, then it is called as what, ma? Financial lease. Otherwise it is a operating lease. And next one, ma? Lease term. So the lease term is covering the major economic life of the asset. So for suppose, what is the lease term, ma? Here 5 years. Here life is equal to how many years, ma? 8 years. So 5 by 8 into 100, that is equal to how much, ma? 62.5. It is not major economic life. Here the major means how much percentage, ma? It is more than 75%, means it is also called as what, ma? Financial. Otherwise it is operating lease. Just now we have discussed the present value of minimum lease rental must be substantially equal to the fair market value. At which point of time you have to see, ma? Inception. What is the meaning of inception, ma? At the starting of the lease only you have to see this condition. If this condition is satisfied, it is called as what, ma? Fair market. It is called as a financial lease. Otherwise it is called as operating lease. Thank you, ma. Thank you for your participation. And next comes the accounting treatment in the books of lessee, lessor, and special transactions, especially lease rent missing. Sir, please wait for 15 minutes. You will get the more clarity of this standard. Accounting in the books of lessee, ma. Sir, the same at the time of asset taken a lease. Sir, here they are going to treat it as asset only. So asset account debited to lessor because they want to pay. Here the consideration they are going to pay in the form of installments, in the form of rent. So here which value we have to record, sir? So present value of minimum lease rental or fair market value, whichever is lower. So normally which value we will record as per the higher purchase point of view, ma? Here we will record the cash price for the first entry. Yes or no? So asset account debited to, there we are going to write what, ma? Higher vendor. Here we are going to get the lesser. Are you getting the point, ma? And next, sir, interest due. What is the entry for the interest due? Interest account debited to lesser. At the time of payment of lease, lesser account debited to cash or bank. So first entry writing only the important. Which value we have to write, ma? Present value of minimum lease rental or fair market value. Yes, sir, in which books, ma? We are seeing the lessee books. As per the lessee point of view, what is the definition for the minimum lease rental, ma? Which points we have to consider? We have to consider only these points. What are these points, ma? Fixed lease rentals. One second, guys, I will get to show. And so in the points of lessee, fixed lease rentals and guaranteed residual value and the renewal option. In the case of renewal, those 3 points only we will consider. So you will get to know how to calculate the present value of minimum lease rentals. So before steps only we have to follow. What are the before steps we have seen, ma? Just a minute. Depreciation, who will charge? The lessee will charge. Depreciation account debited to asset, and depreciation and interest will be transferred to the P&L account. What are the entries? P&L account debited to depreciation to interest account. From second year onwards, what are the entries will be repeated? First entry will not be repeated. 2, 3, 4, 5 entries will be repeated. These are the common things. So see this example and try to find out the value, which value we have to record. Sir, here the fair market value is equal to the 4 lakhs, and every year lease payments is equal to how much? 1 lakh. The 1 lakh is the fixed lease payments. Okay na? Discounting factor is equal to 10%. What is the guarantee value? 50,000. The guarantee value only will be considered for the lessee. Unguaranteed value will be considered for the lessor. So that means what? So this residual value will be coming to the picture on a year ending. Yes or no? After ending of the lease term only, with this residual value we have to consider. From the beginning, which value we have to consider? 1 lakh rupees. Here there is no renewal point. They will not give the renewal point. So I think you know how to calculate the present value format. Okay na? Here lease rentals, present value factor the rate of 10% and present value. Every year how much? 1 lakh is the fixed amount. At last year we are going to get what? Guaranteed residual value. In the hands of lessor, we have to consider guaranteed residual value and we have to consider unguaranteed residual value also. But in the hands of lessee, which value we have to consider? Only guaranteed. In the hands of lessor, we have to add unguaranteed also. You know how to get this factor. How we will get the factor? 1 divided by 1.1, because it is a 10%. So equal to 1 time, equal to second time, third time, fourth time, fifth time. You have to multiply the lease rental with the discounting factor. You will get the present value. See, this present value or fair market value, whichever is lower. What is the fair market value? 4 lakhs. Which value we are going to consider now? We are going to write the first entry for the 4 lakhs, and this is the cash price. This is only the cash price. Whatever the amount you have incorporated for the first entry, so that is only the cash price. Now we have to find out the interest, I think. So here the lease payments are nothing but installments. Okay, now the percentage of discounting factor is nothing but rate of interest. You know the cash price. Here there is no concept of down payment. That means first year directly the installment amount. So what is the opening balance? 4 lakhs. If in case the present value of minimum lease rental is lower, which value we have to consider? The present value of minimum lease rental value only will be considered as a opening balance. Are you getting the point? Now on this opening balance we have to apply what? 10%. How much we are going to get? Finance cost we are going to call it as 40,000. So 1 lakh minus 40,000, that is equal to how much? 60,000. The 60,000 is the principal already paid. We have to reduce from the 4 lakhs. That is equal to how much? 3,40,000. I think you all know these points. Yes or no? So how to calculate this one? What is the important point? Which value is the starting point? Is cash price. The cash price we are going to find out by way of what? By way of fixed lease rentals and guaranteed residual value. If you want to calculate the accounting treatment for the lessor books, means which value we have to add it off here? We have to add it off the unguaranteed value also, but that value only. We should not compare with the fair market value. Whatever the value you have got here, on that value only we have to do the accounting treatment. But when coming to the lessee point of view, we have to compare with the fair market value or present value of minimum lease rental, whichever is lower. We'll get to know. So the accounting entries I am not going to show, you know. So accounting, what is the meaning of net investments? Are present values of the minimum lease rentals, but here the minimum lease rental definition will be different. Yes or no? Which values we have to consider? Here we have to consider fixed lease payments plus guarantee plus unguarantee. The total of this one we are going to call it as gross investment. The total of this one we are going to call it as what? Gross investment. The present value of these things is called as what? Net investment. So the net investment value only we have to consider. In the case of higher, in the case of lessee, so which values you have to consider? Whatever the value you have got here, or fair market value, whichever is lower. Here without comparing with the another value, we have to record directly as the calculation, and again we have to calculate the interest. So in the two books we have to calculate the interest. In the hire purchase, only one book calculation of interest will be there. Here what? Two books or one book? In the two books, because here the initial amount recorded is different. So don't worry, don't think like that. They will ask about this one only. What is the meaning of this one? The differences between the gross investment and net investment is nothing but unearned finance income. So they will ask you in the examination, calculate the unearned finance income. Unearned finance income will come into the picture only in the books of lessor. What is the difference between gross? Gross means nothing but fixed installment plus guaranteed residual value plus unguaranteed residual value. The present value of gross investment is nothing but net investment. So the differences between these two is called as what ma? Unearned finance income. I think you got the clear picture about this one. Samskruti, hi amma. Okay na, I think you got the clear picture about this one. So sometimes they will ask the unearned finance income. If they want, they will ask what ma? They will ask the entries also. So most of the times they are not going to ask the entries. And there is another point ma, important point, remember. So special cases of financial lease, so lease rent is missing. What they are missing ma? Lease rent. So till now we are having the lease rents, fixed lease rentals. Every year we are going to add. For the last year only we are going to add the guaranteed residual value in the case of lessee and unguaranteed residual value in the case of lessor. We are going to add both the things. By adding all the things we are going to call as a gross investment. The present value of gross investment is called as net investment. Difference between the gross and net is called as what ma? Unearned finance. Sir, here if it is missing means you have to remember this equation, you have to remember these steps ma. So what are the steps, sir? Fair market value of asset is equal to the present value of minimum lease rental plus present value of unguaranteed residual value. What is the equation ma? Here the equation is fair value of asset is equal to present value of minimum lease rental plus present value of unguaranteed. So the actual scenario is also same ma. What is the actual scenario ma here? So here the actual scenario also is also same. So fair value of asset is equal to present value of minimum lease rental and present value of in the question what they will give, sir? Unguaranteed residual value they will give ma. They will give the unguaranteed residual value and they will give the fair market value of asset. Okay na? We have to compute, we have to brought the unguaranteed residual value into the present value. So how we know? So we have to take the last year present value factor. Okay na? So fair market. So how we will get the lease payments ma? Lease payment is simple. So present value of minimum lease rental divided by annuity factor. So we will get to know. If you are doing this question, we will get to know ma. So this is the most important question. They may give this question in the tomorrow's exam. If a hire purchase is not important means which question come into the picture ma? This question they will ask very important. So see this one ma. Vishnu Limited leased a printing mission to Gaurav Limited. So who is the lessor ma? Vishnu Limited is a lessor, G Limited is a lessee. For how many years ma? 3 years. The useful life of the printing mission is known to be how many years ma? 5 years. Okay na? It was agreed between the lessor and the lessee that the amount will be paid in how many installments ma? 3 installments and the termination of the lease. So 3 installments they are going to pay the lease. Gaurav Limited will take back the said asset. So said asset they are going to take back. That means it is not a financial lease till now. The following details are available in respect of the mission lease. The cost of the printing mission is equal to how much ma? 15 lakhs. The cost of the printing machine is equal to the 15 lakhs, nothing but this is not a fair market value, only the original cost of asset. Unguaranteed residual value at the end of the year is equal to how much ma? 2 lakhs, and fair market value separately they have given how much ma? 15 lakhs is the fair market value of the asset. The initial rate of return is equal to how much ma? 10%. What are their requirements? Their requirements is to state whether the lease is a financial lease or operating. In order to identify whether the lease is a financial lease or operating lease, which method we have to see means present value of minimum lease rental substantially equal or not we have to see. How we can see ma? First of all, calculate the minimum lease rentals. So here the minimum lease rental only the missing, yes or no? What is the equation we have to imagine? Fair market value of asset is equal to present value of minimum lease rental plus present value of unguaranteed residual value. So just now we have seen, we know the unguaranteed residual value, we know the fair market value of asset. Now we will get what ma? Present value of minimum lease rental means now we will be here. Now we will be at here ma? We will be at here. So divided by 3 we should not possible. Why sir? Because so here to here we have to go and then divided by 3. For that reason the present value of minimum lease rental divided by annuity factor we have to apply. What we need to apply ma? Divided by annuity factor, then only we will get this amount, the lease rentals. This only we will get what ma? Lease rentals. So that is the main option. See this one. Present value of lease rental plus present value of unguaranteed residual value is equal to the fair market value of asset. Previously we have discussed the equation. So we know that this one and we know this one and present value factor means they have given ma. So 3 years factor is equal to how much? 0.7513. So what is the time period ma? 3 years only. So we have to, residual value means the third year factor only we have to consider. So we have to multiply there. How much we are going to get ma? So 13,49,740 is equal to the present value of minimum lease rental. In order to get the so now this present value of minimum lease rental is substantially equal to the fair market value of asset or not, we have to check. So what is the present value of minimum lease rental percentage on the fair market value of asset ma? So easy ma, 13,49,740 divided by how much ma? What is the fair market value of asset? 15 lakhs into 100, that is equal to how much percentage we are going to get? So we are going to get 89.98 is more than 75 percentage. For that reason, so from the first conclusion we have done, so it is substantially equal to the present value of minimum lease rentals. For that reason, this is a which type of lease ma? Financial lease. And next, what are the things they are asking ma? Next one, ascertain the unearned finance income. How we will get the unearned finance income ma? Lease rentals plus guaranteed residual value plus unguaranteed. It is called as what ma? Gross investment. Yes or no ma? So I have show you the calculation. Previously only we have done. So this is called as gross investment. This present value is called as net investment. Differences between these two is called as what ma? Unearned finance income. So first we have to get the monthly annual rental. How we will get the annual rental ma? Simple na. So divided by what we have to do? Divided by present value of annuity factor, we will get the annual monthly rent. So annual rent. So annual rent will be on here. At last what we need to add ma? We need to add the unguaranteed value. All this value is called as what ma? Gross investment. The present value of this gross investment is equal to what ma? Net investment. Differences between these two is called as what ma? Unearned finance income. So I will explain once again. Please be very careful ma, because a very important question. Fair value of asset is equal to, what is the formula ma? Present value of minimum lease rental plus present value of unguaranteed residual value ma. You know the fair value of asset. Okay sir, 15 lakhs. Yes or no ma? Fair value of asset is equal to the 15 lakhs. Unguaranteed residual value is equal to the 2 lakhs. Yes or no? Okay. But present value we have want only unguaranteed present value. Present value means on the last year we are going to get the residual value on first year ma? Last year. What is the last year accounting factor? 0.7513. If you do like that, what we will get ma? We will get the present value of minimum lease rentals. Okay na? Sir, present value of minimum lease rental must be substantially equal na? Must be substantially equal means what we need to do ma? This percentage we have to apply on this one. So 13,49,740 divided by what ma? 15 lakhs into 100, that is equal to how much we are going to get ma? 89.98. Based on that first condition we have satisfied. This is a financial list. And next one, we are going to identify the unearned finance income. In order to get the unearned finance income, what is the requirement ma? Lease rent per annum. So how will get the lease rent per annum? So I have told you this example now. So in order to get the lease rent per annum, so we have to divide it by not the 3. We have to divide it by annuity factor. That annuity factor also they have given. What is the annuity factor ma? 2.4868. So divided by annuity factor, that is equal to how much we are going to get ma? We are going to get 5,42,761. At last we are going to add ma? We are going to add unguaranteed residual value. So this is all called as gross investment, and present value is called as net investment. So ultimately we are going to get how much ma? 3,28,339 is the unearned finance income. The most important. So this is the overall conclusion about the leasing. So till now we have completed the discussion of what are the topics ma? Accounting standards we have completed, and next totally hire purchase we have completed. Insurance claims we have completed, and then after we have completed the branch also we have completed ma. If you want the starting only, I have started with the branch. So these are the things. Now give me a 2 minutes break. I will start what ma? Partnership important points. Okay na? So say to your friends to participate in the partnership. Whatever the points required, so I will try to get only 10 marks out of 14 marks, and then whatever the MCQs part, they are going to give the 2 MCQs there, and calculation of ratios, and then there is a section called as section based one question they are going to ask, and what is the piecemeal distribution. I will discuss those points. So within half an hour, within 1 hour I will complete the partnership revision. Okay na? Based on that you can write tomorrow's exam easily. Okay na guys? Okay, give me 2 minutes more. Okay guys, going to start the partnership. Let me wait for 1 minute and someone may join, I think so. Wait a minute, ma, I will start. Okay, guy, I will mention. Okay guys, we are going to start the partnership. Sir, before partnership, can we do bills of exchange, sir, please? Sir, bills of exchange, accommodation bills, ma, that is a small concept. Within 15 minutes, we can complete. No problem. So let us start the partnership, ma. So because we are not having that time. So normally, in the case of not having the partnership deed, these are the points you need to remember. What are the points you need to remember means profit sharing ratio is equal. The profit sharing ratio is equal. There is no interest on capital, interest on drawings, salary and commission. There is a point called as interest on partners loan at the rate of how much? 6%. Or suppose in the agreement they have mentioned only 5%. How much they are going to get? 5 only. In the agreement they have mentioned 20%. How much they are going to get? 20%. In the case of silent of the partnership deed only, how much they are going to get? 6%. Okay na? So this is the MCQ they may ask like this. In the case of absence of the provisions of the partnership agreement, profits and losses should be shared equally. So it is called as absence of partnership agreement. Next one. See this one, very important MCQ. In a written agreement, among us the partners, the interest is equal to how much? 5% per annum is to be provided on the loan. Okay na? So 5% they have recorded on the partnership deed. The interest given by the partner to the firm is how much? 5% only. If they mention 20%, 20%. So if nothing is mentioned, how much? 6%. Next one, total assets of the firm is equal to how much? 1,20,000. And what is the liabilities? 60,000 outside liabilities. What is the capital? Means nothing but 1,20,000 minus 60,000. That is equal to how much? 60,000. So that is a form we have taken. So no problem, guys. So straight away, if you want to, if they have given, I will say the conclusion. What my conclusion is, what are the important points of the partnership, I will say. Please give me 1 second. See these conclusions, sir, have gone up to the previous attempts. See, particularly observe the December scenario. In the December 2023, they have given the basic sum. Okay, this is the model is continuous. But also see this scenario. In June 2024, retirement. In June 2025, admission. So admission retirement is going on June trend. When you see the December, what is the trend? Amalgamation. That means admission come retirement, death, and these are the points they are asking in the June items. So what my conclusion is, in tomorrow exam I am expecting these models. So first they will give what ma dissolution is most important. The simple concept ma dissolution I will explain now, no problem. JLP calculation, the simple calculation, and then piecemeal distribution, a theory question they may ask you. Okay na, what is this piecemeal distribution? I will say. First of all, I am going to target the 8th question ma. 8th question, 8th A or B or C, they are going to ask the 5 mark question. I am going to target that one. I am going to target that one. So then after I will come the dissolution of the partner and JLP calculation. Okay na guys. So there in the 8th question they are asking what are the cases, means first one is called as piecemeal distribution, and next in the 8th question what is the preference, means profit sharing ratio is also preference there, profit sharing ratio, and there is a concept called as one section there is there, I will explain you, no problem. In the piecemeal distribution, a theory question they may get in the tomorrow's exam. Okay now, tell me about write about the piecemeal distribution. Sir, what is the meaning of piecemeal distribution? Means in the case of dissolution, after selling the assets we are having, imagine we are having 10 lakh rupees. This 10 lakh rupees we have distribute to whom? First we have distribute to which person, and second we have distribute to which person, like that we have to see. So 10 lakhs is the total amount we have acquired. First we have distribute to the realization expenses, because the in the realization one of the person will be attended, the which person ma, the liquidator. For that liquidator what we need to do ma, we have to pay the liquidator. So nothing but realization expenses, nothing but liquidation expenses, first we have to pay it off. And next one, provisions we have to see. So provisions, actual and estimated we have to see ma. If the actual is more, deduct the amount, nothing but what ma, the estimated the provision is not sufficient, once again we have to reduce from the, so add back to that amount. Okay na guys. So first one is the realization expenses, and second we have to adjust it with the provisions. So write these points in the tomorrow exam easily. And next one, we'll give the preferential creditors. We have to give to the preference. Who is the preferential creditors? So income tax or any payment made to the creditors. These are the preferential creditors. And next one what ma? Secured creditors. In the secured creditors, after selling all the secured assets, in case you are having the surplus, means it can be used for the other liability settlement. You are not having the surplus, it is a deficiency. It is called as what ma? Deficiency. In the case of deficiency, whatever the secured creditors will be treated as unsecured creditors. So what is the which concept you are going to discuss ma? Piecemeal distribution. First, whatever the available in our hands, first we have to give the realization expenses, and then we have to settle the provisions. So estimated is more means reduce. So estimated is more means what we need to do ma? Add back. And actual more means we have to reduce. So important. And next one, preferential creditors means government, related to the government taxes and etc. And then secured creditors, and then what ma? Unsecured creditors, and then partners loan, and then partners capital. So what are the 7 points ma? So please refer. First one is a realization expenses, next one is called as provisions, and next one preferential creditors, secured creditors, unsecured creditors, and next we have to give to the partners loan, and next we have to give to the partners capital. This is the dissolution. They may ask this concept in the tomorrow's examination. For how many marks ma? 4 to 5 marks. So this is the first theory question, piecemeal distribution. And second they are going to ask you, please wait a second ma, I will show you. Section 37. This is also important question ma. What the section 37 is saying, sir? So if amount due to the legal heads, non-settlement immediately. In the case of death, you will come into the picture ma. In the case of death, if you are not settling the expenses to the legal heads immediately, they will get what ma? They will get the share in the post-death profits. Post-death means after the death, they are going to get the share, or 6% of simple interest on outstanding capital, whichever is higher. The simply they are going to ask what is the section 37. What is the section 37 ma? This is what amount we have to pay to the deceased legal heirs if they are not settled immediately. They are going to pay whichever is higher of the following. What are the higher of the following ma? The post share of profits, or 6% of simple interest on outstanding capital, whichever is higher. So just remember this one. So this is the second preference. What is the first preference ma? Piecemeal distribution. What is the second preference ma? Section 37. What is the third preference sir? Profit sharing ratio. We are going to discuss now profit sharing ratio. So this profit sharing ratio is very important to start any question, admission, retirement, death, or whatever it is. So the profit sharing ratio is very important. Please stay tuned. I will discuss the dissolution and JLP calculation ma, because we may get tomorrow what ma? Dissolution or JLP only. So see these questions, these examples are sufficient for the tomorrow's exam. So I think you all know A and B are the sharing in the ratio of what ma? 3:2. C is admitted for how much share? 1/4 share. C is admitted for how much share ma? 1/4 share. Calculate the profit sharing ratio in each of the following case. Sir, here the case 1, no information was given sir. So simply they are saying this sentence and leaving it off. That means no other information is available, then the balance in the form will be shared by the old partners in the old ratio. What is the balance sir? So total share of the form, imagine 1. Imagine how much ma? 1. So 1 minus how much share belongs to the new partner ma? 1/4. So 1 minus 1/4, that is equal to how much ma? That is equal to 3/4. The 3/4 is the remaining share shared by the remaining partners in the which ratio ma? Old ratio 3:2. So how to solve this case 1? See sir, important ma, we are going to find out the new profit sharing ratio. Sir, here 3:2 is the old ratio and a new partner coming for how much ma? 1/4 share. First we have to calculate the remaining share. How we can calculate ma? 1 nothing but 1/1 minus 1/4. If you do the LCM, what we will get ma? 4. So 4 times 4 minus 1 divided by 4, that is equal to how much ma? 3/4. This remaining share will be shared by the two persons in the ratio of 3:2. Sharing means how ma? This 3/4 into 3/5. Out of this 3/4, 3/5 share we are transferring to A. Okay na? Multiplication is important ma. Easy, 3 into 3 and 4 into 5. That is equal to how much ma? 9/20. That is equal to how much ma? 9/20. And B is also getting what ma? Out of this 3/4, 2/5 share. In the which proportion ma? Old proportion, 3/5 and 2/5. So like that. Sir, out of 3/4, 3/5 we are getting means into we have to do. We are giving means minus. We are giving means what ma? Minus. So into we have to do. So 3/5, how much we are going to get ma? 9/20, 6/20. What is the C's share ma? C is getting 1/4. In order to equate the 20 in the denominator, I am going to multiply with the 5/5. How much we are going to get ma? 5/20. What is the new profit sharing ratio? 9:6:5. What is the new profit sharing ratio ma? 9:6:5. So important ma, because they are asking the profit sharing ratios. Come to the case 2. What is the case 2 saying ma? C acquired from B. So directly they are saying ma, C is acquiring this 1/4. Out of this 1/4, 3/16 is given by whom ma? A, and 1/16 is given by whom ma? B. That means A is sacrificing how much? 3/16. B is sacrificing how much? A/16. Can you find out the A's new share ma? Simple. So how we can find out the A's new share ma now? 3/5 minus 3/16. How to do the LCM sir? 16 5s are how much ma? 80. 16 5s are how much ma? 80. So this 5 out of 80, how many times will be gone? 16 times. So 16 into 3, that is equal to 48. This 16 of 80 means 5 times. 5 into 3, that is equal to how much ma? 15. So 33/80 is the new proportion. What is the sacrificing means? How much they are sacrificing? 3/16. How much they are sacrificing ma? Why we have reduced now? Here they are saying this much amount of shares they are losing. There what ma? Nothing is mentioned meet. We are thinking like what ma? So the remaining share will be shared by the old partners in a old proportion. Sir, here there is a new point. If the old ratio is same and the new ratio is same to the old partners, if the old ratio is same and new ratio is same to the old partners, the sacrificing ratio will be also same. Old and new same means sacrificing also same. Okay na. Now what is the B's ma? B is sacrificing 1 by 16. What is the new share ma? So 2 by 5 minus 1 by 16, that is equal to 27 by 80. C is getting how much ma? 1 by 4. In order to get the numerator 80, so I'm multiplying the 20 by 20, that is equal to how much ma? 20 by 80. What is the new proportion ma? 33 is to 27 is to 20. I think you have got the clear picture. Are you getting my point ma? So here directly they are saying that much share getting by C from A, that much share getting by C, getting by B from B to C. Now C is acquiring equal from A and B. Now they are not saying directly this much amount of share we are getting from A, this much amount of share we are getting from B. So they are not going to disclose directly. That means we have to find out. Equally from A and B means what ma? Out of 1 by 4, so into 1 by 2 is getting from A, out of 1 by 4 into 1 by 2 is getting from B. That means how much ma? 1 by 4 into 1 by 2, that is equal to 1 by 6. So each person is sacrificing how much? 1 by 6, 1 by 6. I think you have got the clear picture ma. So here, what is the sacrificing we have to do ma? So 3 by 4 minus what ma? 1 by 4 into 1 by 2, that is equal to 1 by 8. 1 by 8 ma. 1 by 4 into 1 by 2, that is equal to how much ma? 1 by 8, not the 1 by 6. So if you reduce that one, we'll get the clarity. So like this we have to do the profit sharing ratio. We have completed this one. Now I am going to discuss what ma. So these are the profit sharing ratio. Out of this one we are going to get. And next they may ask you what ma? Sacrificing ratio also. So how to calculate the sacrificing ratio ma? Old ratio minus new ratio, not the new ratio minus old ratio. Because why sir? Old ratio will be more and new ratio will be less. So if you do like that, what we will get ma? Sacrificing ratio. You know how to do all this. So I'm not going to explain the further the profit sharing ratio calculation. So next one, I think you know the how the revaluation process. So what is the revaluation ma? Increase in asset means what we are going to write. So asset account debited to revaluation. Remember these points. If you do the profit sharing ratio, revaluation, goodwill entry and capitals entry, and easily we'll get the 10 marks, 10 out of 14 marks. So increase in the asset means, so directly I'm going to explain the account one, no problem. So see this one, revaluation, asset increases means credit side, asset decreases means debit side. So in the same case, liability increases means debit side, liability decreases means what ma? Credit side, unrecorded asset on the increase side and unrecorded liability on the increase side. Okay, easy ma. So what is the entry for the revaluation? If the asset increases means asset will be debited na. So asset account debited to revaluation. For that reason by asset. Decreases means what ma? Revaluation account debited to asset. For that reason on the which side ma? Debit side. Whatever the balance will be shared by the old partners in the old profit sharing ratio. This is called as what ma? Revaluation asset. If you want to see the memorandum revaluation asset, how we can do ma? The same process we will continue whatever the revaluation in the revaluation account, but next then after what will give a counter effect. So here asset means will be transferred to the credit side, here asset will be transferred to the debit side. So opposite side we will counter effect, and whatever the balance is there now will be transferred to new partners in the new ratio. This is called as what ma? This is called as a memorandum revaluation account. So at which point of time we have to do the memorandum revaluation account ma? In the case of there is no change in book value, they will give in the question, there is no change in value of assets and value of liabilities. If they mention that point, you have to do what ma? Memorandum revaluation account. Otherwise we have to do the revaluation account. This is the first step normally admission, retirement or any case. Next one, whatever the reserves will be there now, that reserves will be transferred to what ma? Will be reduces. What is the reserve balance ma? Reserve balance is normally on the credit balance. If it is decreases, what we need to do? Debit. What is the entry ma? Reserves account debited to which partners we have to give ma? We have to give the old partners in the old profit sharing ratio, because those reserves is nothing but what ma? Accumulated profits. They are keeping aside as a reserve. If these profits are not distributed to the existing partners, what will be happen ma? That profits will be enjoyed by the new partner also. For that reason, reserve will having the credit balance. So in order to decrease the reserve, we are going to transfer to what ma? Debit side. Anything we have given to the partners will be credited, yes or no ma? Balance. So what is the entry ma? Reserve account debited to the old partners. Okay na? If there is no change in the reserve value means what we need to do? We need to raise and written off all the partners account debited to general reserve account. So generally this entry is sufficient. If reserves value is not changing, they have mentioning, means what we need to do, we need to pass this extra entry also. I think you all know. Next one, I'm not going to discuss in detail. Next one, goodwill come into the picture. The goodwill is the most important point. So purchaser goodwill. So we are having the methods of the goodwill. So average profits method, super profit method, capitalization method, and anti method. So I'm going to discuss these 3 points easily. So average profit. So what is the formula for the average profit? Average profit into number of years of purchase. Average profits are 2 types. Simple average or weighted average. If it is simple average, sum of profit divided by number of years. Weighted average means what? Sum of weighted profits divided by sum of weights. So how to do, sir? If it is the simple average will be, this method will be used in the case of profits fluctuation. If the profit is either increasing trend or decreasing trend, we have to use what? Weighted average method. But important, if sometimes the profit is having the abnormal losses. What is the meaning of abnormal loss? Abnormal loss should not be debited to the P&L account. So what we need to do, already we have debited, means already we have reduced, for that reason add back. Abnormal gain means we should not transfer to the P&L account credit side. We already transferred, for that reason income increases, we have to reduce it from the profit. Are you getting the point? In the case of income from sale of asset, sale of fixed asset, it should not be recorded in the P&L account credit side. Instead of recording on the P&L account credit side, our income will be increases. What we need to do, reduce from the net profit. Loss means, so we have to add back. Okay, like abnormal loss, only the loss, abnormal income, only the income. So income we should not credited, so we have to reduce. Expenditure we should not debited, we have to add back, because of expenditure the profit will be decreases, for that reason we have to add. Because of income the profit will be increases, for that reason we have to reduce. So see this question with very useful. So simple average means what you will do, you will add back all this divided by 4, you will get the what? Simple average into number of years of purchase. I'm not going to explain. Weighted average means we have to take like that, year profits, weights, and weighted profits. So year means whatever the year, and profits means whatever the profit they have. For the latest year I will give the more weight, because if you take the example of the recent South Africa match of the Virat Kohli, in the previous match he has made the century. His most chances have it to made the century only. In previous series he has made the duckouts. Okay, it is less chances to make the duckout. Okay, because the farm player having the greatest opportunities. For that reason, the latest year we have to give the more weights, and the older years we have to give the less weights. For that reason 4, 3, 2, 1 like that I have given. We have to multiply with the weights and the profits. What we will get? Weighted profit. The total of weighted profits divided by total weight will get what? Weighted average. So into number of years of purchase, that is equal to how much? 8 lakhs. Are you getting the point? So because this all the methods will come into the picture in tomorrow's. Okay, for suppose if you do these steps also, they will give how much? 10 marks nearly. Okay, next, super profits, a very very important. Based on that we are having the MCQs, we can solve there. So goodwill is equal to the super profit into number of years of purchase. There average profit into number of years of purchase. What is the meaning of super profit, sir? Whatever the expected profit we have expected, we are getting more profit. We are getting what? More. Normally how you are going to expect? I am going to expect certain amount of profit is nothing but capital employed into NRR. What is the meaning of this one? So simple. Capital employed means how I have kept this much amount of capital. Okay, on that I am expecting this much amount of return. This is a normal profit. But average profit, what is the meaning of average profit? Now currently I am getting this much of profits, so it is more or less. If it is more means it is called as what? Super profit. It is more means it is called as what? Super. This is maybe average or weighted profits we have seen. So what is the meaning of normal profit? This much amount of capital we have invested, on this much amount of return we are expecting. So NRR means normal rate of return. Okay, if you do the outside business, this much amount of profit is they are going to expect this much. That more than expected profit, it is called as what? Super profit. Into we have to do. How will get the capital employed? Nothing but capital employed is nothing but so add back all the capitals. Nothing but, or there is a formula, assets minus outside liabilities. Yes or no? So our sum of the partner's capital, we will get the capital employed. Okay, so this is called as what? Super profits method formula. When coming to the capitalization methods are simple. So here when coming to the capitalization, here we should not multiply with the number of years of purchase. Okay na? So actual capital employed is this much. How we can find out the actual capital employed? Assets minus outside liabilities or sum of partners capital. Okay na? So normally we are going to get this much amount of profits. Normally we are getting how much amount of profits So average profits we are going to get divided by NRR. What is the meaning of NRR For this much return of this much profit, how much amount of capital I need to put? So the simple previous one, what we have expected capital employed into NRR is equal to how much normal profit is equal to the normal expected profit. Now the same formula we are writing like this. Previously normal profit is equal to how much capital employed into NRR. Now we don't know the capital employed. Okay na? We have to identify how much amount of capital employed we need to get for the this much amount of net profit and this much amount of NRR. Okay na? This much amount of capital we need to put, but we are putting a less amount of capital. So putting the less amount of capital, we are getting a more amount of profit. So for that reason, average profit divided by NRR. So this much amount of capital should be there in order to get the this much amount of profit. So minus actual capital employed. So we are going to get what capitalization method. Here we should not multiply with the number of years of purchase. Okay na guys? So annuity method they are not going to ask. So average profits we will do. So abnormal gain there, what you will do abnormal gain means we should reduce. For that reason 40,000 minus 5,000, that is equal to how much 35,000. Here there is abnormal loss. What you are going to do so you are not you are already debited. For the reason profit decreases, we have to add back. So for the reason we are going to add. What is your actual profits? 35,000 60,000 divided by 2 into number of years of purchase 1 year into 1, that is equal to how much 47,500. I think you have got the clear picture about this one. Next one, super profits. Now only we have discussed. A firm employs how much 2 lakhs is a capital. So this much is the capital. On this normally how much rate we are going to get 10%. That means we are expecting only 20,000, but you have got the average profits how much 30,000. What is the difference 10,000. 10,000 into 3, that is equal to how much 30,000 is the profit. So okay na guys? So this much only we are expecting, but we are getting a this much. So 30,000. 10,000 into 3, that is equal to 10,000. So these are like this. So there is a formula called as what there is also the super profits, average profit. So capitalization method, what we need to do capitalization method only they are asking. So capital employed of the firm is equal to 8 lakhs. The reasonable rate of return is equal to 15. What is the profits we are going to get? 12 lakhs. So now what we need to do 12 lakhs divided by 15%. For this much amount of income we need to put 80 lakhs, but how much you have put 8 lakhs only. That means remaining all the profits you are getting because of a good name, because of your good name. So straight away I am going to start so there is a different types of calculations. I think I have told you all the problems, no problem. Straight away I am going to discuss the dissolution and JLP calculations. So first we can discuss the JLP calculation. There is a one sum we may get for 5 marks. We may get from 5 marks so this is also one of the separate one. So for 5 marks I have told you the piecemeal distribution, profit sharing ratio, section 37, and there is another for 5 marks possibility is called as what joint life policy. So joint life policy is nothing but what means there will be one partnership form. There will be one partnership form. We will take a joint life LIC. From the LIC we are taking the life insurance premium for all the partners for the partnership form. If any one partner also died means we are going to get the policy amount. We have to pay every year what premium amount every year. So we will get the policy amount at the end of the death of a partner. So what are the two transactions will be there payment of premium every year and getting the policy value at the time of death of the partner. So see, understand this one. Year 1 the how much amount of premium we need to pay? 1 lakh. So every year we need to pay the 1 lakh, 1 lakh, 1 lakh. What is the meaning of surrender value, sir? If you surrender in the first year itself, okay na, we don't want, sir, we are not going to wait up to the death of the partner. We will get 0. You are going to get how much more? 0. You are going to surrender in the next year 15,000, next year 40,000, next year 60,000. But what is the meaning of sum assured, sir? Sum assured means nothing but policy value. If suddenly if the partner died in the first year itself, how much you are going to get? 20 lakhs. Second year also 20, third year also 20, fourth year also 20. So this is a sum assured. So here the treatment methods are different for the JLP calculation. What are the methods, ma? Method number 1, when JLP is treated as expenses. Method number 2, when JLP's surrender value is treated as asset. So forget about the method number 3. They are not going to ask in the examination from the method number 3. So expenses, normal expenses, they are treating the JLP as a normal expense. What are the entry we are going to record, ma? Joint life insurance premium is an expenses to bank account. The expenditure will be transferred to which account, ma? P&L account. So P&L account debited to joint life insurance premium. So every year we are going to get this one only. So if the policy surrender, how much we are going to get, ma? 15,000, the remaining value. So JLP account debited to partners capital, how much, ma? 15 lakh and 15 lakhs. So JLP value will be decreases. If the policy surrender suddenly in the first year, if the policy surrenders suddenly in the next year, okay, the next method will come into the picture. What is the next method, ma? When JLP surrender value is treated as what, ma? Asset. Please remember, very much careful, ma. At the time of payment of premium, what is the entry, ma? Joint life insurance premium account debited to bank, that is equal to how much, ma? 1 lakh and 1 lakh. So what is the surrender value in the first year, ma? The surrender value of the first year is equal to how much? 0, na? So that means there is no asset. For that reason, all the amount we are going to transfer to the joint P&L account. P&L account debited to joint life insurance premium. So next year also same, na? Joint life insurance premium account debited to bank account 1 lakh and 1 lakh. What is the second year surrender value, ma? If you see the second year surrender value is equal to 15, 40 and 60. Remember this one, 15, 40 and 60. So 15 is the asset. Okay, surrender value we are going to treat it as what, ma? Asset, because as per AS 13, accounting for investments, cost or market value, whichever is lower. What is the market value, ma? 15. What is our cost? The cost is 1 lakh. So whichever is lower means how much, ma? 15. So 15,000 we are going to treat it as asset, and the remaining value only will be transferred to the P&L account. Now normally in the second year, what is our asset value, ma? 15. And again, how much we have paid in the third year, ma? 1 lakh. And again, what is your total value? You are having the 1,15,000 or you are having the 1,50,000. How much they are going to maintain as a surrender value, ma? 40,000. 1,15,000 or 40,000. Whichever is lower means which value, ma? 40,000. The remaining value we are going to transfer to the P&L accounts. So try to see one time, ma. So here you have paid totally 1 lakh as an expenses. So cost or market value means what, ma? What is your cost? 1 lakh. What is your market value? 15,000. Whichever is lower means which value, ma? 15,000 we have to record in the balance sheet. The remaining value 85,000 we are going to transfer to the P&L account. When coming to the next year, so your cost has increased to 1 lakh. So your total cost is how much, ma? Previous year 15,000 and current year 1 lakh. What is your total cost? 1,15,000. What is your market value, ma? 40,000. So the remaining value only we have to transfer to the P&L account, and now the 40,000 will be there. And again the next year, how much you are going to pay, ma? 1 lakh. What is your total cost of the asset, ma? 1,40,000. What is your surrender value? 60,000. So the balance only will be transferred to the which one, ma? Will be transferred to the P&L account. Now at the time of receive, how much amount we are going to receive, ma? Even though we are receiving the 20 lakhs already, how much asset we are having, ma? 60,000. The balance only 19,40,000 only we are going to distribute. Because why, sir? The JLP is a liability side will be there, and here the JLP on the asset side will be there. On the asset side, how much, ma? 40,000. On the liability side, how much, ma? 20 lakhs. So net of how much we are going to distribute? 19,40,000 only we are going to distribute. So 60,000 will be there, ma, last year. So this is the complete discussion about the JLP calculation. I think you got the clear picture about the JLP. They may ask you in the very rare cases, no problem. And now we are going to discuss especially with respect to the dissolution. So dissolution is very, very important, ma. I'm not going to explain the third method, you will get the confusion. Dissolution of partnership form. Sir, I am expecting in tomorrow we are going to get the dissolution of partnership form, because I have explained you the scenario of the previous trend. Simple, ma, simple. I am not going to explain all the things. In the when coming to the dissolution, we are going to open 3 accounts ma. Realization account, partners capital account, and bank account. Okay na? So realization account, how we are going to prepare the realization account? Try to see this one. If you prepare this account also sufficient for tomorrow's exam, we'll get 10 marks. Okay na? So realization account. So what is the meaning of realization? Means we are going to reduce all the balances, because the dissolution means the form will be there or will not be there. There is no, the form will not be there. For that reason, we are going to reduce all the asset values and all the liabilities values. Okay now asset reduces means asset having which balance debit balance, it reduces means transfer to which side? Credit side. The entry is called as realization account debited to assets. And what are the liabilities liability means nothing but liabilities account debited to realization. So the liabilities will be transferred to the credit side and the assets will be transferred to the debit side. So we have to transfer all the assets in the current assets except what loan to the partners and cash. Cash or bank we should not transfer Cash or bank we need to transfer, we should not transfer. We should not transfer. Remaining all the assets we can transfer except the cash or bank and loan to the partner. When coming to the sorry guys, when coming to the liabilities also, reserves we can transfer, provisions for bad debts also we can transfer, but except what loan from the partners and partners capital. So while transferring to the liabilities, we should not transfer what we should not transfer the capitals and loan to the partner. But when coming to what loan from the partner, when coming to the assets, we should not transfer what cash and bank, and we should not transfer the loan to the partner. And next one, whatever the payment of liabilities will be there so all the items are come and sit in the realization account. If you payment of liabilities, what is the entry you are going to write liability account debited to what liability account debited to bank account. But here liabilities are there in which account? Liabilities are there in the realization account. Instead of liability, what you need to write liabilities account debited to realization. So to bank account, if you are paying any liabilities, if you are paying any liabilities to bank account, for payment of dissolution expenses. Payment of dissolution expenses, what we need to write to bank account. If anything we have sold in the market, you are realizing the asset at that point of time, how much we have, what we need to write by bank account. Normally what is the entry will come into the picture cash or bank account debited to asset. Already asset available in the which account realization account. For that reason cash or bank account debited to realization on the credit side. Simple, all the assets will be on the debit side. So they're like a branch. All the assets will be on the debit side, all the liabilities will be on the credit side. If anything paid to the liability, to bank. If anything realized from the assets, by bank. Okay now guys. So if the partner taken away the asset, by partner's capital, are you getting the partner? If for suppose, if any liability, for the liability you are setting off with the asset, for the liability you are setting off the asset means there is no entry. There is no entry. Next, whatever the balance available here will be transferred to which account partner's capital account. So loss or gain. So here 2 means there by, here by means there 2. The note points, if the question is silent about the sale of assets, so assume that the asset is not sold, the value is 0. Asset is not sold and its value is 0. If the acquisition is, the question is silent about the liability, we are going to treat it as liability settlement. We are going to treat it as what liability is settled. Dissolution expenses will be paid by whom? Form itself. If any creditor accepted the asset, so if any creditor accepted the asset in full settlement, so of its claim, then no entry will be required. The important point is this one. Important. Okay na guys. Next one, the partner's wife loan will not be treated as outside liability. Employee provident fund is a liability. If any unrecorded asset is there unrecorded asset is there means we are going to record as bank account debited to realization, because asset account debited to, because we need to sell we are going to sell directly. Bank account debited to realization. Unrecorded liability means realization account debited to bank. So important, these points also so much important. So remember these points before doing the dissolution. So assets will be on the which side debit side, and liabilities will be on the which side credit side. While transferring the assets, what we should not transfer, we should not transfer the bank balance, and we should not transfer the loan to partner. And while transferring the liabilities, what we should not transfer, we should not transfer the partner's capital account, and we should not transfer the loan from capital. So if you are paying the liabilities means to bank, if you are realizing the assets means by bank. That's all. So these are the 2 most important points. So piecemeal distribution. I'm going to solve one question from the partnership. in order to get the more clarity of the dissolution. Okay, now the remaining points are sufficient for the partnership point of view. You no need to suffer. Okay, na? So I'm going to start. Please give me a second. Okay, guys. 200. I think it is near to 248. Please wait 10 minutes, ma. You will get 14 marks in tomorrow's exam. Because I am trusting it will get in tomorrow's. Getting. Wait, sir. See this question. Directly, this question in this model only they are going to ask. So A, B and C are the equal partners of the firm. Their balance sheet as on 31st March 2023 was as follows. So liabilities on assets on the left hand side and right hand side. So see this one, the firm was dissolved, all the partners was declared insolvent. Here all the partners are insolvent, but see this trend ma. Private, I think you all know, when coming to the partners point of view, partnership point of view, limited liability, unlimited liability, it is unlimited liability. So it is a unlimited liability. So in the case of unlimited liability, partners personal estate is also liable. Yes or no, ma? So 2,50,000 is having the assets, and here what is the liabilities, ma? 2,50,000. That means no amount we can realize from the partner A, na? We cannot realize. We are not going to realize amount from the partner A. If you see the amount, how much, ma? Here 2 lakhs, and here how much, ma? 1,80,000. His in this situation we can realize still how much amount from the partner B, ma? We can realize 20,000, because it profits are more or less, ma? It profits are more. 20,000 still we can realize. 20,000 still we can realize. And if you see here assets is equal to 2,30,000 and liabilities is equal to how much, ma? 2,50,000. That means we cannot recover from him also. Yes or no, ma? We cannot recover from him also. Please remember, what are the accounts you need to prepare? So if you are seeing the realization account, means that is a dissolution, ma. So realization account, bank account and creditors account. So here separately they are asking the creditors, na. For that reason we should not transfer creditors into the realization account. If they are not asking separately, means we can transfer to the realization account directly. So what is the most important point, ma? If separately the creditor account is asking, means we should not transfer the creditor account to the realization account. If this one not given, means we can transfer the creditor amount to the realization account, partners capital account and deficiency account. Okay na, guys? So see the realization account, ma. So whatever the billing they are going to realize at, see, ma, book dates at a 40% less, the amounts they are saying the realization. So building 1,60,000, stock 1 lakh, and machinery 2 lakhs, furniture and fit is 40,000. Realization expense is how much, ma? 10,000. All the things are realizing or not realizing? Realizing. So realizing, the asset realizing means which side we need to record, ma? We need to record all these values at a debit side. Yes or no? Sorry, was credit side. All these values at a credit side. So which side, ma? By bank we have to record all these values. So these are the values we are going to realize. The total is equal to how much, ma? 6,10,000. The assets will be transferred to which side? Debit side. And liabilities we need to transfer to which side, ma? Credit side. But we should not transfer the loans and we should not transfer the capitals. We can transfer this one, but in this situation we should not transfer, because separate account they are showing. Because separate account they are showing. Are you getting the point? That means which items we need to transfer? We need to transfer here the capital account we should not disturb, and cash at bank also we should not disturb. So we have to transfer all these assets at which side, ma? Debit side. All these realized values at a credit side. We have done that thing. That's all. and we have paid what ma, we have paid the realization expenses. So realization expenses paid means which side we have to record ma, debit side. Whatever the balance available will be transferred to the partner's capital account. So on the debit side or credit side ma, on the debit side. I think you understand the clear picture. Is there anything else? No. And coming to the single entry, you know, by bank means what ma, in the bank account which side? In the bank account debit side, first we have to write the opening balance. There is a realization expenses, okay na? And next we are going to recover how much ma, 20,000 from the partner B. So remember, so whatever the balance we are going to recognize it as the in the bank account, the balance should not be there ma. Remember the point, in the bank account the balance should be there or should not be there ma? Should not be there. We are going to think it as what ma, we are going to settle the creditors. We are going to settle the creditors. In the creditor accounts, opening balance will be on the credit side. So if you settle, whatever the amount 3,70,000 will be transferred to which account ma, deficiency account. Will be transferred to which account ma, deficiency account. So please remember ma, once again, opening balance will get 10,000 there itself, and then realization expenses we have paid na. So realization expenses we have paid means what ma, there here payment. So payments will be recorded on the which side ma, credit side 10,000, and then after you realize totally how much ma, 6,10,000 in the bank account debit side, and also we have realized 20,000 from the partner, yes or no ma? So here because his personal estate is also liable, for that reason 20,000 I am getting from this partner. The balance amount we are going to treat it as what ma, settlement of the creditors. And partner's capital account, so A is showing a favorable and C is showing the favorable, but B is showing unfavorable, yes or no ma? If you see the account you can get to know. So it is a favorable, so A favorable and C favorable and B is getting a unfavorable. So debit, credit, credit, okay na guys. And A is also having the loan, we have to give na. So in the A we have to write the loan also, and again they are getting a loss na. So 2,40,000, 2,40,000, 2,40,000 when the realization account, and the balance, and this partner is giving how much ma, 20,000. So what is the entry ma, cash or bank account debited to partner's capital 20,000. The remaining balance will be transferred to the deficiency account. The deficiency account will also be tally. Are you getting the point? Sir, most important, I am going to expert this model in the tomorrow's class. Once again, go back and forward. You can see this. What ma, dissolution point. Okay na guys. So till now I have discussed. I am stopping to here. So whatever the missed out topics, please go through there. I am not having the strength also. Bills of exchange ma. So please focus on the bills of exchange, only the accommodation bills, okay na? Single entry you can solve, no problem. Single entry you can solve ma. Most of the times I have come into the revision from the single entry. We're having the two methods ma. What are the two methods means? Capital conversion method and financial statements method. So capital conversion method we have to use in the case of only if they ask only the P&L account means, so straight away keep the important point. What is the important point ma? Capital conversion method. If they're asking about the P&L account and the balance sheet, if they're asking about the P&L account and the balance sheet means what we need to do ma? So we need to do the full-fledged sum. So remember the accounts and focus on things. So NPO, most probably they may not ask the NPO, okay na? So please go through these topics ma, once again, and I am lefting off of BRS and rectification of errors also. If the time permit, watch then tomorrow's class. Thank you. So this much time, still how many we have completed? The 11 hours 30 minutes. So 11:30 is happening. So please cover this bills of exchange, BRS. Okay, I will say the bills of exchange. Bills of exchange, we have to see the, what you need to see means nothing but accommodation bills. I will try to explain the accommodation bill once again. Okay guys, you try to, okay, if you open the marathon ma, first I have discussed the bills of exchange ma. Go to the marathon single entry. So refer these two questions. Refer to these two questions before going to the examination is sufficient. But even though if I explain, I cannot explain like that. Okay na guys. So thank you. Have a nice day. thank you for your most valuable comments, and thank you for the participation, and thank you for the trusting me, ma. So sorry, but I am going to leaving out the single entry because I have explained in so many times. So thank you, have a nice day, all the very best for your examination, be confident. So please refer the MCQs from the MCQs video. We're having the 4 hours, so if you keep the 2.5 speed, 2x speed, or nowadays the 3x speed also getting into the picture, so please opt the 3x speed and listen the MCQs more fastly. You will get 30 out of 30 marks from those MCQs. From the partnership, most probably I have covered. So this is my conclusion. Okay, I will provide the timestamps, ma. Okay, thank you, have a nice day, all the very best for your examination. So congratulations in advance. Remember, Bhanu, I have uploaded the revision series, marathon series, but it has taken a late time due to the unavoidable situations which I am having. So for next time, I am not going to repeat once again. So suggest your seniors regarding to the accounts, and from the next attempt I am coming up with the corporate accounts also. In this attempt I am not having the time also. So thank you, signing off, bye bye, all the very best, bye.